Okay, we'll start. Yesterday, I gave one question for homework. So, which is in page number 61, that is related to 9 subsection 4. And we'll quickly see that. So, look into the question. A promoter has procured following goods and services for construction of a residential real estate project during a financial year. So, total a lot of inputs, input services, even capital goods is also there. And it is given whether it is received from a registered person or unregistered person. Now see the question. Compute GST payable under 9.3 and 9.4. So if there is anything in 9.3 here on that and 9.4 in the following cases. First situation is manpower supply is received from a registered person. So we will see that situation. What if manpower supply is from a registered person? That is the situation number 1. Now what is step 1? First you need to check capital goods. Capital goods, only one capital goods is given in the question, that is concrete mixer. Is that concrete mixer purchased from a registered person or unregistered person? Unregistered person. So we need to pay GST under RCM at the rate of 12%. So 40 lakhs into 12%, that is 4,80,000, that is step 1. Then step 2. Step 2 is what? Cement. Cement always should be purchased from a registered person. If cement is purchased from unregistered person, yes, it is purchased from unregistered person. So on that 15 lakhs, we need to pay GST at the rate of 28% under RCM. That is step 2. So step 2, GST payable under RCM with respect to cement, 15 lakhs into 28%, 4,20,000. Now step 3, other inputs and input services from unregistered person. What is the other inputs and input service from unregistered person? Only one, that is flooring tiles, correct? Rest and all is from registered person. And sir, what about electricity and FSI? Don't take electricity and FSI, because electricity and FSI needs to be excluded. Electricity need not be from a registered person. FSI anyhow it is covered under 9.3, so that should not be taken. So in the remaining, if you see, only flooring tiles is from an unregistered person. What is the value of that flooring tiles? 10 lakhs. So numerator 10 lakhs. Then denominator. Denominator will be total inputs and input services. So you see the total of this. Don't take concrete mixer. Don't take capital goods. Except capital goods, you see the total of this. What is the total of this? 120 lakhs. Now what is the numerator? 10 lakhs. Denominator 120 lakhs. 10 divided by 120. What is the percentage? 10 divided by 120, 8.33%. That does not exceed 20%. So which means we have purchased from registered person less than or equals to 20%. We don't have to pay any GST under RCM on that portion. So only 4,80,000 plus 4,20,000. So that comes to, so 9 lakhs is the only GST payable under 9 subsection 4. Then what is the GST payable under 9.3? There is only one inward supply which is covered under 9.3. What is that inward supply? FSI. So that FSI is from a unregistered person. Of course, FSI always is from an unregistered person, and we need to pay GST under RCM 9 subsection 3. So 5 lakhs into 18%. What is 5 lakhs into 18%? That is 90,000. That will be taken as the GST payable under RCM 9 subsection 3. So this is how you need to arrive. Just stick on to the steps. Easily you will be able to get the answer. So once again, you try at your end, later on you will understand. Then next one. Suppose if the manpower supply is from an unregistered person, what if this is no? That is second situation. Manpower supply service is received from an unregistered person. Then what we need to do in that case? First, we need to see step 1, no change. Capital goods purchased from unregistered person. So we need to pay GST under RCM. So step 1, no change, 4,80,000. Step 2 also no change. Cement we have purchased from unregistered person. So on cement we need to pay GST under RCM. So that is also no change. 15 lakhs into 28%, 4,20,000. Whereas other inputs and input services. Now what are the other inputs and input service from unregistered person? In the list, manpower supply service also gets added. because manpower supply is now from a unregistered person. So 10 plus 20. What is 10 plus 20? 30 divided by, what is the denominator? 120 lakhs. So 30 divided by 120 lakhs. So that comes to 25%, which is more than 20%. So what is that excess? 5%. On that 5%, so we need to pay GST under RCM. What is that 5% of what? 120 lakhs. 120 lakhs into 5%, because total 25% is of 120 lakhs, means that 5% is also of 120 lakhs. So 120 lakhs into 5%, how much that comes to? 6 lakhs. On that 6 lakhs, we need to take 18%, 1 lakh 8,000. So step 1, step 2 same. In step 3, we have got the excess amount. So that is beyond 20%. On the difference, we need to pay GST at the rate of 18%. So that is 1 lakh 8,000. So 10 lakh 8,000 will be the GST payable under RCM 9 subsection 4. Whereas 9 subsection 3, same. TDR, FSI and long term lease, that will be 5 lakhs into 18%, 90,000. Hope you got the clarity. So please try this question once again today evening. So hardly it will take 10 minutes time for you. Try this once again without seeing the answer. Just do the calculation. Okay. Then moving on to yesterday's leftover discussion, that is value of supply. In that value of supply, we saw around 8 questions. Look into question number 9, which is in page number 84. Question number 9, which is in page 84. XYZ Limited, XYZ Private Limited provided the following particulars relating to goods sold by it to ABC Private Limited. List price of the goods exclusive of taxes and discounts. You know what is exclusive means? Exclusive does not mean excluding. Exclusive means before. Exclusive means before. Excluding means only excluding. Exclusive means the meaning of that statement is before. Before tax and before discount. That is the meaning of that. Okay. Exclusive means before tax, before discount. Okay. Now, so the given price is before tax and before discount. Tax levied by municipal authority on sale of such goods. So what is the treatment of this? So as per provision, you should tell first. 15(2)(a), taxes, duties and cess by whatever name called other than GST. So 15(2)(a), to be included or to be excluded? To be included as per provision. What they have done in the given price? What they have done in the given price? It is not included. It is before tax, correct? So therefore, what is the treatment? We need to add. So remember 4 points, 4 principles you need to remember. So what are those 4 principles? First you need to check as per provision. As per provision, what we need to do. As per provision, what we need to do. And in the given price, what they have done. In the given price, what they have done. Based on that, you will know what is the treatment. Okay. First you need to see as per provision what it should be, whether it should be included or it should be excluded, like that. So say as per provision it is to be included. As per provision it is to be included. In the given price it is already included. In the given price it is already included. So what is the treatment? As per provision it is to be included. In the given price it is already included. So what you should do? Don't do anything. Keep quiet. Okay. Do nothing and eat 5 star. So don't do anything. Ignore. You understood? Then suppose for example packing charges. Packing charges to be included. In the given price it is already included. So don't do anything. Just leave it. Okay. Then next. As per provision it is to be included. As per provision it is to be included. In the given price it is not included. Okay. So what you will do? In the given price not included. So therefore you will add. That is this example, taxes. Taxes other than GST to be included. but in the given price it is not included. So we need to add. Then next one, suppose if an amount is to be excluded, example subsidy from CGRSG is to be excluded, and the given price it is already excluded. In the given price it is already excluded. What will you do? Ignore, do nothing. Then next, suppose if an amount is to be excluded, example discount pa, an amount is to be excluded, example discount, and in the given price it is not excluded, means the given price is before discount, again this question only. So not excluded, then what you need to do? Deduct. You need to deduct. Can you remember these 4 principles? So what is the first principle? An amount is to be included. In the given price it is already included, so ignore. An amount is to be included. In the given price it is not included, so what we need to do? We need to add. An amount is to be excluded. In the given price it is already excluded, so therefore ignore. An amount is to be excluded. In the given price it is not excluded, so what we need to do? We need to deduct. Is it clear? So that is the treatment to be adopted in this case. Next, see here, tax levied by municipal authority on sale of such goods, as per 15(2)(a) it is to be included, and in the given price it is not included because it is exclusive of taxes. So therefore we need to add, that is 6,000. Understood the treatment of 6,000? Then next, packing charges. Packing charges not included in the list price above. So packing charges, what is your treatment? 15(2)(c). 15(2)(c). Any expenditure incurred by the supplier and charged to recipient, 15(2)(c). It is to be included. And what happened in the given price? Not included. So add. So 6,000 also we need to add. 2,500 also we need to add. Okay. Then next, subsidy received from a NGO directly linked to the price, including the list price above. Now, subsidy from NGO directly linked to the price. What is the treatment? 15(2)(e). It is to be included. To be included. First provision. First provision. Then what they did in the given price. Then only treatment. 3-step approach. While writing note also you should write like that. So as per this one, so section, it is to be included. In the given price it is not included. Therefore we need to add it. So like that you need to write even note also. You understood? While interpreting also the same way you interpret. So don't tell the treatment first, because if you tell the treatment first, you don't know what to write as the note there. Okay. So first, as per provision. As per provision, what we need to do? To be included. What they have done in the given price? So included in the list price above, which means whether the price is after considering subsidy or without considering the subsidy. No, without considering the subsidy. Subsidy is an income. If you consider, it will be reduced. Where is it given as after considering subsidy? See the point there. So nowhere in the note it is given after considering subsidy. You understood? Nowhere it is given as after considering subsidy. Ayya, subsidy is an income. When you consider it, you will reduce the price. So you have not considered. How you know that, sir, it is not considered? Included in the list price. Means if you consider, we would have reduced. That's the assumption we have taken. X be the original price minus subsidy is the given price. Do you remember that? X is the original price minus subsidy is the given price. Whether they have minus any subsidy, no, means it is included in the list price like that they have given. Now again from the beginning. So as per provision it is to be included or to be excluded? To be included. In the given price it is already included. Therefore ignore. Then next, paid to one of the vendors by ABC Private Limited in relation to service provided by the vendor to XYZ Private Limited not included in the list price above. Again, paid to one of its vendors by ABC Private Limited. Actually, who is the supplier? XYZ. Who is the recipient? ABC. Who should pay? XYZ. But who paid? ABC. So what is this? Recipient incurring expenditure on behalf of supplier. So that will be 15(2)(b). 15(2)(b). So it is to be included in the value, and in the given price it is not included. So what we need to do? Add. Then next, XYZ Private Limited offers 2% turnover discount on the list price after reviewing the performance of ABC Limited. The discount was not known at the time of supply. Is it pre-supply discount or post-supply discount? Post-supply discount, super. And whether terms are agreed before or at the time of supply or not agreed? Not agreed. So is this discount allowed as a deduction? No. So this discount is not allowed as deduction. Why not allowed as deduction? Because the discount was not known at the time of supply. Then ABC Private Limited delayed the payment and paid 5,000 rupees including interest, including GST, 18% as interest to XYZ Private Limited. This is what yesterday I was referring to. Sir, we know that there is interest in the question, but we don't know when there is interest received, which date interest is received. Here whether the date on which interest received is given? No. Which means that this interest should be directly added to the value. Directly you add it to the value, you don't write separately. This much is value as per invoice, this much is as per debit note, like that you don't have to separate. Yesterday we did one question. In that question I separated and I gave. So here if you see in the previous, somewhere like page number 76, so illustration 2, what I did is I have separated. Value as per tax invoice is this much, value as per debit note is this much. Like this, in this question we don't have to do. Why we don't have to do? Because we don't know the date on which the interest is received, but we know that interest is received. So what you need to do, just in a single computation itself, you add that value. So what is the interest that is collected? 5,000. But generally 5,000 rupees is inclusive of GST. So what you should do? Exclude the GST and add, because while taking value, whether GST will be included or GST will not be included? Not included. So take out the GST component in this. So 5,000 into, how will you take out the GST component? What is the rate of GST? 18%. If 18% is GST, then 18 by 118 is the GST component. So what is the remaining component? 100 by 118. 100 by 118 will be value. You understood? 100 rupees value, boss. 18 rupees is GST. Somewhere in consignment chapter you would have studied loading, how will you calculate? So therefore 100 divided by 118. So 5,000 into, do the calculation, 5,000 into 100 divided by 118. How much that comes to? 4,237. And this is what? Interest on account of delay in receipt of consideration. Therefore it should be included in the value. And in the given price, is it included? No, this is additional information, additional interest. So therefore we need to add. Now you do the calculation. 50,000 plus 6,000 plus 2,500 plus 2,000 plus 4,237. What is the total? 64,737. And you need to write the note also. So what is that note? In the table itself you write the note. So you are writing here, for example, tax levied by municipal authority. So there itself you write down taxes, duties and cess by whatever name call other than GST should be included in the value, so that you will not forget any note, and while evaluating also they will give the step marks easily. See, the final answer may not be correct. Why? Because if you make a mistake here, so then 5,000 if you add, the final answer will change. So even then you will get at least some 3-4 marks for writing the remaining portion. That's why you write the note in the table itself. You understood? Suppose if you are doing the computation, thereafter if you write the notes, what valuer will do? Okay, anyhow answer is wrong, so 1 mark we will give, or we will not give mark like that, they will not give the marks. So therefore, you write the note here itself, so they will read. At least for that they will give a step mark, so that we can get some marks even if the final answer is wrong. If the final answer is correct, so full marks we will be getting. That's why. Next. Question number 10. Shri Krishna Private Limited, a registered supplier, furnishes the following information relating to goods sold by it to Shri Balram Private Limited. Particulars: price of the goods excluding taxes and other charges mentioned at serial number 3, 5 and 6. So what is that they are telling? Excluding taxes, not exclusive of taxes. Excluding taxes means they deducted taxes. Excluding taxes, other charges mentioned in 3, 5 and 6. Okay. So now this 1 lakh you will take as the transaction value. Municipal tax, what is the provision that you need to apply? 15(2)(a). As per 15(2)(a), it is to be included. Why included? Any taxes, duties and cess by whatever name called other than GST should be included in the value. But in the given price, is it included? No, excluded. Correct. Therefore, we need to add. Then next, inspection charges. When they will do inspection? When they will do inspection? Before delivery or after delivery? Definitely before delivery only they will do inspection and deliver. So therefore, expenditure incurred before delivery and should be included or not? Yes. As per 15(2)(c), it is to be included. And in the given price, is it included already or not? Not included. How you know? Other charges mentioned at serial number 3, 5 and 6. So it's not there. It is excluded. So therefore, we need to add. Then fourth point, subsidy received from Shri Ram Trust, and this subsidy is directly linked to goods supplied. So is it directly linked to price? Yes. And from CGSD or others? Others. As per provision, what is the provision? 15(2)(e). It is to be included or to be excluded? To be included. Okay, it is to be included. And in the given price, what they have done, we don't know. Because in the heading, if you see, so 3, 5, 6 only they gave. Fourth point, we don't know. So we have to check somewhere below. They have given one note. Price of the goods is net of subsidy received. Means what? After considering subsidy. Means X is the original price minus subsidy they have reduced, and that's where we got the given price. Is it clear here? So which means while arriving at this price of 1 lakh, they would have already reduced 5,000. So therefore, as per provision, this 5,000 rupees is to be included. To be included. Again I am telling you, first provision, then what they have done in the price, then only treatment. Okay, add, less, minus, don't tell. First provision, as per provision, it is to be included, but in the given price it is not included. They have excluded it. Therefore, it is to be added. So plus 5,000. Understood how to arrive? Next one, fifth point, late fee for delayed payment inclusive of GST, and this late fees, whatever is there, will come under that interest, late fee or penalty for delay in receipt of consideration. Not only interest, even late fee, penalty also same treatment. Okay, late fee for delayed payment inclusive of GST. Shri Balram Private Limited paid the late fees. However, these charges were ultimately waived off by Shri Krishna Private Limited, and the amount was refunded to Shri Balram Private Limited during the same month. Now you tell me whether it is to be included or not. Why not included? Sir, generally interest, late fee, penalty to be included. But in this case, they are not collecting it. If they collect it and they have refunded it, they waived it off, So I told you interest is taxable. Interest, late fee or penalty for delay in receipt of consideration is taxable on what basis? Receipt basis. So in this case they are not at all receiving. So therefore first of all the inclusion shall not arise. Suppose if they have given late fee for delayed payment inclusive of GST, Shri Balram Private Limited paid the late fees. However, these charges were ultimately waived by Shri Krishna Private Limited and the amount was refunded to Balram Private Limited during next month. Instead of giving same month, if it is given as next month, means this month we will add, next month we will give credit note, and in next month liability it will get reduced. Is it clear or not? So this month we will add and next month we will give a credit note and it gets reduced in the next month. So that is the treatment. But here in this case we gave the refund this month itself, so it will not at all be included, and even in the given price it is not included. So therefore you ignore it, because see, as per provision it is not to be included. Why not to be included? Because it is not charged and it is refunded. In the given price already it is excluded, so ignore. Then next one, weightement charges. Weightement charges means any charges like usually before delivering the product they will weigh it. So how much is the weight of that product, you can check and you can buy. So that is called as weightement. For wholesale and all, what they will do is that, so they will be having big weighting machines. So in that they will weigh it and they will collect. So these machines like weigh bridge, they call it as weigh bridge. So in the weigh bridge the lorry will go and they will take the weight of that lorry, and that's how they will arrive what is the weight of the goods. So they will collect some charges, weightement charges. So this weightement charges is when before delivery of the goods. Before delivery of the goods means as per 15 2C it is to be included, and in the given price it is excluded. How you know? Sixth point is excluded. So therefore we need to add. How much? 2000 we need to add. Okay. So therefore see how much we will take. 1 lakh plus 5000 plus 2000 plus 5000 plus 2000. How much? 1 lakh 14,000. Understood here? Then next one. Question number 11. Candy Blue Limited, Mumbai, a registered supplier, is manufacturing chocolates and biscuits. It provides the following details of taxable interstate supply made by it for the month of October 2017. List price of the goods supplied interstate is 12,40,000. So this 12,40,000 will be taken as the base. Now items already adjusted in the price given in one above. Already adjusted means what are the items that is given? Subsidy. Means what? The given price 12,40,000 is after considering subsidy. Same story. Let X be the original price. From the X they reduce this 1,20,000 and 30. That's where we got the given price 12,40,000. You understood? So items already adjusted means, so X minus subsidy is the given price. Okay. Now you are taking subsidy from central government for supply of biscuits to government school. First, is it directly linked to the price? Yes. How do you know that it is directly linked to the price? That subsidy is given for supply of biscuits, so it is directly linked to the price. But it is from whom? From central government. So as per provision, that is 15 2E, it is to be included or to be excluded? To be, and in the given price it is already excluded. Therefore ignore. Very good here. Then next, subsidy from trade association for again supply of biscuits. Is it directly linked to the price? Yes. So as per 15 2E, as per provision, it is to be included, and in the given price it is excluded because they have reduced subsidy. So therefore we need to add. Good. Then next, items not adjusted in the price given in one above. Not adjusted. Okay. Not adjusted means these three are in addition to the price. These three are in addition to the price. Tax levied by municipal authority. Provision 15 2A. as per provision it is to be included, and in the given price it is not included. How you know not included? Not adjusted. So therefore we need to add. Then next, packing charges, section 15 to C, not B, C, because expenditure incurred by the supplier and charged to recipient. 15 to C, it is to be included, and in the given price it is, so therefore we need to. Then next, late fee paid by the recipient of supply for delayed payment of invoice. So late fee, okay, interest, late fee, penalty. Recipient has agreed to pay 5,000 in lump sum and no additional amount is payable by him over and above such amount, which means that 5,000 is inclusive of GST. That is what they are trying to convey. This 5,000 is inclusive of GST. Now, this late fee, interest, late fee or penalty for delay in receipt of consideration, as per 15 to D, it is to be included. In the given price, it is not included. So therefore, we need to add. Sir, how much we need to add? Can we add entire 5,000? No, we cannot add 5,000. We need to add 5,000 into 100 divided by. Sir, what is the rate of GST, sir, here? Not given. So when the rate is not given, usually it will be given in the question, but when the rate is not given, you can take 18%. So 5,000 into 100 divided by 118, how much? 4,237. So actually 4,237 should be added, but what they have done is that as the question is silent about the rate of GST, they have just added 5,000 rupees. Is it clear? So in the above solution, list price of the goods and late fee for delayed payment of invoice have been assumed to be exclusive of taxes. But listen, this is not the only answer. So there is a possibility of taking another assumption. What is that another assumption? So 18% rate of GST also can be taken and you can arrive at the answer like this. Okay. But sir, in this question, in the past exam, they have taken for simplification. See, the total, the 5,000 is exclusive of GST and just only 5,000 has been added. But both the answers are correct. So if you add 5,000 also correct, if you add 4,237 also correct. But which is the perfect answer? According to me, the perfect answer is this, because already they did the same way one question, previous question. So this is May 22, 6 marks question, they did that way. But thank God, here they gave the rate of GST as 18%. That's why interest, how much they added? 4,237 they have added. You understood? Due to that reason, suppose you get the question like this. If rate of GST is not given in the question, then what you do? Add 5,000. If the rate of GST is given in the question, then take 100 divided by 118 or 112, whatever rate that is given. Is it clear? So this question, how much we will do? We will take only 5,000. And in the, because there is no rate given in the question. Suppose if it is question number 9, as the rate is given in the question, so we are taking 5,000 into 100 divided by 100 plus the rate. Understood the difference between these two? Then one more question, question number 12. Miss Achintya, a registered supplier in Kochi, Kerala state, has provided the following details in respect of her supplies made intra-state for the month of March 2018. List price of the goods supplied intra-state exclusive of items given below from 2 to 5. So all these 2 to 5 is before. Exclusive means before. Means before these 4 items, the price is 3,30,000. Now, Swachh Bharat says levied on sale of the goods as per provision. What is the provision? 15 2A, taxes, duties and cess by whatever name called other than GST. To be included or to be excluded? To be included. And in the given price it is not included. Not included. How you know? Because these are in addition to the above price. So therefore we need to then packing expenses charged separately in invoice. So packing expenses section 15 to C. So it is to be included. In the given price it is. So therefore we need to add. Then next, discount of 1% on list price of the goods was provided. Pre-supplier, post-supplier. Read it carefully and tell. Recorded in the invoice of the goods. Pre-supply. Okay. So therefore it is to be excluded as per 15 subsection 3. Discount, pre-supply discount is to be excluded. In the given price, before, not excluded, before means price is before discount. So we need to reduce. That's the meaning of exclusive. Exclusive means before. Price is before discount. So discount we need to deduct na. So therefore minus. How much discount? 1% on 3,30,000. That will come to 3,300. Then subsidy received from state government for encouraging women entrepreneurs. Now listen, here we don't know that it is directly linked to the price or not directly linked to the price. So in the absence of information in the question, you take the assumption that it is directly linked to the price. So therefore whenever it is specifically given as not directly linked to the price, then only we will take it as not directly linked to the price, otherwise it will be directly linked to the price. So subsidy received from state government we are taking as assuming as directly linked to the price, but it is from state government. So as per 15 2E it is to be excluded, and in the given price they have not excluded. Why? Because everything is before this. Every price, the price given is before all these things. So therefore we need to deduct. Now see the answer, 3,30,000 plus 12,500 plus 10,800 minus 3,300 minus 5,000. 3,45,000. Compute the value of taxable supply and GST, assuming CGST 9%, SGST 9%, because all these are intrastate. So what you will do? So you got the value now 3,45,000 into 9% CGST and into 9% SGST. Like that you will show the GST component separately. Is it clear? But don't present it like this. So I already advised you to write the notes in the table itself. Okay. So this presentation don't fall in exam. Next. So question number 13. So this question number 13 is a simple question, not much information is involved. So you take it for practice. Okay. Question number 13 you take it for practice. Then question number 14. Kamal Book Depot, a wholesaler of stationery items registered in Mumbai, has received an order for supply of stationery items worth 2 lakhs on 12th November from another local registered dealer, Mr. Mehta of Mumbai. Kamal Book Depot charged the following additional expenses. Means this 2 lakhs will be taken as the value. For the 2 lakhs, we need to make the adjustments. These are additional. Okay. Packing charges. What is your answer? First, as per provision 15 to C, it is to be in the given price not included. Therefore, we need to add. Good. Freight and cartage. Is it before delivery or after delivery? Before delivery. So therefore, as per 15 to C, it is to be included. In the given price it is. So therefore, we need to then transit insurance, same as per 15 to C, to be included. In the given price it is. So we need to extra designing charges when the design is done before delivery, production stage, correct. So 15 to C, it is to be included. In the given price, not included. So we need to add. Taxes by municipal authority, 15 to A. So 15 to A, taxes other than GST to be included in the given price. So therefore we need to add. Now the goods were delivered to Mr. Mehta on 14 November. Since Mr. Mehta was satisfied with the quality of the goods, he made the payment of goods the same day and simultaneously placed another order on Kamal Book Depot of stationery items amounting to 10 lakhs to be delivered in the month of December. Right now we are discussing for November. So one new order has been placed. On receipt of the second order, Kamal Book Depot allowed a discount of 20,000 on the first order. Pre-supply discount or post-supply discount? Post-supply, because first order delivered, at the time of second order for first order they are giving the discount, which means it is a pre-supply or post-supply? Post-supply discount. But terms are agreed before at the time of supply? No, it is not allowed as deduction. So this 20,000 will not be allowed as deduction. And compute the GST liability. So what is the GST liability? Please do the calculation. 2 lakhs plus 5,000 plus 2,000 plus 1,500 plus 6,000 plus 500. 2,15,000. On that CGST 9%, SGST 9%. How much it will come to? 19,350 and 19,350. Understood? Then they have given one more question. What would your answer be if the items or the expenses given here 1 to 5 are already included? Sir, if these items are already included, we will not include it again. All these items are to be included. And at the given price it is already included. So ignore. So just you will take 2 lakhs as the value for payment of GST. That is this. In case the expenses 1 to 5 given in the above table are already included in the price of 2 lakhs, then 2 lakhs itself will be taken as value. CGST, SGST will be 18,000, 18,000. So question number 15. See, this is similar to question number 9. So whatever question number 9 we saw na above, just the same way. So you try this also for practice. And question number 16 you see. Question number 16. Following are the particulars . You check panna. Okay, say this. Question number 16. Following are the particulars relating to one of the machine sold by SQM Limited to ACD Limited in the month of February 2020 at list price of 9,50,000. So list price 9,50,000 exclusive of taxes and discounts. Exclusive means what? Before taxes and discounts. Further, following additional amounts are being charged from ACD Limited. Municipal taxes chargeable on the machine 45,000. So what is the treatment of these municipal taxes? 15 to A, it is to be included, and in the given price it is not included because it is before taxes and discounts, before tax and discount. Therefore we need to. Then outward freight charges. Contract was to deliver machine at A Limited's factory gate. FOR contract. FOR contract means free on road contract, wherein I will be delivering the product to your location. That is the meaning of FOR contract. Sir, what is the opposite of FOR contract? X showroom or X factory contract. X showroom or X factory contract means I will deliver at my place. You need to take care of the transportation. What is the name of that contract price? X factory or X showroom. Whereas FOR means I need to deliver at the customer's location and I need to collect the delivery charges as well. So therefore, this as per 15(2)(c), it is to be included. Why it is to be included? Before delivery or after delivery? Before delivery, it is to be included. In the given price, it is not included. Therefore, we need to add. So then, next, additional information. SQM Limited normally gives an interest-free credit period of 30 days for payment. After that, it charges interest at 1% per month or part thereof on the list price. ACD Limited paid for the supply after 45 days, but SQM Limited waived the interest payable. So it will not be included. Why it will not be included? As per 15(2)(d), interest, late fee or penalty only if actually charged to recipient should be included in the value. Otherwise, it is not required to be included in the value. Okay. Okay, say this. So, when the interest is not charged to recipient, it should not be included in the value. Third point, SQM Limited received 50,000 as subsidy from one non-government organization on sale of such mission. On sale of such mission means it's a directly linked to price from other than central government or state government. So as per 15(2)(e), it is to be included in the value. But we don't know whether the given price is after considering subsidy or without considering subsidy. But they gave a clue. The subsidy was not linked to the price of the machine. Then our interpretation is wrong. Clearly given, not linked to price. When subsidy is not linked to price, whether we consider that for valuation? No, we will not consider that for valuation. Then ACD Limited deducted discount of 15,000 at the time of final payment, which was not as per agreement. At the time of final payment, pre-supply or post-supply? Post-supply discount. But whether the terms are agreed before at the time of supply? No. So therefore, it will not be allowed as deduction. And anyhow, the given price is before discount only. SQM Limited collected 9,500 as TCS under the provisions of Income Tax Act. We discussed one CBDT circular which says that TCS under Income Tax Act should not be included in the value. Consequently, this will also not come. Compute the value of supply, just 9,50,000 plus 45 plus 65,000, that much only will be taken. So 10,60,000, but for all these points we need to write the explanation why it will not be coming into the value. Then we have 17, 18, 19, 3 questions. Okay, no, 17 only, other questions are not there. This 17 you please try. This is also just like what we have seen above, similar line. Okay, so 3 questions I gave for practice, only 3 questions. You please try to solve these 3 questions today itself if possible. Okay. Then there is one circular which you can see above, which we have not discussed, that is related to molds and dies. Take page number 79. CBIC circular on value of molds and dies. So have a look into this. Messrs. Maruti Suzuki is a original equipment manufacturer, car manufacturer. Car manufacturer will not manufacture all the components required for the car. They will be outsourcing it to ancillary industries. So ancillary industries will be making the parts of the car or components of the car. Like that we have one IR India Private Limited as the component manufacturer. So Maruti Suzuki is the car manufacturer, IR India Private Limited is the component manufacturer. Now car manufacturer entered into contract with component manufacturer to buy the car doors manufactured by the component manufacturer based on the molds and dies given by the car manufacturer. So I am a car manufacturer, you are a component manufacturer. I enter into contract with you to buy the car doors that you make, but you make the car doors using the mold and die I give, because mold and die means it will be in a requisite shape. So when I give it based on that shape, you will create the car door and you will give it to me. So this is the contract. Now in this case, this molds and dies I will purchase and I will give it to you. So at the time of purchase, I paid 10 lakhs plus GST 1 lakh 20. So this 1 lakh 20 I would have taken as ITC. Up to this clear? I entered into contract with you to buy the car doors from you, and that car doors you should make based on the molds and dies that I give. That molds and dies I will purchase at what rate? 10 lakhs plus GST, and that GST I will take as ITC. My job is done. I gave you the molds and dies. When I gave you the molds and dies, I am giving it to you on a free of cost basis. Means I am not charging anything from you. Is it supply or not a supply? First, 71C will come. 71C, D point, D will not come here. Why sir? ITC availed na sir, but it is not disposal of asset on which ITC availed. That molds and dies, once you complete the car doors manufacturing, you will return me that molds and dies. Due to that reason, disposal of business asset point will not come. Related party transaction will not come. Import of service from a related person will not come. Principal agent transaction will not come. Consequently, no consideration, temporary transfer, therefore it is not a supply. Job done. Understood? Now from your point of view, my job is done, my side over. Now from your point of view, you have made the car doors and you supplied the car doors to me na. Now in that car doors, whether these molds and dies to be included in the value. Why sir? That a confusion will come into the picture. 15(2)(b) says any amount for the car door. Who is the supplier? Car door. IR India, component manufacturer is the supplier and car manufacturer is the recipient. So now any amount that the supplier is liable to pay but which is incurred by the recipient should be included in the value. So accordingly they are telling include the molds and dies in the value of the car doors, for which so the lawmaker is telling, boss, first of all original equipment manufacturer, that is car manufacturer, is required to give that molds and dies to the component manufacturer. It is not the liability of component manufacturer which is incurred by the recipient car manufacturer. You understood? Sir, if the component manufacturer has to pay incur some expenditure which is incurred by his recipient, then it should be included in the value. But it is not that. So therefore, don't include the value of molds and dies in the car doors manufactured by component manufacturer. So one line what you need to remember is molds and dies should not be included in the value of components manufactured by the component manufacturer. Is it clear? Suppose situation 2, this is situation 1. Situation 2, you see, suppose if Maruti Suzuki is entering into contract with IR India Private Limited, component manufacturer, to buy the car doors using the molds and dies belonging to you. So you are the component manufacturer, you should make the car door based on the molds and dies belonging to you. I will not supply, belonging to you. That's a contract. You understood the difference in the contract previous to this? Now in this case, you should buy the molds and dies, but I purchased and given to you. You got it? I purchased and given to you. Whether the 15(2)(b) gets subtracted, yes. Whose liability it is to buy the molds and dies? Component manufacturer, supplier liability. But who incurred it? Recipient incurred it. Therefore, it should be included in the value. Are you getting this? So, sale of car doors, amortized cost of molds and dies to be included in the value of car doors. You got it? And I cannot take ITZ. Why I cannot take ITZ? Actually, it is who should purchase? Component manufacturer. Supplier should purchase. Just because recipient has purchased it, recipient cannot take ITZ with respect to this. So, this ITZ availed also will be cancelled. Now, this is the discussion. But finally, what you need to remember is this table. This table alone you need to remember. What is that? Two situations. As per contract, OEM should provide the molds and dies to component manufacturer. As per contract, recipient should supply the molds and dies. Second, as per contract, supplier should purchase the molds and dies but given by the recipient. Okay. Now, can the OEM who is sending the molds and dies, recipient sending the molds and dies to supplier, will it be supply or not a supply? Both cases it is not a supply. Can the ITZ on molds and dies be taken by the recipient? No. In the first case, yes. Why in the first case it is yes? Because they only should buy and they only should supply. Therefore, it should be taken as ITZ. Whereas in the second case, component manufacturer should buy but supplied by OEM. So, therefore, OEM cannot take ITZ, cannot be availed. If already availed, it should be reversed. Component supplied by component manufacturer to original equipment manufacturer. You are giving me the car doors na. In that, whether the molds and dies to be included or not to be included. In the first case, molds and dies not required to be included. Why? Because as per contract, I only should give you the molds and dies. So, therefore, I gave it. You don't have to include it. But second case, as per contract, you should buy, but I gave it to you. Therefore, you need to include it in the value. Amortized value. Sir, what is amortized means? Depreciation. Molds and dies will be capital goods. Using molds and dies, if you can make 100 car doors, total cost of molds and dies divided by 100. For each car door, you will apportion the cost. Okay. So, that is amortized value of molds and dies should be included in the value. Got it? So, this circular is there in the study material, but they have not yet tested this circular so far. You mark this as very, very important. With this, we completed value of supply. Now, look into segment 5, invoice and time of supply. Listen, segment 5, invoice and time of supply. This invoice and time of supply, we have 3 sections. Section 31, listen here, please listen. Section 31 talks about what is the due date of invoice. Section 12 and 13 talks about the time of supply in case of goods and services. Please concentrate, it is little dry topic, but if you listen in the class itself, it will be sufficient. We will do some sums also, okay, please listen. Invoice, what is the due date of invoice? Why we need to understand the due date of invoice? Because the time of supply for a transaction depends upon the due date of invoice. Okay. What is the need of time of supply? There are 3 purposes of time of supply. Number 1, to determine the due date of payment of GST. That is, when should I pay GST for a transaction depends upon the time of supply. For example, if time of supply for a transaction falls in the month of July, I need to pay GST by next month 20th, that is 20th of August. If time of supply for a transaction falls in October, by next month 20th, I need to pay GST, that is 20th of September. So 20th of November, next month 20th. So, therefore, the time of supply determines the due date of payment of GST. Second, the time of supply is relevant for determining the exchange rate, because the transaction will happen at different dates and the transaction may be denominated in foreign currency, but we need to pay GST in Indian rupees. For example, I am importing services and I will make some $60 as the payment. Now on $60 I need to pay GST, but for payment of GST I need to convert the $60 into Indian rupees. For the sake of that conversion into Indian rupees, I need a exchange rate. Again, that exchange rate prevailing on the time of supply will be taken. Then the third objective of time of supply is to determine the rate of GST. So at the time I enter into contract, 12% rate. At the time when I raise invoice, 18% rate. At the time when I collected the money, 28% rate. Which rate to be taken? So for the determination of rate of GST also, time of supply is relevant. So what is the relevancy or what is the objective of time of supply? Three objectives. Number one, to determine the due date of payment of GST. Number two, to determine the exchange rate. Number three, to determine the rate of GST. These are the three objectives of time of supply. Now, what should be taken as the due date of invoice? So, the time of supply for a transaction depends on what? Due date of invoice. So, the due date of invoice first we are discussing. Due date of invoice, in case of goods, we have three provisions. And in case of services, we have three provisions. Subsection, you don't have to bother. Subsection, you don't remember. Remember, all the due date of invoice is given in section 31. Okay. Next, you need to remember what is the situation, what is the due date of invoice. First, for goods, three situations are there. Normal cases, continuous supply of goods, goods sent on approval or on return basis. First, you see normal cases. In normal cases, if it is not continuous supply of goods or if it is not sale on approval or on return basis, then normal cases will be applicable. Normal cases, they have given 2 points. If supply involves movement of goods, the due date of invoice is at the time of removal. If supply does not involve movement of goods, the due date of invoice is at the time of delivery. Again, this supply involves movement, not involving movement, we will come across in place of supply chapter also. So please try to understand what is the meaning of this term, supply involves movement of goods or does not involve movement of goods. Under the contract of supply, if I take the goods from one location to another location, then it will be called as supply involving movement of goods. Then when the supply terminates, when the movement terminates, supply terminates. That is called as supply involving movement of goods. Example, when you place an order in Amazon or Flipkart, so when the supply is terminated, when the product is delivered to you. So under the contract of supply, the supplier is moving the goods from one location to another location. Till the time you receive the product also, you can cancel the order, correct or not? So which means the supply is not yet taken place. So that is known as supply involving movement of goods. Like alternatively, when you go to the shop, buy the product, the supply is terminated there. Thereafter, you may take the product to your home, but that will not come under supply involving movement of goods. Why? Because the supply is already over, even though there is movement, but the supply is already terminated. That is supply not involving movement of goods. Understood? Now, I have given some situations, but please don't look into your book. You try whether it is supply involving or not involving movement of goods. Situation number one, buyer places order with seller. Okay, buyer places order with seller. Seller dispatches the goods to the buyer. Buyer takes delivery of the goods and the supply is concluded. So supply involves movement of goods or does not involve movement of goods? Huh? Very good. Involves movement of goods because they are taking the goods from one location to another location. So what is the key here to know it is supply involving movement of goods? Dispatch. They are dispatching the goods. So supply involving movement of goods. Then next, situation 2. Buyer places order with seller to install generator at the premises of the buyer. Seller brings material required to the buyer's premises and install generator. So seller is not bringing the generator. Seller is bringing the material required for installation of generator and installs the generator over there. Seller transfers the generator to the buyer. So there is a transfer of title. Now you tell me, Supply involving movement of goods or not involving movement of goods? Not involving movement of goods. Why? Because the goods comes into existence only at the recipient's place. What is the goods here? Generator. The generator comes into existence only at the recipient's place. Due to that reason, supply does not involve movement of goods. Then next, situation 3, because in the situation 2, the generator comes at the client's place. Thereafter, there is no movement, it is already in the client's place only. Then situation 3, buyer visits seller's place. Buyer makes purchase of goods and buyer transports the same to his place. Involving movement or does not involve movement? Why does not involve movement? Because buyer purchases in the seller's place, means the sale is already concluded. Thereafter, he may move the goods, but that is not under supply. Then situation 4, seller takes goods to buyer's premises. Seller takes goods to buyer's premises, order not placed by the buyer. So means it is like I am taking the goods randomly to the buyer's place and seller offers the goods to the buyer. I am showing you whether you need this product, and buyer purchases the same and seller delivers the goods. Involving movement of goods or supply does not involve movement of goods? Does not involve. But there is a movement of goods. At the time when I am taking the goods to buyer's place, whether I know that buyer will buy or not? No. So I will offer it for sale to him. He may even reject it. So supply is not there. So I am taking the goods to the buyer's place, then I am showing it for sale, and then only supply will take place. So therefore, even though there is movement of goods, but that is not under supply. So supply does not involve movement of goods. Then situation 5. See this situation 5. Ship is located at Mumbai port belonging to Mr. A. Mr. A in Tamil Nadu. Where is the ship located? Mumbai port. Ship is supplier of the seller, the owner of that ship is Mr. A, located in Tamil Nadu, sold the ship to Mr. B, located in Kerala, by way of transfer of documents. Now Mr. B takes the control of ship in the Mumbai port. Now tell me, supply involves movement of goods or supply does not involve movement of goods? Why does not involve movement of goods? But the ship is in the same location. The ship is in the same location, just the documents is transferred, the ship is in the same location, so supply does not involve movement of goods. Clear here? Now, why we learned this? Because the due date of invoice depends upon whether supply involves movement of goods or supply does not involve movement of goods. If supply involves movement of goods, what is the due date of invoice? At the time of removal. If supply does not involve movement of goods, at the time of delivery will be taken as the due date of invoice. See, due date means that is the last date. Can the invoice be given even before that date also? Yes. So in exam when you are writing, you write on or before the date of removal, on or before the date of delivery, because that is the due date. Due date does not mean that date only we should give invoice. We can give even before that date also. Then look into the second one, continuous supply of goods. Sir, what is continuous supply of goods? So there will be successive supply of goods for which the payments are settled on a periodical basis. Example, I am delivering you the goods, like in your house I am putting the cans, water can on a frequent interval, weekly 2 cans, 3 cans, 4 cans, like that, and one card will be maintained. In that, which day how many cans, monthly settlement will be done. So in this month 20 cans, for the 20 cans payment will be collected. So this is an example of continuous supply of service, continuous supply of goods. Another example, a restaurant will take or will buy goods from the provision store on a regular basis, and that provision store owner will maintain an account, and again on a weekly basis or 15 days once or monthly the payments will be settled. That is also called as continuous supply of goods. There is successive supply of goods, but at that time the payments will not be made. So the payments are settled on a periodical basis. That is known as continuous supply of goods. Then next, in the case of continuous supply of goods, what will be taken as the due date of invoice? So due date of invoice is the account statement date or payment received date as the case may be. It's not whichever is earlier. Account statement date or payment received date, whichever is earlier will not come. Account statement date or payment received date as the case may be. Sir, what does it mean? We have an illustration related to this. Look into that illustration 2 below, page 93. Next page you can see. Arjun Chemicals, Tamil Nadu, entered into contract with an ancillary industry to supply chemicals through pipeline. So they are supplying the chemicals through pipeline, means it's a continuous supply of goods. Payment terms is ad hoc amount of 2 lakh per month payable. So monthly 2 lakhs is payable. Ad hoc means irrespective of how much is supplied, 2 lakhs is payable. And differential amount of 56,000 is settled on a quarterly basis through an account statement dated 6/7/2071. Means quarterly means like say April, May, June. April 2 lakhs, May 2 lakhs, June 2 lakhs. And for the entire quarter, they will see how much is the actual amount minus 6 lakhs. Why 6 lakhs? April 2, May 2 lakhs, June 2 lakhs. 6 lakhs will be deducted. What is the differential amount? 56,000. That 56,000 they are recovering. For that they gave one account statement. Then here in this case, quarter 1, April, May, June, 2 lakhs, 2 lakhs, 2 lakhs received. For April to June entire quarter, what is the differential amount? 56,000. Now, when this 2 lakhs is received 4th May and May month is 6th June, June month is 10th July and this April to June differential amount 25th July and account statement date is 6/7/2021. Now, how you need to determine the due date of invoice? Simple part. If the payments are received irrespective of account statement, the payment received date. If the payments are received based on account statement, the account statement date. In this, first 2 lakhs is received based on account statement irrespective of account statement. Irrespective of account statement, the 2 lakhs will be payable. So therefore, what is the due date of invoice? Date on which the payment is received. When is it received? 4th May. That will be taken as the due date of invoice. Same way, second 2 lakhs, third 2 lakhs also will be received irrespective of account statement. So the date on which the payment is received, that is 6th June and 10th July respectively will be taken. Got the clarity? Whereas this 56,000 is arising based on account statement. If the account statement is not given, no one will know how much is the differential amount. So that 56,000 is payable based on account statement. So account statement date will be taken, not when it is actually collected. So what is the account statement date? 6th July. So please don't take account statement date or payment date whichever is earlier. If you take that, in the third case, June month 2 lakhs, 10th July or 6th July, whichever is earlier will become 6th July only. You understood? Don't take whichever is earlier. So remember 2 points. What are the 2 points? If payments are received based on account statement date. If the payments are received irrespective of account statement, payment received date. Simple. Okay. Now, what are the 2 points? Come on, tell me. Normal cases. Supply involves movement of goods at the time of removal. Supply does not involve movement of goods at the time of delivery. Continuous supply of goods. Payments are based on account statement date. Payments are irrespective of account statement, payment received date. Then look into the next one. Sale on approval or on return basis. In case of sale on approval or on return basis, we need to take the date on which it is supplied. So what is sale on approval or on return basis? First I am delivering the goods to you and it is not sale. You use it. You like it, so you buy it. If you don't like it, you return it. That is known as sale on approval or return basis. In that case, when is it considered as sale? Only when you accept. Correct. When you accept only, it is considered as sale. At the time only I need to raise invoice to you. So date of acceptance is the date of invoice. What if you are not accepting within 6 months? Sale of Goods Act says every sale on approval or on return basis contract should be for a period of 6 months. So within 6 months, if you are not accepting, on expiry of 6 months, it is deemed that you have accepted. So I need to prepare an invoice to you. So what should be taken as the due date of invoice? 6 months from the date of removal or date of acceptance, whichever is earlier. Within 6 months, if you accept, that date only supply has happened, I will raise invoice. Within 6 months you did not accept, on expiry of 6 months it is deemed that you have accepted and I will raise invoice. Now see the twist here. 6 months over, I raised the invoice to you deeming it as supply. Thereafter you returned it to me. Now in that case what should I do? Already invoice I have raised now. So I need to give you one document. What is the name of the document? Cancelling the invoice. What is the document? Credit note. So what is the document required for cancelling the invoice here? Credit note. So the credit note needs to be issued. Got the clarity? Suppose within 6 months itself you returned it. First of all, there is no supply and therefore GST invoice will not arise. Suppose within 6 months you accepted, the date when you accept, that will be taken as the date of invoice. So come on, tell me what is the provisions. We need to remember 3 provisions for goods. First one, normal cases, supply involves movement of goods at the time of removal. Supply does not involve movement of goods at the time of delivery. And next, continuous supply of goods. Payments based on account statement date. Payments irrespective of account statement, payment received date. Sale on approval or on return basis. Date of acceptance or 6 months from the date of removal, whichever is. Then look into services. In case of services, we have 3 situations again. Normal cases, continuous supply of services, cessation of services. So continuous supply of service means a service, already I told you in previous class, continuous supply of service means a service which takes more than 3 months to complete and involves periodic payment obligations. Then it will be called as a continuous supply of service. Both the conditions should be satisfied. A service which takes more than 3 months to complete and it should involve periodic payment obligations. Now, in case of cessation of service means what? Cessation means abruptly stopping the service is known as cessation of service. And normal cases. First point you see, normal cases. In normal cases, if it is banking sector or insurance sector, invoice needs to be given within 45 days from the date of completion. If it is any other sector, invoice needs to be given within 30 days from the date of completion. So for which sector 45 days invoice pa? Banking sector. Other sectors 30 days from the date of invoice. Easy. Then continuous supply of service you see. In case of continuous supply of services, 3 situations. Whether the due date of installment is ascertainable from the contract. Example, I enter into contract with you for construction of a building. Definitely building construction will take more than 3 months to complete and involves periodic payment obligation. And I am telling you, by 30th November you have to pay some amount, by 31st December you have to pay some amount, by 31st March you have to pay some amount. Like that I am giving the timeline when you should make the payment. So that due date of installment will be taken as the due date of invoice. Because due date of installment is ascertainable from the contract, the due date of installment will be the due date of invoice. Sometimes the contract will be like, upon completion of first floor you have to pay this much, upon completion of second floor you have to pay this much, upon completion of plastering and painting work you have to pay this much. Like that I am connecting to event. Previous example I was telling exactly the date, but in this example I am telling you the event. Whenever that event completes you have to pay. So the event completion date itself is the due date of invoice. Both are not there. So in the contract due date of installment also not there and payment is not linked to completion of event. Then whenever the installment amount is received, that date will be taken as the due date of invoice for that installment. So what are the 3 points you tell me? If due date of installment is ascertainable from the contract, the due date of installment. If payment is linked to completion of event, as and when the event gets completed. Suppose if due date of installment not ascertainable, as and when payment is received. Then cessation of service. In case of cessation of service, immediately after cessation, the invoice needs to be issued. For example, there is an actor who entered into contract to act in a movie for 50 days, and each day they will get a remuneration of 50 lakhs. So their total remuneration will be 25 crores. Say 10 days they acted in the movie, and thereafter they have quit that movie. Maybe they don't want to continue in that movie, and in this case, for this 10 days definitely they will collect money. So 10 days into 50 lakhs, that is 5 crore rupees will be collected. For that they need to give an invoice. But later on, as per contract, whether payment arises or not arises, that's a different story. Maybe because he stopped the movie, for which producer will file a case on him, etc. It's a different story. But he need to raise an invoice immediately upon cessation for the amount that he is getting. Okay, but immediately after cessation, there is no time limit. So today I stopped the service before the contract, so today itself I need to raise invoice immediately upon cessation. So tell me, what are the 3 points for services? Come on. Normal cases, banking sector or insurance sector, 45 days. Other cases, 30 days. Continuous supply of service, due date ascertainable from the contract, the due date of installment. Due date not ascertainable from the contract, but payment linked to completion of event as and when the event is completed. And in the absence of this, date on which such installment is received. And cessation of service, immediately upon cessation. So what is a continuous supply of service? A service which takes more than 3 months to complete and involves periodic payment obligations. Now you can see illustration 1. P Limited provides maintenance services to companies having computers in their offices in Maharashtra. On September 2020, it enters into contract with Z Limited, where P Limited will maintain computers of Z Limited during 1st October 2020 and December 15, 2020 for an agreed consideration of 2 crore plus applicable GST. Due date of payment is October 20 for first installment, November 20 for second installment, December 20 for third installment. The provision of service is complete on December 15. Payment is however made by Z Limited on March 1st. When tax invoice should be issued? So as 3 installments are involved, so October 20, November 20 and December 20 will be taken as the due date of invoice. Correct? No, wrong answer. First check, is it a continuous supply of service or not? What is a continuous supply of service? A service which takes more than 3 months to complete. When this is started? 1st October. When is it completed? 15 December. How many months? 2.5 months. 2.5 months means how it will become continuous supply of service? It should be more than 3 months. So first of all, it is not a continuous supply of service. Means what? It is a normal service. For normal service, what is the due date of invoice? Is it banking or insurance or others? Others. For others, what is the due date of invoice? 30 days from the date of completion. Check the question. When is it completed? December 15. From December 15, 2020, add 30 days. So that will be Jan 14, 2021 will be taken as the due date of invoice. Understood? Then see the next one, whether details of recipient to be mentioned in the invoice. So there is one amendment here. Generally, whether we need to show recipient details in the invoice, that's a question. B2B, forever we need to show the recipient details, no doubt, because he need to take ITC na. So therefore we need to mandatorily show recipient details in the invoice if it is a B2B supply. What is B2B mean? Supply to a registered person. But if it is B2C, what is it they are telling? If the value exceeds 50,000 or more than or equal to 50,000, then show the recipient details in the invoice even though it is sale to an unregistered person. How much per value of the invoice? More than or equal to 50,000. Show the recipient details in the invoice he will not have GSTIN, but his name, address, state code that you show. Whereas if the value does not exceed 50, that is less than 50,000, you check what service it is. If it is services through e-commerce operator or OIDR services or online money gaming services, just mention the state of the recipient. You don't have to mention the name of the recipient, address of the recipient, etc. Just the state of the recipient is enough. But if it is other services or goods, other cases, no need to show recipient details, but if recipient insists that he wants this name and details, then you show, but there is no mandatory provision. Okay, how to remember? Remember first point. B2B, what is your answer? Always show the details of recipient. Then B2C, value exceeds or equal to 50,000. Show the details of recipient. Suppose if it is B2C less than 50,000, then generally no need to show the details of recipient. If they ask, we need to show. But in case of three services through e-commerce operator, OIDR services, online money gaming services, show the state of the recipient. This is an amendment, so this can be tested somewhere in MCQ. Okay. Now we are moving on to time of supply in case of goods and services. So section 31, due date of invoice we have seen. Now we are looking into time of supply in case of goods and services. Section 12 deals with time of supply in case of goods, section 12, and services, section 13. In this 12 and 13, total we have 6 subsections. In that, look into subsection 1, which is common for 12 as well as 13, it is common. What does subsection 1 says? The liability to pay GST for a transaction depends upon the time of supply. That already I told you in the first point itself. So the due date of payment of GST depends upon the time of supply for a transaction. So that only they have given in 12.1 and 13.1. So there is nothing to remember here. But look into the next area. So in 12 subsection 2 they are telling time of supply in case of FCM, 13 subsection 2 time of supply in case of FCM, situation same, correct? Then again time of supply in case of RCM, time of supply in case of RCM, situation same, but the provisions are different. Again here vouchers, this vouchers case whether it is 12 or 13 goods or services, the provision is same. And in case of residual cases, time of supply not ascertainable as per any of the above subsection, then also it is common provision. Then interest, late fee or penalty for delay in payment of consideration also common provisions, which means how many points you need to remember? Just 7 points you need to remember. What is that? First you need to know goods FCM. Second you need to know goods RCM. Third you need to know services FCM. 4 you need to know services RCM. Okay, first 4 points: goods FCM, goods RCM, service FCM, service RCM. Then next vouchers, common, and residual cases, common. Then interest, late fee or penalty for delay in receipt of consideration. If you remember 7 points, the time of supply is over. Just 7 points you need to remember for both the sections 12 and 13. And again subsection you don't focus, try to remember section 12 is for goods, section 13 is for services. Now what are these 7 points you should remember? First point, so first tell me what are the situations, 7 situations: goods FCM, goods RCM, service FCM, service RCM, vouchers, residual cases, interest, late fee, penalty for delay in receipt of consideration. Okay. Now last 3 points we will see, that is easy. Interest, late fee, penalty for delay in receipt of consideration, what will be taken as time of supply? Already I told you, interest is taxable on what basis? Receipt basis. Only when you actually receive the interest or late fee or penalty, at the time only you need to pay GST. Easy, can you remember? So in case of addition to value in the form of interest, late fee, penalty for delay in receipt of consideration, as and when the money is received. So on receipt basis, easy. Then in case of residual cases, when you will apply residual cases, when you are unable to determine as per above points, then residual cases will be applicable. Here also you remember in two simple points. If he is required to file returns, who is required to file returns? Registered person is required to file returns. The due date of return itself will be taken as the time of supply. Is it clear? When residual cases you will apply, residual means what? Balancing figure. When balancing figure will come? When there is no other provision, balancing figure will come. Is it clear? So as per residual cases, what should be taken as the time of supply? If he is a registered person, due date of filing return. If he is not a registered person but he need to pay tax. Sir, why being an unregistered person he need to pay tax? Actually his turnover crossed the threshold limit but he is not yet registered. So department came to know this. Now they will collect the GST from him. As and when he pays GST, that is the time of supply. You got it? Now come on, tell me residual cases. Registered person, due date of filing return. Not registered person, date of payment of GST. Okay. Then look into vouchers. In case of vouchers, is it identifiable voucher or non-identifiable voucher? We need to see. Identifiable voucher means what? So it can be redeemed against a particular product or a particular service. That is identifiable voucher. Example, you go to Domino's and you eat, you make a bill for 500 rupees. When you make a bill for 500 rupees, Domino's will give you one voucher. Next time when you come, you will be getting one regular veg pizza free. Like that, they will be giving one voucher. If you bill for 500 rupees first time, so they will give you one voucher. What is that voucher? Next time when you go to Domino's, so they will give a date. By this date, if you go, so you will get one regular veg pizza for free. This voucher is known as identifiable voucher. You understood? Whereas non-identifiable voucher means it can be redeemed against any product or service. That is non-identifiable voucher. Example, you got a Zudio or West Side voucher for 500 rupees. Zudio voucher or West Side voucher for 500 rupees. Now, for 500 rupees, you can buy anything in Zudio. You can buy garments, you can buy footwear, you can buy perfume. You understood or not? You can buy perfume or deodorant. So anything you can buy. So that will be called as non-identifiable voucher. That can be redeemed against any product or service. So of that supplier, that is non-identifiable voucher. You understood the difference? Identifiable voucher means what? It can be redeemed against a particular product or particular service. Non-identifiable voucher means what? It can be redeemed against any product or any service. In case of identifiable voucher, I know what product you are going to redeem today itself at the time of issuance of voucher. Correct? Today I am giving you voucher. I know against which product you will be redeeming. So date of issuance of voucher itself is the time of supply. You got it? Whereas in case of non-identifiable voucher, I don't know against which product you will be redeeming. So I have to wait till the time of redemption. So the date of redemption will be taken as the time of supply. So tell me 2 points. Identifiable voucher at the time of issuance of voucher. Non-identifiable voucher at the time of redemption of voucher. Now, in case of identifiable voucher, today I gave you Domino's. I am Domino's Pizza. I gave you a voucher. Regular veg pizza voucher I gave you. But today itself time of supply. So I will pay GST. But you are not coming and redeeming it. You got it? You are not coming and redeeming it. But today itself I paid the GST, considering it as time of supply. Because what is the time of supply for identifiable voucher? At the time of issuance, na? So today itself I paid GST. You are not redeeming it at all. Then what will happen in that case? Unnecessarily I paid GST, na? And the voucher got expired. I will give a date pa, within this date you have to come and redeem. That date over, but already I paid the GST. Now I will get it as a refund. Unnecessarily I paid GST, treating it as supply, so I will get a refund. But this problem is not there in case of Zudio voucher. Why? In case of Zudio voucher, whenever you redeem the voucher, that date only will be taken as the time of supply. What if you are not coming and redeeming? There won't be any GST. So one more example also, Reliance Trends, if you see, Reliance Trends by default this voucher will be there. You buy anything there, so they will give 2-3 vouchers. Depending upon your billing, they will give 2-3 vouchers. And in that voucher, they will mention 500 rupees off on purchase of 1500 rupees. Like that, they will be mentioning in the voucher. Now, maybe you will miss, there is a date, you will miss that date. So means the voucher is expired. Is there any liability on the supplier? No. Why there is no liability on the supplier? Because the time of supply is at the time of redemption of the voucher. Is it clear here? Then next, so 3 points we completed: vouchers, residual cases, interest, late fee or penalty for delay in receipt of consideration. Can you please tell me once again? Come on. In case of interest, late fee, penalty for delay in receipt of consideration, what's the time of supply? Receipt basis. Good. Residual cases, 2 points: registered person, due date of filing return; unregistered person, date of payment of tax. Good. Then vouchers, identifiable at the time of issue, non-identifiable at the time of redemption. Now look into goods under FCM. In case of goods under FCM, we have again 2 divisions. In case of a person opting for composition scheme or specified actionable claims, that's an amendment. In case of a person opting for composition scheme or specified actionable claims. What are the specified actionable claims? HC block. In case of a person opting for composition scheme or specified actionable claims, the time of supply shall be 3 dates: due date of invoice, actual date of invoice, or date of payment, whichever is earlier. Due date of invoice means when I am supposed to give the invoice. Actual date of invoice means when I have actually given invoice. Date of payment means when I have collected the payment, whichever is earlier. So whether GST payable on advance in this case? Yes. For example, this month payment received, next month invoice given, and next month only due date of invoice. Now whichever is earlier is this month. So this month itself I have to pay the GST. So therefore, what are the 3 dates here? In which case? Which case? Composition scheme and specified actionable claims. What provision we are discussing right now? Goods FCM. So what are the 3 dates? Due date of invoice, actual date of invoice, date of payment, whichever is earlier. But for others, goods FCM, other than these 2, who are other than these 2, normal scheme or other people, in that case only 2 dates. What are those 2 dates? Due date of invoice or actual date of invoice, whichever is earlier. So date of payment is irrelevant. So means this month I got the money, next month is the due date of invoice and next month is the actual date of invoice. Should I pay GST now? No, because date of payment is irrelevant. Always it is due date of invoice or actual date of invoice, whichever is earlier. So what are the 2 points you should remember? Come on. Goods FCM, goods FCM. First, composition scheme or specified actionable claims. What is the treatment? Due date of invoice or actual date of invoice, whichever is earlier. Date of payment also, whichever is earlier. Whereas others, due date of invoice, actual date of invoice, whichever is earlier. Then look into goods RCM. Goods RCM we need to take from recipient point of view. So far goods FCM we have seen from whose point of view? Supplier point of view. In case of RCM, who is having liability here? Recipient. So we need to see from the recipient point of view. So the date on which goods are received by the recipient, or the date on which recipient is making payment to supplier, or these 2 things can be delayed, or 31st day from the date of invoice. even though date of receipt is delayed or even though date of payment is delayed, but 31st from the date of invoice will be earlier. So maximum by 31st, that will be taken as the time of supply. So what are the three dates, pa? Date on which goods are received by the recipient, date on which payment is made to supplier, or 31st day from the date of invoice. Then look into services RCM parallelly. Services RCM you see, find the difference. Instead of 31st day from the date of invoice, for services RCM it is 61st day from the date of invoice. Then, so goods, date of receipt of goods is not there for services. It is date on which payment is made to supplier or 61st day from the date of invoice, whichever is earlier. Can you remember these 2 points easily? Here it is date on which goods are received or date on which payment is made to supplier or 31st day from date of invoice. Here only 2 points, date on which payment is made to supplier or 61st day from the date of invoice, whichever is earlier. Done here. Now services FCM, total 4 points pa, goods FCM, goods RCM, service RCM we completed. So what is left? Service FCM. For service FCM, simple, they are asking us to check whether the invoice is given within the due date. If invoice is given within the due date, then invoice date or payment date, whichever is earlier. If invoice not given within the due date, then completion date or payment date, whichever is earlier. So invoice given within due date. What is due date? Already we know, banking sector, insurance sector, 45 days, other cases 30 days, like that we discussed the due date of invoice. Now, if the invoice is given within the due date, you take date on which you gave the invoice or payment, whichever is earlier. If the invoice is not given within due date, see when the service got completed. So completion date or payment date, whichever is earlier. So 4 points you should, first 3 points you know, what is that? Vouchers, residual cases, interest, late fee or penalty. These 4 points, come on, revise. Goods FCM, goods FCM, divide into 2. Composition scheme, specified actionable claims. Actual date of invoice, due date of invoice, date of payment, whichever is super. Then goods RCM, others. Actual date of invoice, due date of invoice, whichever is earlier. Then goods RCM, date of receipt of goods, date of payment to supplier, 31st day from date of invoice, whichever is earlier. Then next, services RCM, date of payment to supplier, 61st day from the date of invoice. Then services FCM, invoice within due date, actual date of invoice or date of payment, whichever is earlier. Invoice not within due date, date of completion or date of payment, whichever is earlier. So these are the 7 provisions that we have for time of supply. This much only you need to remember. Apart from this, we have some additional points here. So these additional points are connected to above. Whatever we discussed, for that only it is connected. See the first additional point. What will be taken as the date of payment? What will be taken as the date of payment? Please concentrate. What will be taken as the date of payment? Logically, the date on which money got credited in your bank account or the date on which you entered in your books of accounts, whichever is earlier. This is from supplier point of view. From recipient point of view, date of entry in the books of recipient or debit in his bank account. See, supplier case, credit in the bank account. Recipient case, debit in the bank account. Can you remember? So what is considered as the date of payment in case of supplier? Entry in the books or credit in bank account, whichever is earlier. Recipient point of view, entry in the books or debit in the bank account, whichever is earlier. Then in case of goods covered under FCM, GST not payable on advances, correct? Because see, goods under FCM, other than composition scheme and specified actionable claims, what is given? Due date of invoice or actual date of invoice, whichever is earlier. Correct. Date of payment is not there, which means GST not payable on advances. Whereas all other cases, GST payable on advances, and GST is payable only upon invoice as time of supply is due date of invoice or actual date of invoice, whichever is earlier. But in case of services under FCM, GST is payable on advances. So services, definitely GST payable on advances. That's why for services one relaxation has been provided. That is, if I raised you invoice for 11,200, you paid me 12,000. Why you will pay 12,000? Because you know that this 800 rupees will be adjusted in the future invoice. Otherwise 1 rupee also extra you will not pay. For example, credit card bill you take, so 11,200 means you are paying so some extra amount. Why you are paying this extra amount? Because it will be set off in future. For that reason you are ready to pay. Even telephone bills also we may pay some extra amount. Okay. Now 11,200 is the bill. How much you paid? 12,000. How much extra I collected? 800. Which month I collected 800 extra? This month. But it will be reflected in invoice of next month. This 800 will be reflected in the invoice of next month. As per provision we need to take payment or invoice, whichever is earlier, means I have to pay GST on 800 this month itself. But that will be an administrative inconvenience for me. So they created a relaxation by telling you pay GST on this 800 based on invoice itself in future. But this relaxation is only for the excess amount up to 800, up to 1000. This 800 is within 1000. So therefore I can enjoy this. What if the excess amount is beyond 1000? Then entire month, that is entire amount, I have to pay GST this month. Advance I have to pay GST this month. So this relaxation is not applicable. So please see that third point. Up to 1000 rupees received in excess of the invoice. Underline, up to 1000 received in excess of invoice. In case of services covered under FCM, time of supply can be date of invoice or determined under 13 subsection 2. What is determined under 13(2) means? Invoice or payment, whichever is earlier. Either date of invoice or determined under 13(2). Supplier has option to choose. Definitely supplier will choose date of invoice. This month we have to pay GST on 800. Why will I pay GST this month? When I have an option to defer, I can defer now. So whenever I raise invoice, at the time itself I will pay GST for this excess amount of 800. You got it? Then fourth point, in case of transaction between associated enterprises. Sir, who are associated enterprises? Associated enterprise is defined in Income Tax Act, and when one company invests greater than 26% in the other company, it will be called as associated enterprises. But don't worry, it will be given in the question itself whether they are associated or not associated, because this associated definition is not there in Income Tax at CA intermediate portion. So in CA final level only we will be studying. So it's a final level, international taxation it will come. So due to that reason, don't bother about that, it will be given in the question. But even if it is not given in the question, you should be knowing. That's why I gave you a simple point. Greater than 26% means definitely it will be associated. In case of import of services by associated enterprises, so generally import of service is RCM na. For service RCM, what is the provision? Service RCM, what is the provision? Time of supply, time of supply. Service RCM, what is the time of supply? Date on which payment is made to supplier, or 61st day from date of invoice, whichever is earlier. Okay. Here invoice will not be there between associated enterprises. So what they are telling, first point same, date on which payment is made to supplier or date of entry in the books of recipient, whichever is earlier. That 61st day from the date of invoice not there. So date of entry in the books of recipient. So see this. So when goods are taken outside India for exhibition, it is in case of associated enterprise, when supplier is outside India and recipient in India, time of supply shall be date of entry in the books of recipient or date of payment to supplier, whichever is earlier. So instead of 61st day from date of invoice, date of entry in the books of recipient is taken. The next one, goods generally taken outside India for exhibition. Is it treated as supply or not a supply? Not a supply, because there is no consideration, and it is not disposal of business asset, related party transaction, import of service from related person or principal agent transaction, not a supply. But there is a deeming fiction which we have learnt on sale and approval or on written basis gets attracted. You are taking the goods outside India for exhibition. If you bring the goods within 6 months, no problem. If you are not bringing the goods within 6 months from the date of removal, so then on expiry of 6 months, it is deemed to be supply and you need to raise invoice. So already we learned na, sale on approval or on return basis, what will be taken as the due date of invoice? 6 months date of acceptance or 6 months from the date of removal, whichever is earlier. Applying this, when the goods are taken outside India for exhibition, it is not a supply. But when the same is not brought back within 6 months, it is deemed to be supply in terms of 31 subsection 7. Then next we have section 32 and 33. Section 32 says, being an unregistered person, you should not collect GST from your recipient. So you are unregistered na. Being unregistered, you should not collect. If you collect, that's an offense. So an unregistered person should not collect GST. And GST should not be collected by a registered person beyond the applicable rate. Suppose if the applicable rate is 12%, how much you should collect? 12% only. If you collect 18%, that excess collected is also an offense. What are the two offenses here given in 32? Unregistered person collecting GST is an offense. Number 2, registered person collecting excess GST is also an offense. Then section 33 says the tax component should be shown separately in invoice. Whenever you prepare an invoice, you should never show the invoice price as inclusive of GST. You should separate the GST and show. That's why in every supermarket or any shop, when you get the invoice, below you can see the GST component. They will separate and show this much is the price, this much is the GST, like that, because of section 33. So as per section 33, GST component should be separately shown in invoice. Is it clear? So these are some additional points related to time of supply, and we have seen illustration 1 and 2 already. Look into illustration 3 alone, then we will take a break and we will see other illustration. The illustration 3 alone. Miss Reema purchased a gift voucher from Shoppers Stop, a departmental store, worth 2,500 on 30/10/2020 and gifted it to her friend on the occasion of her birthday on 4/12/2020. Her friend encashed the same on 1/1/2021 for purchase of a handbag. Determine the time of supply. Identifiable voucher or non-identifiable voucher? How you know that it is a non-identifiable voucher? Worth 2,500. They did not tell against which product it can be redeemed. So non-identifiable voucher, what will be taken as the time of supply? At the time of redemption. What is the time of redemption? 1/1/2021. So that 1/1/2021 will be taken as the time of supply. Okay. So we actually completed due date of invoice and time of supply. We have some illustrations and some other aspects related to invoice that we will see. We'll take a break for 15 minutes, then we'll continue. Okay, we'll start. Look into illustration 4. Illustration 4. Page number 95. Mr. A registered person, received goods from Mr. B. An unregistered dealer, Mr. B issues an invoice on 30th June 2020. The said goods are notified for the purpose of section 9(4) and Mr. A is also notified class of recipient. 9.4 means what? RCM. 9.3 and 9.4 are RCM. And goods covered under RCM. Can you tell me the provision? Goods RCM. Date on which goods are received, or date on which payment is made to supplier, or 31st day from the date of invoice, whichever is earlier. Now look into this. Find the time of supply of goods in the following independent cases. First one, Mr. A received goods on 15 July 2020, payment of which is not yet made. Now, what is the date on which goods are received? 15th July 2020. That is one date. What is the date on which payment is made? Not yet made. And what is 31st day from the date of invoice? From this invoice, what is 31st day? 31st day from the date of invoice. So 30th June 2020, 31st date is 31st July 2020. So we need to take date on which goods are received or date of payment not there, 31st day from date of invoice, 31st July, which is earlier, 15 July or 31st July? 15 July. So 15 July will be taken as the time of supply. Then second case, Mr. A received goods on 3rd August and made payment for the same on 4th August. First, date of receipt of goods, 3rd August. Date on which payment is made, 4th August. 31st day from the date of invoice, 31st July. Which is earlier in between these three dates? 31st July. So that will be taken. And then next, third case, Mr. A made payment on 8th July and received the goods also same date. So payment date also 8th July, goods received also 8th July, and invoice date is 31st July. 8th July is the earlier date. Good. Then fourth case, A received goods on 10th July and made the payment on same 9th July and 31st July. Which is earlier? 9th July is the earlier date. So just literally application of provision only. Majority of the questions are like this only. So related to time of supply and due date of invoice. Then illustration 5 you see. Mr. X, a registered supplier, supplied certain goods to Mr. Y on 5 months credit with a penalty clause in the agreement, levying a penalty of 12% per annum of the invoice value in case of delayed payment. So 5 months credit. Suppose if the payment is not made within 5 months, they are going to levy a penalty of 12% per annum. The invoice was dated 1/12/2017 and the invoice value was 20,000. Mr. Y could not make the payment on the due date due to unavoidable reasons. He, however, made the payment of invoice value on 1/6/2018. So actually what is the time limit? 5 months credit. 1/12/2017, 5 months means what? December 1/12. So December, Jan, Feb, March, April. So by April, 30th April, correct? Whereas the payment on 1/6 means how many days delay? 1 month delay. 1 month delay, and Mr. X raised a debit note for penalty amount. There being a dispute on this, the matter was in arbitration, which was finally resolved by Mr. Y agreeing to pay half of the penalty amount. So only half of the penalty amount will be payable. First you compute what is the penalty amount. So what is the value? 20,000. So take your calculator. 20,000 into 12% per annum. But the delay is only for 1 month. So into 1/12. 200. Out of the 200, 50% only will be payable. That is 100. So therefore the interest will be only, or penalty will be only 100. The amount was paid by Mr. Y on 12/12/2018. Determine the time of supply. So time of supply in case of interest, late fee or penalty is what? On receipt basis, whenever it is actually received. So therefore when is it actually received? 12/12/2018. That will be taken as the time of supply. Understood? Then next one, we have various documents involved in GST. So in that already tax invoice we discussed. So what is the time limit for tax invoice? We have seen So that is 3 cases for goods, 3 cases for services, like the time limit we discussed. Who will be giving tax invoice to whom? Generally, supplier will give tax invoice to the recipient. But if the supply is covered under RCM, recipient will be giving tax invoice to the supplier. You understood? Generally, who will give tax invoice to whom? Supplier. If registered, supplier will give. Suppose if the supplier is unregistered and the transaction is covered under RCM, recipient will give tax invoice to the supplier. Then, in which case tax invoice will be given? Taxable supplies or exempted supplies? Taxable supplies. So, in case of taxable supplies, tax invoice will be issued. Then next, bill of supply. In which case bill of supply will be given? Exempted supplies. So, for taxable supplies, what is the name of the document? Tax invoice. For exempted supplies, what is the name of the document? Bill of supply. Also, a person opting for composition scheme cannot collect GST from the recipient. Due to that reason, the person opting for composition scheme will give one document. What is the name of the document? Bill of supply. So, in which case bill of supply will come? 2 cases. If they are making, if a registered person is making exempted supplies, or he is under composition scheme. Generally, who will give bill of supply to whom? Supplier. What is the time limit for bill of supply? Same time limit for tax invoice, that will be taken as a time limit for bill of supply. And there is one proviso here. In case of low value supplies means what? Value of supply less than 200, not equal to 200, less than 200. Tax invoice or bill of supply not required, provided 3 conditions are satisfied. Condition number 1, it's a B2C supply. B2C supply means what? Recipient is unregistered and recipient do not require tax invoice. And at the end of the day, they need to prepare a consolidated invoice that contains the details of the transaction just for accounting purposes. Okay. So, what are the 3 conditions? Condition number 1, it is supplied to an unregistered person. First provision is value of supply less than 200, tax invoice as well as bill of supply not required. If 3 conditions are satisfied. Condition number 1, recipient is unregistered. Recipient do not require tax invoice and a consolidated invoice needs to be raised at the end of the day. You don't have to raise it to anyone, just for accounting purpose you will prepare an invoice. Recipient you will just mention as unregistered, you will not mention any details. So, you will prepare invoice for accounting purpose. Then, however, in case of multiplex theatres, see the next page, first point. In case of multiplex theatres, even if the value is less than 200 rupees, example, there are many multiplex theatres where still the invoice price, that value of supply is less than 200, 170, AGS and all, if you see 160, 170, 190, like that it is there. So, less than 200, don't add GST. Before GST I am talking, value of supply will be always before GST. Before GST it is like this only, 170, 180, 190 only ticket price. Now, in this case, even though the value is less than 200, but they need to give an invoice. And what will be taken as invoice in this case? The e-ticket. Usually when you book a ticket in Book My Show or any ticket new etc., in your SMS, one e-ticket will be there. You need to show that e-ticket only, they will scan it etc. So, that e-ticket will be taken as invoice. Is it clear? So, in case of multiplex theatres, an invoice, e-ticket deemed to be invoice, to be issued even if the value of supply is less than 200. Then there is a concept called as single tax invoice cum bill of supply. That is in the same document, taxable supplies also we will show, exempted supply also we will show. So, single invoice cum bill of supply. When? Listen, if you are a registered person, and you are making taxable supplies, what is the name of the document? Tax invoice. Clear? If you are a registered person making exempted supplies, what is the name of the document? Bill of supply. If you are a registered person, you are making both taxable and exempted supplies, then now you need to check B2B or B2C. If it is B2B, separately for taxable supplies, tax invoice, exempted supplies, bill of supply. You understood? Whereas if it is a B to C, then in that case single tax invoice come bill of supply. You understood? But when per single tax invoice come bill of supply, a registered person making both taxable and exempted supplies to an unregistered person. B to C means what? Recipient is unregistered. Then single tax invoice come bill of supply. Understood? So in MCQ it will be given. Single tax invoice is required in which of the following cases? A, B, C, D. So all this entire discussion, various documents involved in GST is mainly for MCQ purpose. Okay. Then next, that is what I have given. Invoice come bill of supply. A registered person is supplying taxable as well as exempted goods to an unregistered person. Then single invoice come bill of supply will come. Due date same. Whatever is the due date of tax invoice same. And who will be giving this? Invoice, tax invoice, bill of supply, single invoice come bill of supply. Everything is given by whom to whom? Supplier to recipient. Only one exception is there. What is that? If the supplier is unregistered and if the supply is covered under RCM, then recipient will be giving tax invoice to the supplier. The next, debit note and credit note. Yesterday itself I told you what is the impact of debit note, credit note. Now what we are discussing is when debit note is given and when credit note is issued. Who will give debit note and credit note in GST? Supplier. When debit note, when credit note? Listen. Increase in invoice value. So recipient shows a debit balance. Further you will make a debit to recipient. When you will make further debit to the recipient, if the invoice value increases, what is the name of the document? If the invoice value decreases, what is the name of the document? Understood? Invoice value increases, invoice value decreases. Now, why invoice value increases? Already we gave an invoice. Now we are going to collect a extra amount. So means actual value is greater than invoice value. So then debit note. Or we collected 5% GST instead of 12% GST. For collecting this extra GST also debit note. Understood? So the taxable value charged is less. Taxable value charged is less means we have charged less value in the invoice. So to collect the extra amount, we will give a debit note. Or the tax charged is less. We have charged a lesser tax. To collect the extra tax also, we will be giving a debit note. Supplier. Sir, any time limit to give the debit note? No time limit. But see credit note, there is a time limit. What is the time limit for giving the credit note? 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. Means, what is the current financial year? 23-24. For 23-24, any transaction happened. So we need to give credit note by 30th November 2024. Next financial year is 24-25. In 24-25, what is 30th November? 30th November 2024 or date of filing annual return. Sir, not due date. Date of filing annual return, not due date. Due date is 31st December. Annual return due date is 31st December. But I can file before also. So that's why they said whichever is earlier. Okay. Why credit note has a time limit? Debit note don't have any time limit. Debit note leads to increase in liability, revenue to government. So therefore, any time you give debit note, we are happy. Whereas credit note, reduction in liability, loss to government, unhappy. That's why time limit. You understood? And debit note shall, whereas credit note may. If up to you. If you want to give, you give. Otherwise, not required. But debit note mandatory. You have to give because they use the words like that. So in credit note they use the word shall right there. In credit note they use the word in credit note they use the word may. Whereas in debit note they use the word shall. So debit note, no time limit, but credit note there is a time limit. And when credit note will be given, reduction in invoice value, correct? Means we have charged in excess. So to reduce that, taxable value charged in excess or tax charged in excess. To reduce that, we will give credit note. One more reason also, sales returns. So we sold, will give invoice. He returned that, sales returns. We need to cancel the invoice now. To cancel the invoice also we will be giving credit note. Or where goods or service are both supplied are deficient. Example, so I provided some service to you and for which I billed 10,000 rupees plus GST, and you are not happy with my service. When you are not happy with my service, what you will do? You will argue with me, sir, 10,000 rupees and all, it is not worth, sir. So maybe 6,000 rupees. So reduce it, like that you will say. So now I will give you a credit note for 4,000. Is it clear? So as you are not happy with my service, you will put pressure on me to reduce the value. That is known as deficiency in the quality, where goods or service are both supplied are deficient. You understood? Then, so who will be giving it to whom? Supplier will be giving it to recipient. But remember one important point, credit note cannot be issued in case of bad debts. For bad debts we don't have any relief. So the problem here is that I raised invoice. As I raised invoice, I paid GST. But you did not make payment to me. But I already paid the GST. So literally it is like a loss for me, correct or not? So that is the disadvantage. In case of bad debts, they are telling you cannot give a credit note. But sir, we can give credit note treating it as deficiency in quality, na sir? Yes. So this is a loophole where the goods or service are both are deficient under that category. So you are my customer. You are not at all paying money to me. So now I will ask you over call, boss, don't worry, I can understand you don't want to pay money, but tell me, do you have any intention to pay money or not? Be frank, mother promise. So you are telling, no sir, I don't have intention to pay. Thank you. Send me one mail stating that you are not happy with my service. I will give a credit note under the grounds of deficiency in quality, so that I will get my GST. Whatever at least I have paid, I will be getting. So that's a loophole. Lot of people are doing that. Then next, revised tax invoice. What is this revised tax invoice? You are liable to get registered on one particular date, and you made application for registration. What is the time limit within which you need to make application for registration? 30 days from the date you are liable to get registered. Generally, what is the time limit within which you need to make application for registration? 30 days from the date you are liable to get registered. And after that they will give you registration certificate. Now, from the date you are liable to get registered till the date you got the certificate of registration, you would not have collected GST from your customers. Why? So only when you get the registration certificate, you can collect the GST, but you are required to pay GST during this period. So then, as you have not collected the GST during this period, at a later point of time, that is after you get the registration certificate, you can give the revised tax invoice for the supplies between the date you are liable to get registered till the date you got certificate of registration. Let's try to understand with numbers so that you will get a clarity. So that is, you commenced the business. You commenced business on one particular date, say on 15 May 2023, you commenced business, and somewhere on 30 September, 1st October 2023, you cross the threshold limit. Okay, so you are liable to register. You are liable to register, and thereafter you made application for registration. So when you should make application for registration? Within 30 days. So this you please write in your notebook. Okay, you write in your notebook so that you will get an understanding. This is illustration on revised tax invoice. Okay. Illustration on revised tax invoice. Illustration on revised tax invoice. Illustration on revised tax invoice. So a person commenced business on 15/5/2023. On 1/10/2023, they are liable to register, and application for registration. What is the time limit within which application for registration should be made? Within 30 days. From when? Liable to register. So you made application on 25/10/2023. Application for registration. So you commence business on 15/5/2023 and you are liable to register on 1/10/2023. Within 30 days you need to make application for registration. So you made application for registration on 25/10/2023 and you got the registration certificate, RC, registration certificate granted on say 5/11/2023. 5/11/2023. You have written this. Commence business on 15/5/2023, liable to register on 1/10/2023, and 25/10/2023 you made application for registration. 5/11/2023 you got the registration certificate. Now, from 1/10 to 5/11, are you required to pay GST? Why you are not required to pay GST? You have to, yeah, you have to. So 1/10/2023 you are liable to register. The date you are liable to register, you are required to pay GST. So from 1/10/2023 to 5/11/2023, are you required to pay GST? Yes. But can you recover the GST from the customer? No. No, you cannot recover the GST from the customer. Why you cannot recover the GST from the customer? When you got the registration certificate 5/11, how can you recover the GST from the customer? You cannot recover the GST from the customer during this period. Then what I should do, sir? You give a revised tax invoice after registration certificate within 1 month to recover the GST for the outward supplies during this period. Okay. For the outward supplies, between which date? 1/10/2023 and 5/11/2023. Revised tax invoice. Revised tax invoice. When? After 5/11/2023, but within, what is that, 1 month? 5/12/2023. So for the outward supplies during this period, you cannot give invoice as and when the supply is made. Why you cannot give invoice? Because you are not getting the registration certificate. So you can give the revised tax invoice. When you can give the revised tax invoice? After 5/11, but within 5/12, 1 month. 1 month after registration certificate, that is 5/12. You got the clarity? Yes or no? Please read the provision. Please read the provision. What does it say? Every registered person who has been granted registration with effect from a date earlier than the date of issuance of certificate of registration. Correct? When he got the registration certificate 5/11, but when he is effectively registered 1/10, he may issue revised tax invoice. Why, sir, they are telling may? He may not issue also. If the customer is telling, I will not pay, you do whatever you can, means how I can give invoice? You understood? If my customer says, okay sir, I will pay, means I can give. If the customer says, I will not give, at the time itself you should have asked, why are you coming and asking me now, means, so I cannot recover. So that's why they are using the word may. May issue revised tax invoice in respect of taxable supplies affected during the period starting from the effective date of registration. What is the effective date of registration? 1/10 till the date of issuance of certificate of registration. What is the date of issuance of certificate of registration? 5/11. What is the time limit within which it should be given? Within 1 month from the date of certificate of registration. Now, Sir, what will be taken as the effective date of registration, sir? So, if the application is made within 30 days, the date on which you are liable to register is there, na? The date on which you are liable to register, so this 110 will be taken as the effective date of registration. So, write down this 110 will be taken as the effective date of registration. This 110 will be taken as the effective date of registration. Okay. Now, another case, same situation, like same kind of another case, below that you can write, that is, you commence the business on the same date, but you are not making application for registration within this 30 days. Means you made the application for registration after 30 days. So, again right from the beginning, you don't have this option of copy paste. So, you commence the business on 15/5/2023, liable to register 1/10/2023, okay. But what has happened is that you have not made application for registration within 30 days, you made the application for registration beyond 30 days. Say, for example, if you made application for registration on, say, 2/11/2023 and you got the registration certificate on 10/11/2023. You understood the change? So, are you making application within 30 days or beyond 30 days? You are making application beyond 30 days from the date you are liable to get registered. So, you commence business on 15/5/2023, you are liable to get registered on 1/10/2023. As the application for registration is made beyond 30 days, that is 2/11/2023, and then registration certificate is granted on 10/11/2023. Now, in this case, what is the effective date of registration? 10/11/2023 is the effective date of registration. So, 10/11/2023 is effective date of registration. Effective date of registration. Now, between 1/10 and 10/11, between 1/10 and 10/11, you have some outward supplies, na? Can we give revised tax invoice? No. For the outward supplies between 1/10 and 10/11, revised tax invoice cannot be issued. Why, sir, revised tax invoice cannot be issued? Because effective date of registration as well as certificate of registration both on the same date. If there is a difference between effective date of registration and certificate of registration, then only you can give revised tax invoice. Here both are same, that's why you cannot give revised tax invoice. So, revised tax invoice cannot be issued. Cannot be issued. So, tell me when revised tax invoice cannot be issued? If application for registration is not made within 30 days. So, the penalty for not making application for registration within 30 days is that we cannot give the revised tax invoice. But are we required to pay GST out of our pocket? Yes. We have to pay GST out of our pocket, but we cannot give revised tax invoice and recover the GST from the customer. Done? So, that is what I have given here. Revised tax invoice cannot be issued if application for registration is not made within 30 days from the date when liability to register arises. So, here effective date of registration also can be tested in exam. So, what will be taken as the effective date of registration? Two provisions you need to remember. If the application is made within 30 days, then from the date we are liable to register, the date on which we are liable to register will be taken as the effective date of registration. If application is not made within 30 days from the date we are liable to register, the date on which we got the registration certificate, that will be taken as the effective date of registration. Understood? Then next one, receipt voucher. So when receipt voucher will be given, so we collected advance. What is the proof that we have collected the advance from the recipient? Recipient should get some proof na. That's why the law says supplier should give a receipt voucher to the recipient as and when advance is collected. Okay. So when receipt voucher will come? Advance, only in case of advance. So invoice not yet prepared, boss. Now I collected some advance. So I need to give a proof of advance to the recipient. What is the name of the document? Receipt voucher. And when it will be given? Immediately, as and when. So the advance is collected, immediately it should be given. So when advance payment is received, that is payment is received before issuance of invoice. Who will be giving receipt voucher to whom? Supplier. It is required only if payment is received before issuance of invoice. Time limit not specified. In brackets write down immediate. Immediate means as and when you collected the advance, immediately we need to give the receipt voucher. Then payment voucher. Who will be giving payment voucher to whom? Recipient will give payment voucher to supplier. In which case, sir? RCM case. In case of RCM, who is required to pay GST to whom? Recipient is required to pay GST to government na. So recipient will be giving a payment voucher to the supplier. So recipient will give it to supplier as and when the payment is made to supplier. So this is immediate. Immediately as and when payment is made. So receipt voucher given by supplier to recipient. Payment voucher given by recipient to supplier. But payment voucher will come only in case of RCM. Then refund voucher. Listen, first I collected advance. I gave you a receipt voucher. Now I cancelled the advance. When I cancel the advance means I cancel the supply. I am refunding the advance. Then I need to give you a refund voucher. So why? Because based on this refund voucher, I will get the GST refund from the government. Because as and when I collected advance, I would have paid GST. Now I gave you a receipt voucher. Now I am cancelling this supply. When I cancel the supply, I need to refund you the money, but already GST paid to government. So I will get the refund from the government. So that's the reason why refund voucher is issued. So again, who will be giving refund voucher to whom? Supplier will be giving refund voucher to the recipient. See this. Advance received for which receipt voucher is issued. If refunded before issuance of invoice, then refund voucher is to be issued. Who will be giving refund voucher to whom? Supplier. Not specified, but it is immediate. Immediate means as and when the refund is given, refund voucher should be given. Sir, if you read refund voucher, clearly it is mentioned if the amount is refunded before invoice. What if the amount is refunded after invoice? You read that. Refund voucher, is it given there? Advance received with receipt voucher is issued, and if refunded before issuance of invoice, then only refund voucher. What if the money is refunded after issuance of invoice? Then what is the name of the document? Already we discussed, credit note. That's what I have given as a note. If amount is refunded after issuance of tax invoice, then a credit note shall be issued by the supplier to the recipient. You understood? Then again here it's not shall, sorry, it is may. Here it's not shall, because wherever credit note comes, you use the word may. Then next, delivery challan. When delivery challan is a document issued, sir, I am making a transaction that involves movement of goods, but there is no supply. Example, movement is there but no supply. Sale on approval or on return basis. I am taking the goods to the recipient's place, but there is no supply. Only when he accepts it is supply. And then next, goods sent on job work or head office to branch office in the same state. There are many cases goods will be transported from one location to another location, but it is not supplying. In that case, that good should accompany a document called as delivery challan. So tell me when delivery challan will come? If there is a movement of goods under supply or without involving supply? Without involving supply. Then what is the document? Delivery challan. Then look into the next one. Sir, how the invoice should be prepared? Duplicate or triplicate? Triplicate means 3 copies. Duplicate means 2 copies. In case of goods, the invoice should be prepared in triplicate, 3 copies. Original for recipient, duplicate for transporter. Third copy, triplicate copy is for the supplier. You understood? In case of goods, how many copies? 3 copies. Original for recipient, duplicate for transporter, triplicate for supplier for accounting purpose. Whereas in case of services, there is no goods transporter, so therefore only 2 copies. Original for recipient and duplicate for supplier. Then next you see invoice in special cases, that is normal transactions, what is the due date of invoice? Services. Banking or insurance 45 days, others 30 days, correct? Banking or insurance 45 days, others it will be 30 days. But in case of transaction between distinct persons, what is transaction between distinct persons? Means one registration to another registration of the same person, or one registration to another establishment in the another state. This is transaction between distinct persons. If it is banking, insurance or telecom sector, no need to give invoice within 45 days or 30 days. Quarterly if you give invoice, that is okay. So before the expiry of the quarter in which supply is made, that can be given. So what is it you need to remember, pa? Generally the time limit for issuance of invoice is 45 days in case of banking and insurance, and for others it is 30 days from the date of invoice. This is a general case, but one exception is there. What is that exception? In case of transaction between distinct persons. What are the sectors? Banking, insurance and telecom. Invoice should be given at the end of the quarter. So quarterly the invoice needs to be given. Then we have 2 concepts, e-invoice and dynamic QR code in invoice. So that we will see little later, and look into page 102. HSN code in invoice. So in every invoice we need to mention HSN. What is HSN? Means harmonized system of nomenclature. That full form and all you don't have to remember. HSN code, there will be one code given for goods. That code we need to enter in the invoice. For every product one code is there, one number is there, and that number we need to enter in the invoice. But this code is 8-digit code. Should we enter all 8 digits? No, there is a relaxation. If your aggregate turnover during previous year does not exceed 5 crores, then for B2B supplies alone you need to enter 4 digits. For B2C supplies you don't have to enter that code. Again I am repeating. If your aggregate turnover during previous year does not exceed 5 crores, so for B2B alone 4 digits. But for B2C not required, that is optional. However, if your aggregate turnover during previous year exceeds 5 crores, let it be B2B or B2C, you need to enter 6 digits. So mainly in MCQ it will be tested. Okay. So what is the provision? Tell me, simple provision only. HSN code in invoice. If aggregate turnover during previous year does not exceed 5 crores, 4 digits. That too for B2B. And if aggregate turnover exceeds 5 crores, B2B as well as B2C, 6 digits we need to enter. And for services, this is for goods. For services, there is one code called as SAC, Service Accounting Code. And this service accounting code is a 6-digit code, and we need to enter all the 6-digit code in the invoice. So we don't have any relaxation. B2B, B2C like that we don't have for service accounting code. Then see this. So this is related to the discussion of various documents involved. I told you before invoice date, if you collect any amount, what is the name of that amount? Advance. What is the document to be given by supplier to recipient? Supplier shall issue receipt voucher to recipient. Whether supplier is required to pay GST on this advance? If it is goods, no. If it is services, yes. Correct? Now, payment is collected after invoice. Payment is collected after invoice. Whether receipt voucher is required, check the documents. Previous page you turn, check the documents. Payment is received after invoice. Whether receipt voucher is required or not required, read it properly. One note I have given, clearly I have given. What is that? Receipt voucher is required only if the payment is received before invoice. If the payment is received after invoice, receipt voucher not required. So if you want to give, you can give, but not compulsory. So supplier may issue receipt voucher to the recipient. Understood these 2 points? If the payment is received before invoice, supplier should issue a receipt voucher to the recipient. And in case of goods, they will not pay GST. In case of services, they will pay GST. However, if the payment is received after invoice, definitely supplier should issue or may issue a receipt voucher. Then, suppose if the payment is refunded before invoice, if the amount is refunded before invoice, then what is the name of the document? Refund voucher. But is refund voucher mandatory or optional? Optional. Refund voucher may be issued. They did not say shall be issued. Refund voucher may be issued. So supplier may issue refund voucher to the recipient. Now, in case of goods, they did not pay any GST, so the question of refund does not arise. But in case of services, on advance already they paid GST na. Now they will get the refund of GST paid on advance because they have cancelled the transaction and they gave the refund. Okay. Now, alternatively, supplier will say, I will not give you refund. I will not give you refund of GST. I will give you refund of the value, but I will not give you refund of GST. Example, you booked a marriage hall. You booked a marriage hall and you paid booking advance 1 lakh plus GST 18,000. Now, the marriage date got postponed, or you want all the parties should be willing to accept that marriage hall. Na? You are from the bride side, but groom side they are telling, no, this marriage hall we did not like, so some other marriage hall is required. Now, you will cancel the booking of this marriage hall. When you cancel the booking, what happens? The person will sell, the marriage hall person will sell, boss, I will refund you 1 lakh only, 18,000 I will not refund. How much you paid at the time of booking? 1 lakh 18,000. But they are telling I will give you only 1 lakh, I will not give you 18,000 as refund. Means they are not giving refund voucher. Are you getting? They are telling I cannot get refund and all 18,000, so I will not give you refund voucher and I will give you only 1 lakh. In that case, is there any recourse available to the recipient? Yes. Recipient can claim the refund of that 18,000. Is it clear? There is an option given in the portal wherein if you are an unregistered recipient, even if you are an unregistered recipient, you just create a login and password. So what you can do? You can go to the portal and you can submit the refund application by showing the receipt voucher, because at the time of advance you got the receipt voucher, and then your bank statement stating that only 1 lakh got credited. So the difference 18,000, you will be able to get it as a refund. Okay. So this is a practical application. Lot of people don't know. Please educate them. If the recipient has not issued refund voucher, burden of GST on advance is on the recipient, and such recipient, even though unregistered, can claim refund. Okay. Then next, suppose if invoice is prepared and thereafter amount is refunded or the supply is cancelled, then what will happen? Credit note. Either, and again credit note is shall or may. So supplier may issue a credit note. Change this. Supplier may issue credit note. Supplier may issue credit note to recipient. And what will happen when the supplier issues a credit note to the recipient? Liability will be reduced. Alternative is there, sir? Yes. Listen, there is a time limit to give the credit note. What is the time limit to give the credit note? 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. Now the time limit is over. I cannot give a credit note to you. Is there any way I can get the reduction in liability? Yes. I can go for refund. Supplier can go for refund, stating that, sir, the supply is cancelled, but the time limit over. I cannot give a credit note. Unnecessarily I paid GST. So under excess payment of GST, I can get the refund. See the R, second option. Refund can be claimed under excess payment of tax by the supplier. Suppose third alternative is also there. Suppose supplier don't want to claim refund, can recipient claim the refund? Yes. Alternatively, recipient also can claim the refund even if unregistered. Okay. So what are the three alternatives? Sir, invoice prepared, thereafter supply is cancelled. What are the three alternatives? Alternative 1, supplier will give a credit note to the recipient. Alternative 2, supplier can claim refund. Suppose if supplier says, I will not be refunding you GST component, then in that case, recipient can claim the refund. So mark this chart as very, very important. So because of all these options, so it can be tested as a theory question, like descriptive question, situation based question they can ask. Then see this, GST implications on debit note and credit note already we discussed. What will happen when a debit note is issued? Supplier liability increased. And what will happen to the recipient's ITC? Increase. And when debit note is given, when there is a increase in invoice value. Then what will happen when a credit note is issued? Supplier liability gets reduced. And what recipient has to do based on credit note? Reverse the ITC. Okay. And so what is the time limit for issuance of credit note? 30th November of succeeding financial year or date of filing and return, whichever is earlier. Now remember, not only here, total in 5 places the time limit is same. What are those 5 places? Time limit for availment of ITC, time limit for taking the credit, time limit for issuance of credit note, time limit for rectification of GSTR1, GSTR1 is a return, time limit for rectification of GSTR3B, time limit for rectification of GSTR8, TCS return. For these 5 cases, the time limit is same. What is that time limit? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. What are the 5 places, pa? Time limit for availment of ITC. Number 2, time limit for issuance of credit note. Number 3, time limit for rectification of GSTR1. Time limit for rectification of GSTR3B, rectification of GSTR8. Okay. So in these 5 places the time limit is common, don't forget. Anywhere it can be tested as MCQ. Okay. But in these 5 places if you see the time limit is same. Then look into this illustration 5. A Limited, a GST registered supplier manufacturer, has supplied goods under the cover of a tax invoice, 20,000 plus 5% GST. Tax invoice is dated 30th August 2020 and has been reported in the return file for month August 2020. What is the date of tax invoice? 30th August 2020. And what shall be the GST treatment under the following situations? Also discuss the corresponding documentation required. So if the invoice is dated 30th August 2020, what is the financial year for which this invoice is given? 2021. For the financial year 2021, what is the due date of issuance of credit note? 30th November 2021 or date of filing annual return, whichever is earlier. But we don't have the date of filing annual return in the question. So 30th November 2021 is the time limit by which the credit note to be issued for this invoice, correct? Now see the situation 1. Goods are returned by the recipient in December 2020 and supplier returned the full amount of 21,000. First thing that you need to check is whether full amount got refunded or not. Whether full amount is returned. How much collected by the supplier? 21. How much is returned by the supplier? 21. Now, second, is the credit note time limit satisfied or not satisfied? What is the time limit by which credit note to be issued? 30/11. And when the return has happened, December 2020, is December 2020 within 30th November 2021? Are the 21? This is 20. So, is it within 30 November 2021? So, tell me whether credit note can be issued or cannot be issued. Can be issued, that is the answer. For the first situation, the answer is credit note can be issued. Reason, full amount is refunded and the time limit for issuance of credit note is satisfied. Because of this, what will happen to the liability of the supplier? The liability of the supplier gets reduced by how much? 1,000. In which month? In the month in which the credit note is issued. What is the month in which credit note is issued? When the return happened? December. So, December 2020 they will give a credit note and their liability gets reduced. Please quickly go through the answer. See the answer for situation 1. In such case, supplier can issue credit note under section 34. He shall declare credit note in the return filed for December 2020. He will get the adjustment benefit, that is reduction in output tax liability of 1,000 rupees. Second situation you read. Goods are returned by the recipient in December 2020 and supplier returned only 20,000, not the GST component. In that case, tell me, can the supplier issue credit note? Why? GST component is not refunded. So, therefore, the GST component burden is on whom? Recipient. Can the recipient claim refund? Yes. But supplier cannot give the credit note. So, he shall not declare. In such case, supplier can issue credit note but not under 34. Means a regular credit note, accounting credit note can be given. And he shall not declare the credit note in return. He will not get any adjustment benefit since the incidence of 1,000 has been passed on to recipient. But now, actually the question is not asked. Suppose if they ask a question, can the recipient claim refund? Yes, you write down there in brackets, recipient can claim refund. Recipient can claim refund. Recipient can claim refund. That's why I discussed that table, one chart. So, if the supplier could not issue credit note, there are two alternatives. Supplier can claim refund or recipient can claim refund. But in this case, supplier did not give the benefit, 1,000 rupees he did not return, correct? Here we discussed three alternatives. So, in the three alternatives, supplier can give a credit note or supplier can claim refund. When supplier will claim refund? Full amount if he has returned to the recipient, supplier will claim refund, correct? Suppose if supplier has not returned the full amount, he returned only the value but not GST, then who will claim refund? Recipient will claim refund. Now apply this. In this case, supplier returned full amount? No. So who will claim refund? Recipient will claim refund. Then look into third situation. Goods are returned by the recipient in Jan 21 and supplier returning the full amount of 21,000 to the recipient. Supplier returned full amount and credit note can be issued if it is within the time limit. Check, is it within the time limit? Yes. So, credit note to be issued by 30th November 2021. Here it is only January 2021. So, credit note can be issued, and because of which the liability of the supplier gets reduced by 1,000 rupees and it will be shown in the return. So, therefore, adjustment benefit he will get. Read the answer. In such case, supplier can issue a credit note under 34. He shall declare credit note in the return filed in Jan and he will get the adjustment benefit reduction in liability of 1,000. Now, fourth situation. Goods are returned by the recipient in Jan 2022 and supplier returning the full amount of 21,000. Supplier returned the full amount. supplier returned the full amount, but check whether the credit note can be issued. So because of the time limit. Now, what is the time limit by which credit note to be issued? 30th November 2021. But now it is what? Jan 2022. So credit note cannot be issued. Okay. Then what is the alternative? Then what is the alternative available? Can supplier claim refund or recipient claim refund? Supplier or recipient? Hey, full amount returned na pa. Just now I said full amount returned na. Then you got your money. Then supplier only should get the refund. Correct or not? Don't know. So 1000 rupees. You are understanding. Concentrate pa, because these are all the points which will be tested in exam. Okay. Vairi read pa. Na kattara kadarra. You are not listening properly pa. There is no mistake on my part. I am screaming, I am shouting, I am repeating. Please, I beg you. So, kayyedtu kumburra, dayu senji gavaninga. Because these are all important for exam. And don't take it for granted. And you should write the exam. You should be successful. For that I am screaming, I am shouting. Please, please. When unga kaalla kuda vilarra. Gavaninga, please, listen, please. Okay. So, here in this case, full amount is refunded to the recipient. Then supplier only having the burden, because already he paid GST to government. So who will claim refund? Supplier will claim the refund. So recipient will not claim the refund because recipient got his money. So supplier only will claim the refund in this case. But in second situation, you see what happened in second situation. 21,000 is not returned. 20,000 only returned. So the burden is on the recipient. So who will claim refund? Recipient will claim refund. Are you understanding this? So in this case, fourth point, supplier, write down. Supplier can claim refund. Supplier can claim refund. Why supplier can claim refund? Because supplier gave entire amount to the recipient. So supplier has the burden now because already he paid the GST. So he will get the refund. He cannot issue credit note. There are total 3 alternatives. Either the credit note can be issued, or supplier can claim refund, or recipient can claim refund. Depending upon the situation, we need to write the answer accordingly. Okay. Mark this illustration as very, very important. Then look into the next one, segment 5, practice manual questions. We are left with 2 concepts in this, that is e-invoice and dynamic QR code. We will see some question answers on invoice, time of supply, then we will come back to that. Okay, say this. Look into MCQs. First MCQ, Subhas and Company, a registered person, supplies taxable goods to unregistered person. It need not issue tax invoice for the goods supplied on 16th April if the value of the goods is and dash, that is if the value of goods is dash and the recipient does not require such invoice. How much? Less than 200. Less than 200. Like this only you will do mistake in exam, yaar. 200 you remember. Who will remember before that? Less than 200 is the provision, not 200. Pa, please pa. Little bit. Okay. So it's not that you study, but you should study effectively. Okay. Just now I said less than 200. What is called as low value supplies? Less than 200. Now in these 4 options, where is it less than 200? Not 200. So option D is wrong. It is less than 200. Where it is less than 200? Option C, 150. Got it? Then just a small mistake gone. 1 mark gone. Okay. Be careful, be careful. Revise it properly, recollect it properly. Then only you will not lose the marks. Then, in case of taxable supply of services by a NBFC, invoice shall be issued within a period of dash from the date of supply of service. 45 days, good, because in case of banking sector, insurance sector, it is 45 days. The time of supply of service in case of reverse charge mechanism. A, date on which payment is made to supplier, date immediately following 60 days from the date of invoice, or date of invoice, or earlier of A and B. Earlier of A and B, that's a provision. Date on which payment is made to supplier, or 61st day from the date of invoice, whichever is earlier. The next 4, Sham Limited is receiving legal services from a lawyer, Mr. Gyan. The aggregate turnover of Sham Limited in the preceding financial year is 40 lakhs. The information regarding date of payment, invoice, etc. is as follows. Invoice issued by Mr. Gyan on 15th April. Payment received by Mr. Gyan on 5th May. Date of payment entered in the books of accounts of Sham is 1st May. What is the time of supply of services? Here little bit you need to have the knowledge of RCM also. Advocate services to business entity is covered under RCM, where liability to pay GST is on recipient. So service RCM, what is the provision? Date on which payment is made to supplier. What is the date on which payment is made to supplier? Date of entry or date of debit in the bank account, whichever is earlier. What is the date of entry in the books? 1st May. And payment received by Mr. Gyan, irrelevant. Date of entry, we have to see everything from the recipient point of view. Here Sham Limited is receiving the services. See everything from the recipient point of view. Recipient point of view, what is the date of payment? 1st May. Or 61st day from the date of invoice. Date of invoice 15th April. What is 61st day? 61st day. In April, 15 days. May, 31 days. And balance days in June. So that will be 14th, 61st day. 15 days in April, 31 days in May. So 15 plus 31, 46. For 61st day, it is 15 days we need to add. It's not 14th, it is 15th June. 15 June, 15 June. Now, what should be taken as the time of supply? Date on which payment is made to supplier, 1st May, and 61st day from the date of invoice, 15 June, which is earlier, 1st May. So 1st May will be taken as the answer. Okay. The next, in case of supply of goods for rupees 5 lakhs, following information is provided. Advance received on 1st April, advance received on 1st April, invoice is issued on 15th April, goods removed on 25th April. What is the time of supply of goods? In case tax is payable under FCM, goods FCM, what is the provision? In case of composition scheme or specified actionable claims, due date of invoice, actual date of invoice, or date of payment, whichever is earlier. But here it is not composition scheme, it is not specified actionable claim. So for others what will be taken? Due date of invoice, actual date of invoice, whichever is earlier. What is the actual date of invoice? 15th April, that's given. Actual date means the date on which invoice is given is the actual date of invoice. What will be taken as the due date of invoice? Now you need to check. Is it supply involving movement of goods or supply does not involve movement of goods? Supply involves movement of goods. How you know, sir? Removed, goods removed on 25th April. If supply involves movement of goods, what will be taken as the due date of invoice? At the time of removal. What is the date of removal? 25th April. So what will be taken as the time of supply? Due date of invoice, actual date of invoice. Which is earlier? So 15th April will be taken as the time of supply. Then invoice shall be prepared in dash in case of taxable supply of goods and in dash in case of taxable supply of services. In case of goods it will be triplicate, in case of services it will be, so option A. Then look into the descriptive question. Explain the significance of time of supply under GST law. First we discussed now 3 points that we need to write. What is that? The objective of time of supply is to determine the due date of payment of GST, is to determine the exchange rate, is to determine the rate of GST, that we need to write. Then question number 2, GST is payable on advance received for supply of goods and services taxable under forward charge. Do you agree with the statement? Support your answer with legal provisions. The answer is, the statement is incorrect and you need to write, in case of services covered under forward charge, invoice date or payment date whichever is earlier, or completion date or payment date whichever is earlier, as date of payment is one of the date for determining time of supply, GST payable on advances. However, in case of goods covered under forward charge mechanism for a person other than those opting for composition scheme and specified actionable claims, the time of supply will be due date of invoice or actual date of invoice whichever is earlier, as date of payment is not relevant for determining time of supply, GST not payable on advances. Like that provision and the discussion we need to make. Then next question number 3. This question number 3 you take for practice pass, simple question only it is. So directly, what is the time of supply in case of goods under RCM? Then even question number 4 also, time of supply in case of services under RCM, direct provision, there is nothing to apply in that. Look into question number 5. Kabira Industries Limited engaged the services of transporter for road transport of a consignment on 17th June and made advance payment for the transport on the same day, that is 17th June. However, the consignment could not be sent immediately on account of a strike in the factory and instead was sent on 20th July. Invoice was received from the transporter on 22nd July. What is the time of supply for the transporter service? If you read question 100 times also, you will not know what to do. So you need to know the provision first. So what is it they are asking? Time of supply, transporter service, and you know that transporter service is covered under RCM. GTA services in the absence of information is covered under RCM. So now services RCM, you should be recollecting the provision. What is services RCM provision? Date on which payment is made to supplier or 61st day from the date of invoice, whichever is earlier. Now you read here. What is the date on which payment is made to supplier? Read the question and tell. 17th June. 17th June is the date on which payment is made to supplier, or 61st day from the date of invoice. What is the date of invoice? 22nd July. 22nd July you take 61st day. 22nd July you take 61st day. Now how to calculate 61st day, that you know na? That you should learn. January how many days, February how many days, March how many days, that you should learn. That I cannot teach. So 22nd July, 61st day we need to count. So therefore in July there will be 31 days minus 22 means 9 days in July, and August also 31 days, and thereafter the remaining days in September. What is that remaining days in September? That also calculator, if you put 61 minus 9 minus 31, one day number will come. What is that number? 21. So 21st September will be taken as 61st day. 21st September. This and all you practice. Go home and practice in which month how many days will be there, how to find 31st day, how to find 61st day. Okay. Then, so 61st day from the date of invoice or date on which payment is made to supplier. What is the date on which payment is made to supplier? 17 June or 21st September, whichever is earlier. Which is earlier? 17 June will be earlier. That will be taken as the time of supply. Understood? Then next, question number 6. Raju Private Limited receives the order and advance payment on 5th January for carrying out an architectural design job. It delivers the designs on 23rd April. By oversight, no invoice is issued at that time and it is issued much later after the expiry of prescribed period for issuance of invoice. When is the time of supply of this service? Again, they are asking time of supply service. Now check, is it FCM or RCM? Is it given as RCM? What service it is? Architectural design job. It's nowhere in RCM. You know the list of services which are covered under RCM. Sir, CG got salads. It's not there. So it will be FCM. For services FCM, you should recollect the provision. What is service FCM? Invoice date or payment date, whichever is earlier. If invoice is given within the due date. If invoice is not given within the due date, completion date or payment date, whichever is earlier. Now you check, what is the due date of invoice? Generally, what is the due date of invoice? Other than banking or insurance, 30 days from the date of completion. Now in the question, you scan and tell me what is the completion date. What is the completion date? 23rd April. From 23rd April, you add, so 30 days. You add 30 days. So 23rd April, April 30, 30 minus 23 is 7 days. So remaining 23 days in May, 23rd May is 30th day. But when the invoice was given, no invoice is issued at that time after expiry of the prescribed period. Means they have not given invoice. When they have not given invoice, what should be taken as the time of supply? Completion date or payment date, whichever is earlier. What is the completion date? 23rd April. Payment date? 5th January. Which is earlier? 5th January, because January will come before April. So 5th January will be taken as the time of supply. Okay. Then next, question number 7. Investigation shows that 150 cartons of ceramic capacitors were dispatched on 2nd August, but no invoice was raised and the transaction, that is dispatch of cartons, were not entered in the accounts. There was no evidence of receipt of payment. What is the time of supply of 150 cartons for the purpose of payment of tax? Time of supply goods, cartons means goods. So time of supply goods. Anywhere in the question it is given as RCM? No, so therefore it will be FCM. In case of goods FCM, what is the provision? Actual date of invoice or due date of invoice, whichever is earlier. It's nowhere given in the question as composition scheme or specified actionable claim. So that's why we will take actual date of invoice or due date of invoice, whichever is earlier. What is the actual date of invoice? Check in the question. No, we don't know. No invoice was raised. So there is no actual date of invoice. Due date of invoice. So due date, usually what is the due date of invoice if supply involves movement of goods? At the time of removal. What is the time of removal? 2nd August. So 2nd August will be taken as due date. Actual date not there. So that 2nd August itself is taken as the time of supply. Okay. So due date of invoice, actual date of invoice, whichever is earlier. Due date 2nd August, actual date not there. So therefore due date itself is the time of supply. Then, so we will just stop here and we'll complete that e-invoice and dynamic QR code and then come back to this. So please look into page 99. e-invoice and dynamic QR code. These are two latest concepts, and on this already they have asked questions, already they started testing questions on this. And mainly what is e-invoice, who is required to give invoice, who is not required to give invoice, this is what you need to understand. Only just three aspects. First, what is e-invoice, who is required to give invoice, who is not required to give invoice. What is invoice? A normal invoice we will upload in the portal. What portal? Invoice registration portal, and obtain three things for that normal invoice. Then it is called as a e-invoice. What are those three things? So, invoice reference number, then QR code, quick response code, and digital signature signed by the department. Then it will be called as a e-invoice. So, what is a e-invoice? Obtaining three. What are they? Invoice reference number, then QR code, and then digital signature. For a normal invoice is known as e-invoice. Obtaining these three things. From where we need to obtain these three things? From invoice registration portal. With respect to a normal invoice, then it is called as e-invoice. You understood now what is e-invoice? Let's see how this process works. You can check that e-invoice process in page 101. This is not for exam, just for understanding purpose only. But for exam they will ask what is an e-invoice. You need to write this. E-invoice process they will not usually ask, but even if it asks also you should write something. That's why I am discussing this. So, what is a e-invoice process? First, total there are 9 steps involved. See step number 1. There is a taxpayer who will prepare a normal invoice using his ERP or billing software, and that normal invoice will be converted into one machine readable language. What is that machine readable language? JSON, Java Script Object Notation. You don't have to remember the expansion of that because that's a software language. So, it should be converted into .json file, because invoices may be prepared in different formats, .png, .pdf, like that, .htm, different formats we can prepare. But ultimately all these should be converted into a common format, that common format only .json, and after converting it into that format, we will upload that in the invoice registration portal. So, step 1, preparation of normal invoice using accounting software. Second step, converting into JSON file. Thereafter uploading it into invoice registration portal, IRP. Then step 4, you see, IRP will do deduplication check. Deduplication check means, so they will check whether the same invoice is already uploaded or not, because duplication should not be there. So, they will check that. Thereafter, invoice registration portal will be affixing 3 things. What are those 3 things? Invoice reference number, digital signature, and QR code, and it will be sent to GST system and e-way bill system. So, from invoice registration portal it will go to GST system. So, we do not have to add this invoice in our return, automatically it gets added. Again, e-way bill, we do not have to add this invoice, automatically e-way bill will be generated. So, from where to where it will go? Invoice portal to GST portal as well as e-way bill portal. And thereafter, step number 7 and 8, you see, in the GST portal, supplier GSTR1 gets updated and recipient GSTR2B gets updated. So, supplier will be required to furnish his details of outward supplies in one return called as GSTR1, and whatever details of supplier will be reflected in recipient's 2B. So, therefore, supplier GSTR1 also gets updated, recipient 2B. So, inward supply details will be available in which return? 2B return. So, 2B of the recipient also gets updated. Then, your recipient, you can check whether this invoice is authentic or not. Is it a fake invoice or a genuine invoice? You can check by scanning the QR code or by entering the invoice reference number, so that you will know that it is not a fake invoice. So this is the e-invoice process. Okay. Now suppose sir, I am required to give a e-invoice, but I have not given e-invoice, but I gave a normal invoice to you. I am supposed to give e-invoice to you, but I gave a normal invoice to you. Now can you take ITZ on the base of this? No, there is a restriction. So see this note. If a supplier is required to give a e-invoice, but not issued invoice and issued a normal invoice, then recipient cannot avail ITZ even though such invoice is reflected in 2A or 2B of the recipient. Already they tested this point. It's a very, very important point. If a supplier is required to give a e-invoice, but instead gave a normal invoice, even though all conditions for availment of ITZ is satisfied, but you cannot avail ITZ with respect to this. So therefore recipient should be aware that supplier should be giving a e-invoice. So they should ask the supplier, boss, you should give a e-invoice, give the e-invoice, then only I will be enjoying the ITZ. Then next, first question we understood what is an e-invoice. Second question, who is required to give e-invoice? That is, e-invoice is applicable to whom? Listen, if my aggregate turnover, supplier, I am a registered person. If my aggregate turnover during any previous year from 17-18 to the last previous year 20-23 exceeds 5 crores, previously it was 10 crores. Now they have reduced this limit to 5 crores. For your May exam it will be 5 crores. If my aggregate turnover during any previous year does not exceed 5 crores, e-invoice not applicable. So when e-invoice applicable? Only if it exceeds 5 crores. Sir, any 1 year, sir, not necessarily all years, any one financial year, previous financial year, if it exceeds 5 crores, e-invoice applicable. For what? B2B supplies, B2C supplies, B2B supplies, only supplies to a registered person, not to the unregistered person. So aggregate turnover in any previous year from 17-18, if it exceeds 5 crores, for B2B supplies, e-invoice required. What if it does not exceed 5 crores? E-invoice not required. Then, so you understood when e-invoice is applicable. So first question, what is e-invoice? Normal invoice, uploading in invoice registration portal and obtaining invoice reference number, QR code, digital signature is e-invoice. To whom e-invoice is applicable? Registered person whose aggregate turnover during previous year exceeds 5 crores and is making B2B supplies, then e-invoice is applicable. And when e-invoice is not applicable, you remember a keyword biggest. You remember the keyword biggest. B for banking company. See the next page, page 100. B for banking company. I for insurance company. G for GTA. Another G, BIGGEST. Another G is government department or local authority. E for exhibition of a film in a multiplex theatre. S for SCZ unit. T for transportation of passengers in any mode. In these cases, even though their aggregate turnover during previous year exceeds 5 crores, they are not required to give e-invoice. Okay. So what is that biggest here? You need to remember B for. Don't write this mnemonics and all in exam. You remember this, but when you write point number 1, banking company, financial institution, NBFC, like that you write. Okay. Don't write the mnemonics. So B for banking company, then I for insurance, then G goods transport agency, another G government department or local authority, E exhibition of film in a multiplex theatre, S SCZ unit, not SCZ developer, SCZ unit. SCZ developer means the one who construct the SCZ is SCZ developer, not that. The one who do business inside the SCZ unit. And T transportation of passengers, any mode, let it be roadways or railways or airways, any person. So these are the 3 things that you need to know. Same way. Second, what is dynamic QR code? So this e-invoice concept you understood na? What is dynamic QR code? Listen, collecting the payment from the recipient by scanning the QR code is known as dynamic QR code. So, collecting the payment from recipient only by scanning QR code, no other way. You have to scan and make the payment. That is known as dynamic QR code. Okay. But why is it given as dynamic QR code? Generally, the opposite of dynamic QR code is static QR code. You go to a shop, one coffee shop or supermarket, etc. So, there one QR code they will be putting a sticker. You scan it and you enter the amount and you pay. What is the name of this QR code? Static QR code. But in dynamic QR code, the moment you scan, how much amount you need to pay will be coming. Example, Amazon, when you buy anything and select the option of pay on delivery. So, when you say GPay or PhonePe I will pay, they will show one QR code. The moment you scan the QR code, amount also will come. You can directly make the payment. That is known as dynamic QR code. You got it? So, collecting payment by the supplier by scanning the QR code is known as dynamic QR code. To whom dynamic QR code will be applicable? If their aggregate turnover, if the suppliers is a registered person and whose aggregate turnover during previous year, any previous year exceeds 500 crores, not 5 crores, 500 crores. Say this, aggregate turnover in any previous year from 17-18 exceeds 500 crores. That too for what supplies? B2B or B2C? B2C supplies, then dynamic QR code will be applicable. Understood? So, tell me to whom dynamic QR code is applicable? If aggregate turnover during any previous year exceeds 500 crores and that too they are making B2C supplies, then dynamic QR code is required. Sir, we have seen one QR code in invoice and this dynamic QR code, both are same as sir. No, no. This QR code is given by the portal. In invoice one QR code is there na, that's given by the invoice registration portal. But this dynamic QR code is based on, your POS device, one point of sale device or mobile is there, you will generate, the registered person will generate. That is what dynamic QR code is. Okay, that's a different thing. Now, who is not required to issue dynamic QR code? First we understood what is dynamic QR code. Second, we understood who is required to give dynamic QR code. Third, who is not required to give dynamic QR code. Remember, big toe, B-I-G-T-O-E. B for same, banking company. I for same, insurance company. G for same, GTA. But government department, local authority not there now, they removed it. Means they are required to give dynamic QR code. So, B-I-G. T for same, transportation of passengers in any mode. O for extra, OIDAR supplier. So, we discussed OIDR supplier located outside India and making supply to non-taxable online recipient in India, that OIDR supplier. And E same, exhibition of film in a multiplex theatre. So, tell me who are not required to give dynamic QR code. B for banking company, I for insurance company, G for GTA, T for transportation of passengers by any mode, O for OIDR supplier, where? Outside India, E for exhibition of film in a multiplex theatre. So, in these cases, dynamic QR code is not required. Got it? Now, let us see some additional points. See that page 100 on the top. Invoice should be prepared in the prescribed form. So, we need to prepare the normal invoice as per a format. That format is INV1. It is optional for a taxpayer whose aggregate turnover does not exceed 5 crores. Sir, my turnover during previous year does not exceed 5 crores, but I want to give invoice. Can I give? Yes. Why we will stop them? Actually, they are not required, but if they want to give, let them give, no issue. E-invoice gets auto-populated in GSTR1 and e-way bill. Remember, usually we will take the copies of invoice, 3 copies in case of goods, 2 copies in case of service. That copies of invoice not required if e-invoice is applicable, because anyhow e-invoice means that will be generated through portal. So, we don't have to prepare in original, duplicate, triplicate, etc. and all. See this. Physical copy of the invoice not required in case where the e-invoice is applicable. Then sir, officer checks, what is that we need to show? In the e-invoice one QR code is there na? In the mobile we can show that QR code. QR code can be produced before the proper officer for verification whenever required. It's just like driving license, you don't have to carry, you can show in the DigiLocker, correct. The DigiLocker, whatever driving license, insurance document that you show, that is accepted. Like that, you don't have to carry the copy of the invoice, just the soft copy of the invoice in you, if you have in your mobile, and if you produce the QR code, that will be sufficient. Then, suppose if I am required to give invoice, no issue. But my aggregate turnover exceeds 5 crores, but I am not required to give invoice in some cases, biggest, correct. Now what I will do, I will give a normal invoice, but the recipient knows my turnover is more than 5 crores. So he expects me to give a invoice. So in the normal invoice, I need to put a declaration. Even though my aggregate turnover during previous year exceeds 5 crores, but I am covered under the exceptions to e-invoice. So I am not required to give e-invoice. Like that, I need to put a declaration. Why? Because there is one risk. If the recipient, instead of getting e-invoice, gets a normal invoice, he cannot take ITC na. That's why upfront I should tell, boss, I am not at all required to give e-invoice, even though my turnover is more than 5 crores. The declaration we need to put. IRV hereby declare that though our aggregate turnover in any preceding financial year from 17-18 onwards is more than the aggregate turnover, we are not required to prepare an invoice in terms of rule, because we are covered under the exceptions. Then see this dynamic QR code. How to prepare a dynamic QR code? By entering these details, we need to prepare a QR code. There are a lot of apps, lot of websites, even the POS device. So bankers will be giving point of sale device na, swiping machines. In that we can generate this dynamic QR code. But to generate that, 5 data points we should give. First, we should enter supplier GSTIN. Number 2, UPI ID of the supplier. For anything we can create a QR code actually. For a website also we can create a QR code. For mobile number also we can create a QR code. For your name also we can create a QR code. The moment you scan that, so your name will be coming. So for everything QR code can be created. You just open your camera app, and if you scan, one link will come. So that link, if you click, that is called as, the place where you wanted to go. So QR code is a short way of communication. Okay. So entering these details, we will prepare a QR code basically. What are those details? Supplier GSTIN, UPI ID of the supplier, bank account and IFSC code of the supplier, invoice. Up to this is static. These 3 will not change. From invoice to invoice it will not change. GSTN of supplier will be same. UPI ID of the supplier will be same. Bank account and IFSC code of the supplier also will be same. What changes is invoice number and date and invoice amount with breakup of tax. The amount will change na, invoice to invoice. That and invoice number and date also will change. Entering these 5 details, if you create a QR code, that is called as dynamic QR code. So what are the 5 details? Supplier GSTIN, UPI ID of supplier, bank account and IFSC code of the supplier, invoice number and date, amount and tax. Okay. Now see the second point, that is UPI ID of the supplier. There is one exception. If the payment is not collected by supplier but collected by e-commerce operator or courier agency, etc., then the e-commerce operator UPI ID or courier agency UPI ID should be linked to the QR code. Example, I am a seller selling electronics through Amazon. Now you selected pay on delivery option. Now whose UPI ID should be there in the QR code? My UPI ID or Amazon's UPI ID? Amazon's UPI ID, because I am not going to collect money from you. Who is going to collect money from you? That Amazon delivery agent is going to collect from you. Due to that reason, the e-commerce operator or the courier agency UPI ID should be there. Payment collected by e-commerce operator or any other person, UPI of such e-commerce operator or other person should be mentioned. Then next, bank account and IFSC code of the supplier, there is an exception. If my bank account is connected to UPI ID, sir, every UPI ID is connected to bank account only na sir? No. Sometimes my banker only will give UPI ID. then it will be called as bank account connected with UPI ID. Sometimes I don't have account in that bank, but I get a UPI ID. For example, I have account in IndusInd Bank, but my UPI ID is Tarun Raj at OK Axis. I don't have account in Axis Bank at all. But how come I got OK Axis? Because there are only few banks which are providing UPI ID. HDFC, SBI, ICICI, Axis and Yes Bank Limited. So therefore, only these UPI IDs will be there. We may not have account in that bank, but we will be having UPI ID. Then the bank account is not connected to UPI ID. Third party UPI ID it is called as. So if your bank account is connected to UPI ID, you are not required to give the bank account details. Then invoice number and date. In case of retail sales, at a time parallelly 10 counters, each counter invoices will be generated. For example, you go to Big Bazaar or D-Mart or Palamudir or some supermarkets, there will be 4 or 5 counters. So in that counters parallelly they will prepare the invoice. That's why invoice number not required. If they adopt one unique reference number, that will be sufficient. Invoice number not required if it is a retail sales and a unique reference number is attached. Then, sir, suppose if I am collecting the payment before invoice, before generation of invoice itself the payment is collected, should the QR code be mentioned in the invoice? No, not required. That's why when you go to the shop, when you purchase, supermarket you will go. For example, Big Bazaar you take, or Reliance you take, or D-Mart you take. These people and all aggregate turnover during previous year crossed 500 crores. Now when you take the product, you move the trolley to the counter. In the cash counter, they do the billing and they will ask you one question, that is whether you are going to make payment by card or cash or UPI. If you tell UPI, what they will do? They will prepare the bill, they will show the QR code, you will scan and you will make the payment. Suppose if you say cash or card etc., what they will do? They will not prepare the invoice. They will tell amount. They will tell amount. You will make the payment. Then the card last 4 digits they will enter in the invoice and they will print and give. So here they don't have to collect the payment through QR code. So what is the important point in this? You need to remember, if the payment is collected before preparing the invoice, then it can be collected in any mode. Card, cash, QR code, any mode you can collect. But if the payment is collected after preparing the invoice, it should be collected only by scanning QR code. Say this. If the payment is received before or at the time of generating invoice, read it again. If the payment is received before or at the time of generating invoice and cross reference of such payment is mentioned in the invoice, then we don't have to collect it through QR code. Suppose sir, part amount before invoice and part amount after invoice. Now in QR code how much amount should be mentioned? Only that part which is collected after preparing invoice, that should be entered. Got it? What is the exception for QR code? If the payment is collected before preparing the invoice, then dynamic QR code not applicable even though your aggregate turnover during previous year exceeds 500 crores. Then one circular is there in this regard. Sir, e-invoice is not applicable to few people. To whom e-invoice is not applicable? Biggest, like that we discussed now. For them e-invoice not applicable. Now they provide some other services. Example, a bank provides some other service like renting of immobile property, not related to bank. It's a bank pa. Bank is providing some other service. Can bank provide some other service also? Yes. In that case, for banking service e-invoice not required, okay. For other service of the bank also e-invoice not required, yes. This biggest is not about the services, it is about the suppliers. So banking company, insurance company or GTA, if they provide any other service also, e-invoice is not applicable for them. So read this. Whether services provided by other than banking services requires mandatory generation of e-invoice. It is clarified that exemption from mandatory generation of invoice is for the entity as a whole, underline, for the entity as a whole and not for certain supplier. Therefore, service provided by bank other than banking service is also not required to generate e-invoice. Then there is one amendment below this chart. You can see taxpayer aggregate turnover greater than 100 crores shall report invoices including debit notes and credit notes within 30 days from the date of invoices. What does it mean? That is, if my aggregate turnover during previous year exceeds 100 crores, definitely I need to give e-invoice na. 5 crores if I cross itself, I need to give e-invoice. For 100 crores what they are telling, so they need to submit the data to the department as to what are all the invoices for which they have generated e-invoices, they need to submit the data. This one compliance condition. What is the time limit within which they need to report? 30 days from the date of invoices. Then see few FAQs, concentrate. My outward supply is covered under RCM. Please listen pa. My outward supply is covered under RCM. I will not pay GST. You will pay GST. My aggregate turnover during previous year exceeds 5 crores. For my outward supply, should I give e-invoice or not? You understood the question? Again, I am repeating the question. Carefully listen. I am supplier. My supplies during previous year exceeds 5 crores. So is e-invoice applicable for me? Yes. Now I am making outward supplies on which you need to pay GST. Should I give a e-invoice or should I give a normal invoice? E-invoice. Sir, it's outward supply. Once you are making an outward supply, whether you are required to pay GST under FCM or your recipient is required to pay GST under RCM, e-invoice is required if the supplier's aggregate turnover exceeds 5 crores. X Limited is making outward supply taxable under RCM, and X Limited is registered for current year and turnover during previous year exceeds, that is 5 crore, exceeds 5 crores, that is 8 crores. X Limited also making supplies on which they need to pay GST under FCM, whether e-invoice required. Underline this, e-invoice is required with respect to outward supplies covered under FCM as well as RCM. Then next question. Generally, who will be giving invoice to whom? Supplier to recipient. But in one case, recipient will give invoice to supplier. In case of RCM and the supplier is unregistered. Now listen carefully. I am your supplier. I am unregistered. You are my recipient. You are registered and your turnover during previous year exceeds 5 crores. So e-invoice is applicable for you. Now you need to give invoice to me in case of RCM. Whether that invoice should be e-invoice or normal invoice. Is it inward supply or outward supply for you? Inward supply. E-invoice is only for outward supplies. For inward supplies, e-invoice is not applicable. Normal invoice only you need to give, even though e-invoice provisions are applicable for you. So underline this. So e-invoice is applicable only for outward supplies. For inward supplies, e-invoice is not applicable. Then there is a UIN holder, unique identification number holder. UN embassy, consulate, or there is a embassy, consulate or UN agencies. Basically their outward supplies are exempted. UN agencies like UNESCO, UNICEF, WHO, these are some UN agencies. Embassies and consulates, their outward supplies are exempted. And on their inward supply, whatever GST they pay, they will get it as a refund. So they will be given a recognition in GST called as unique identification number. Basically they are unregistered persons. So when you supply to them, you tell me e-invoice dynamic QR code. Again I am repeating, UIN holders are unregistered persons. They will get a unique identification number which is not a GST registration number. Now you are supplying to them, whether it is e-invoice or dynamic QR code. Either B2B ya, B2C ya? B2C means which? E-invoice or dynamic QR code? That only I asked before. You didn't listen. So whenever we are making supply to UIN holder, it is B2C because they are unregistered. So what is the name of the document? E-invoice or dynamic QR code? Dynamic QR code. That's what. So in case of supplies to UIN holder, that is a B2C supply, and therefore the relevant document will be dynamic QR code. Then whether e-invoice and dynamic QR code is required to be generated in the following cases. Sir, I am exporting goods, always e-invoice. Remember, for export of goods or services, always e-invoice. Dynamic QR code not applicable. But in all other cases, for B2B, e-invoice. For B2C, dynamic QR code. But if they are not at all required to give, they are not required to give. Example, supply by SEZ. Supply by SEZ. They are not required to give e-invoice na. So that's why I have written as not required. But dynamic QR code is applicable to them. For dynamic QR code, what is the list? Big toe. In that big toe, SEZ is not there, which means dynamic QR code is required for them. And same way, supply by SEZ developer always required. B2B will be invoice, B2C dynamic QR code. You remember it easily. Generally for B2B, invoice. B2C, dynamic QR code. But in the case of that biggest and big toe, e-invoice or dynamic QR code not required. In case of exports, always it will be e-invoice. Now, the recipient is outside India and it's a B2C supply. Please listen. Recipient is outside India and it is a B2C supply. Now, in that case, can we collect the payment by scanning QR code? No, because I told you already UPI will not work outside India. UPI will work only in India. So, the scanning and payment outside India will not be applicable. You understood? So, whether dynamic QR code is required in case the recipient is located outside India? No. Sir, recipient outside India means export na sir, then e-invoice na sir applicable? No. Export need not be always recipient outside India. Generally export of service means recipient outside India, but export of service has got many conditions. In that, if one condition is not satisfied, so then it is not a export of service, but the recipient is outside India. So, e-invoice not applicable, dynamic QR code is applicable. There are 5 conditions for export of service. Supplier should be in India, we will learn it in place of supply chapter. Supplier should be in India, recipient should be outside India, place of supply should be outside India, consideration should be in convertible foreign exchange, like that some conditions are there. Supplier India, recipient outside India, but the consideration is not in foreign exchange, it is in Indian rupees. Then in that case it is not export of service, but the recipient is outside India. Whether we need to scan and pay? No, dynamic QR code not applicable to him. So with this we completed e-invoice, dynamic QR code, and this entire chapter we have completed, and we are left with only Q&A. So we will take a break and we will meet at 2 o'clock and we will continue with this question and answer, and then we will move on to input tax credit chapter. Okay, thank you. Okay, we will start. So we have completed so far time of supply and invoice. Related to that, some questions we have seen. Look into question number 8. An order is placed on Ram and Co. on 18th August for supply of a consignment of customized shoes. Ram and Co. gets the consignment ready and informs the customer and issues the invoice on 2nd December. The customer collects the consignment from the premises of Ram and Co. on 7th December and electronically transfers the payment on the same day, which is entered in the accounts on the next day, that is 18th December. What is the time of supply of shoes for the purpose of payment of tax? Is it goods or services? Goods. Is it given as RCM in the question? No. So therefore it will be FCM. Goods FCM, what is the provision? It is not composition scheme, it is not specified actionable claims. So actual date of invoice or due date of invoice, whichever is earlier. So what is the actual date of invoice? Check the question and tell me what is the actual date of invoice. 2nd December. What is the due date of invoice? Supply involves movement of goods or does not involve movement of goods? Does not involve movement of goods. How do you know that it is not involving movement of goods? If you check the question, it is given customer is going to come and take the goods. So when customer is going to come and collect the goods, it is supply not involving movement of goods. So what will be taken as the due date of invoice? At the time of delivery. So check when the customer is taking delivery of the goods. Customer collects the consignment from the premise on 7th December. So 2nd December actual date, 7th December due date, whichever is earlier. Which is earlier? 2nd December. That will be taken as the time of supply. So that's the answer for this question. Then next, question number 9. Meal coupons are sold to a company on 9th August for being distributed to the employees of the said company. The coupons are valid for 6 months and can be used against purchase of food items. Means identifiable voucher or non-identifiable voucher? Non-identifiable voucher, because it can be used against purchase of food items. The employees use them in various stores for purchase of various edible items on different dates throughout the 6 months. What is the date of supply of the coupons? So we need to take as it is a non-identifiable voucher at the time of redemption of voucher. So whatever is the date of redemption of voucher, that will be taken as the time of supply. Then question number 10. A firm of advocates issues invoice for services to ABC Limited. So it is already we discussed here. This already we discussed advocate services, which is covered under RCM. We saw that, and we need to just apply that provision. You can take it for practice. Similar question. So one question which we have seen above. So where is that? So in the regular descriptive portion, we have seen one question. Advocate service, what should be taken like that? So because advocate services to business entity will be covered under RCM. So RCM, what is the service RCM? What is the provision? Date on which payment is made to supplier, or 61st day from the date of invoice, whichever is earlier. Then look into question number 11. Modern security company provides service of testing of electronic devices. In one case, it tested a batch of devices on 4th and 5th September, but could not raise invoice till 19 November because of some dispute about the condition of the device on return. The payment was made in December. What is the method to fix the time of supply of service? Services, time of supply of service. What is it? We need to check whether the invoice is issued within the due date or not issued within the due date. If invoice is issued within the due date, what will be taken? Invoice date or payment date, whichever is earlier. If invoice is not issued within the due date, we need to take completion date or payment date, whichever is earlier. Now, what is the date of completion here? Generally, when the invoice to be given within 30 days from the date of completion. What is the date of completion in the question? 5th September, because they completed the service on 5th September. And invoice to be given by 5th October. But when are they giving invoice? 19 November. Is it within 30 days or beyond 30 days? Beyond 30 days. As the invoice is not issued within 30 days, we need to take completion date or payment date, whichever is earlier. What is the completion date? 5th September. Payment date is December. So whichever is earlier, 5th September or December, whichever is earlier is what? 5th September. So that will be taken as the time of supply. Then question number 12. Question number 12 is related direct provision. It is related to services under FCM. So this you can try. This is a simple question only. Look into question number 13. Measures Pranav Associates. So this question number 13 is like they will connect RCM provisions with time of supply. So like that they can coin a question. Say this. Pranav Associates, a partnership firm, provided recovery agent services to Neutron Credits Limited, a non-banking financial company and a registered supplier on 15th January. So recovery agent services to NBFC. Is it covered under RCM? Yes. So in that list of services covered under RCM, agent services we have seen. Recovery agent providing service to bank or financial institution NBFC will come under RCM. So the first question here is, who is the person liable to pay GST? So you need to write as per section 9, subsection 3, read with notification 13 of 2017. Recovery agent service to NBFC is covered under RCM. where liability to pay GST is on that NBFC. Then second part of this question is related to time of supply of service. So it is service covered under RCM. For service covered under RCM, what is the time of supply provision? Date on which payment is made to supplier, or 61st day from the date of invoice. Check the question and tell me what is the date on which payment is made to supplier. Invoice for the same was issued on 7th February and payment was made on 18th April, and therefore 18th April, and bank account was debited on 20th April. So which should be taken? Date of entry or date of debit in bank account, whichever is earlier. So 18th April only taken as date of payment to supplier. And 61st day or 31st day? 61st day from date of invoice. What is 61st day from date of invoice? 7th February, you please count 61st day. From 7th February, what is 61st day? So in February, 28 days. 28 minus 7. That is 21 days in February. And then 31 days in March. So what is the remaining days in April? 9 days. Therefore 9th April will be taken as 61st day. So 18th April or 9th April, which is earlier? 9th April, that is time of supply. Then next question 14. Mr. X supplied goods for 50,000 to its customer Miss Diana on 1st January on the condition that payment for the same will be made within a week. However, Miss Diana made payment for the said goods on 2nd February and thus paid an interest amounting to 2,000. The question is simple. What is the time of supply with regard to this 2,000 rupees? What is that? Interest, late fee, penalty for delay in receipt of consideration. What will be taken? Date on which it is actually received. When is it received? 2nd February. That is taken as time of supply. Then question number 15. Sultan Industries Limited, Delhi, entered into contract with Prakash Entrepreneurs Delhi for supply of spare parts of a machine on 7th September. The spare parts were to be delivered on 30th September. Where to be delivered means supply involving movement of goods or not involving movement of goods? Involving. I have to deliver. So supply involving movement of goods. Sultan Industries Limited so removed the finished spare parts from its factory on 29 September. So 29 September is the date of removal. Determine the date by which invoice must be issued by Sultan Industries Limited under GST law. So what will be taken as the due date of invoice? Read the question properly. They are not asking time of supply. They are asking what is the due date of invoice. If supply involves movement of goods, what is the due date of invoice? At the time of removal. What is the time of removal? 29 September. So 29 September will be taken as due date of invoice. Then question number 16. MBM caretakers, a registered person, provides the service of repair and maintenance of electrical appliances. On April 1st, it has entered into an annual maintenance contract with P for its air conditioner and washing machine. Annual maintenance contract means definitely it is a service, and they entered on April 1st. As per the terms of contract, maintenance services will be provided on the first day of each quarter. So annual means definitely it is more than 3 months. So and it involves periodic payment obligations. Therefore, it will come under continuous supply of service. Okay, and quarterly they will provide the service, and payment for the same also be due on the date on which service is rendered. During the year, it provides the service on April 1st, July 1st, October 1st and January 1st in accordance with the terms of the contract. When should MBM caretakers issue the invoice for the services rendered? So here due date of installment is ascertainable from the contract or not ascertainable from the contract? Ascertainable. What is the due date? April 1st, July 1st, October 1st and January 1st. That itself will be taken as the due date of invoice. We saw a continuous supply of service. If due date of installment ascertainable from contract, such due date of installment itself is the due date of invoice. Then next 17, the aggregate turnover of Sangri Services Limited, Delhi exceeded 20 lakhs on 12th August. He applied for registration on 3rd September. What is the date on which he is liable to register? 12th August. And he made application for registration on 3rd September. Is it within 30 days or beyond 30 days? Within 30 days. And was granted registration certificate on 6th September. You are required to advise Sangri Services Limited as to what is the effective date of registration in this case. 12th August, because the application for registration is made within 30 days. So therefore, the effective date of registration is the date on which they are liable to register, that is 12th August. Then it has also sought your advice regarding period for issuance of revised tax invoice. So for which period we can give revised tax invoice? From which date to which date? 12th August to 6th September, till the date they get the registration certificate. From the date they are liable to get registered, 12th August, till the date they are getting certificate of registration, that is 6th September. For that period, they need to give revised tax invoice. What is the time limit within which the revised tax invoice to be given? Within 1 month after registration certificate. What is the registration certificate? 6th September. So 1 month means, so 6th of October. By 6th of October, the revised tax invoice is to be given. Mark this question number 17 as very important. All other questions are direct, application of like provision directly, but this little bit there involves an application of revised tax invoice that can be asked. Then 18, Sham Fabrics has opted for composition levy scheme in the current financial year. It has approached you for advice whether it is mandatory for it to issue a tax invoice. You are required to advise him regarding the same. They are under composition scheme. What is the name of the document that they need to give? Tax invoice or bill of supply? Bill of supply. So the document is, instead of tax invoice, they should issue a bill of supply. Then 19, Kidzi Toys Limited, a wholesaler of toys registered in Chandigarh, is renowned in the local market for variety of toys and their reasonable prices. Kidzi Toys Limited makes supply of 100 pieces of baby learning laptops and chat learning phones to Nancy General Store on 25th September by issuing a tax invoice amounting to 1 lakh. However, the said toys were returned by Nancy General Store on 30th September. So sales returns by when? 30th September. When they sold? 25th September. And when the goods got returned? 30th September, same month, correct? Discuss which document Kidzi Toys Limited is required to issue in such case. First, they need to give a tax invoice on supply, and as and when the goods are returned, supplier should issue or supplier may issue a credit note to the recipient by the time limit. What is that? Next year, 30th November or annual return, whichever is earlier. Then next, question number 20. Chidanand Products Private Limited is a registered supplier who has opted for composition levy in the current financial year. So they are under composition scheme. He wishes to know whether the issue of bill of supply can be dispensed under any circumstances. You are required to advise him. You read the question properly and understand the question first. The person is under composition scheme. Now the question is what? He wants to know whether the issue of bill of supply can be dispensed with. Can be dispensed with means what? So can he not issue bill of supply? Can he not issue bill of supply? If yes, in which case he cannot issue, like no need to issue bill of supply. We discussed one point. In case of low value supply, that is less than 200, neither invoice nor bill of supply, provided three conditions are satisfied. Recipient is unregistered. Recipient do not require tax invoice, and a consolidated bill of supply should be generated at the end of the day for accounting purpose. That's what we need to write here. Then question number 21. Uday Singh, a registered supplier, has received advance payment with respect to services to be supplied to Sujamal. His accountant asked him to issue the receipt voucher with respect to such services to be supplied. However, he is apprehensive as to what would happen in case a receipt voucher is issued, but subsequently no services are supplied. Please understand the question. However, he is apprehensive as to what would happen in case a receipt voucher is issued, but subsequently no services are supplied. You are required to advise him regarding the same. When a receipt voucher is issued and the supply is not made, what is the document that is to be given? Refund voucher. So upon receipt of advance, supplier will give a receipt voucher, and as and when the advance is returned and the supply is cancelled, supplier should be giving one document to the recipient. What is that? Refund voucher. That too may. Supplier may issue a refund voucher. Alternatively, supplier can claim the refund. Correct or not? Then next, question 22. Bojraj, a registered person, has availed GTA services on which he is liable to pay tax under reverse charge. He wishes to know whether he is required to issue an invoice. Please advise him discussing the relevant provisions under CGST Act and rules thereunder. So, whenever this transaction is covered under RCM, if the supplier is unregistered, then recipient will be giving tax invoice to the supplier. That's what we need to write. Then question 23. Sitaram Textiles has to send cloth for dyeing to its job worker. It wishes to know whether it needs to issue tax invoice at the time of sending the goods to the job worker. What is the document that is to be given? In case when the goods are sent from one location to another location, but it does not constitute supply, then in that case the name of the document is delivery challan, and delivery challan is required in case of goods. So our invoice is required in how many copies? Generally 3 copies. Original for buyer, duplicate for transporter, triplicate for supplier. Like that, delivery challan also we need to prepare in 3 copies. Original copy for consignee, recipient, duplicate copy for transporter, and triplicate copy for consignor. Okay, and this delivery challan should contain the details of the supplier, details of the recipient, what goods are being sent. These are some details that should be there in delivery challan. Then question number 24. Examine the following independent case of supply of goods or services and determine the time of issuance of invoice. So we need to determine the due date of invoice under each of the cases as per the provisions of CGST Act. Number 1. Shakti Enterprises, Kolkata, entered into contract with Suraj Enterprises, Surat, for supply of goods on 31st October 2021. So it is, the goods were removed from the factory, means what? Supply involving movement of goods. At factory on 11th October, as per the agreement, the goods were to be delivered by 31st October, and Suraj Enterprise has received the goods on 14th October. So what will be taken as the due date of invoice? Supply involves movement of goods at the time of removal. What is at the time of removal? 11th October 2021. Second, Trust and Fund Limited, an event management company, has provided its service for an event at Kapoor Film Agencies, Mumbai on 5th June 2021. Payment for the event was made on 19 June 2021. Services, it is services. In case of services, normal services, what is the time limit by which invoice should be issued? 30 days from the date of completion. What is the date of completion? When the event got completed, 5th June. So from 5th June, you count 30 days. That will be 5th July. That is taken as the due date of invoice. For banking or insurance only 45 days. For others it will be 30 days. Then question number 25 is easy one only, you can try that. That is related to goods, time of supply in case of goods, normal, and even this is continuous supply of service. We did one question, so based on that. 27, see question number 27, determine with reason whether the following statements are true or false. A registered person shall issue separate invoices for taxable and exempted goods when supplying both taxable and exempted to an unregistered person. True or false? False. So they are not required to give separate tax invoice and bill of supply. As the supplies are made to an unregistered person, they can give single tax invoice come bill of supply. We discussed one provision that. Then a non-banking financial company can issue a consolidated tax invoice at the end of every month for the supply made during that month. So actually it is true. So banking company, what they can do is that they can give transaction wise invoice, or they can accumulate monthly. For example, credit card statement you take. Credit card statement, what they will do during the month, whatever transactions happen, that they will accumulate and give at a time like that they can give monthly also. Then question 28, mark this question 28 as very, very important, a very good question it is. Read that. Royal Sweet Company, Delhi, a registered supplier, has furnished the details of the following few transactions which took place in November. So 11/11/2000, payment made to an advocate in Delhi. Sir, advocate services, will it come under RCM? Yes. So who is liable to pay GST? Recipient is liable to pay GST. So services RCM, what is the time of supply? Services RCM, what is the time of supply? Date on which payment is made to supplier, or 61st day from the date of invoice. What is the date on which payment is made to supplier? 11/11. Date on which payment is made. Payment made. Okay, visible? Date on which payment is made to supplier, clearly given the question itself. You don't have to search. That itself is the starting point. Payment made. Okay, payment made. So what is the date on which payment is made to supplier? 11/11. And 61st day from the date of invoice. What is the date of invoice? 7/7. 61st day. July 31 minus 7. 24. August 31. So balance days in September. 6th September. So 11/11 or 6 September. Whichever is earlier will be taken as the time of supply. You understood this? Date on which payment is made to supplier, or 61st day from the date of invoice, whichever is earlier. So which is earlier? 6th September. But actually what happened here, 6th September is the time of supply. Okay. But they are making the payment of GST in November. Time of supply is September, but they are making payment in November, which means they are paying late. As they are paying late, they need to pay interest. Is it clear or not? So now interest computation we need to make. So what is the time of supply? 6th September is the time of supply. And when are they making the payment? November. November means, so which date here? 11th November. 11th November. Now if September is the time of supply, when we need to pay GST, I told you already. If time of supply for a transaction falls in a month, we need to pay GST by next month. So what is the next month? 20th of October. That is the due date. You understood the due date? Sir, time of supply is 6th September. If time of supply is 6th September, then due date will be 20th October. And what is the actual date on which they are making the payment? 11 November. So therefore, how many days delay? How many days delay? From 20th October you count. October how many days? 11 days. And then November 11 days. So 22 days. For 22 days we need to compute the interest. Boss, you understood how to compute the interest? Sir, 6th September is the time of supply. So 20th October is the due date. But we are actually making payment on 11 November. So the delay is 22 days. For the 22 days, we need to compute on tax. So this is amount, 1,25,000 amount. But what is the tax? 18%. Sir, why 18%? So because clearly given below, CGST 9%, SGST 9%, IGST 18%. Now, check the question and tell me whether it is intra-state supply or interstate supply. Where is this Royal Sweet Company located? Delhi. Where the advocate is located? Delhi. Means it's a intra-state supply. So what is the liability that is involved in this 1,25,000? CGST, SGST. So please calculate the CGST, SGST. 1,25,000 into 9%. 11,250 and 11,250. Now on this we need to pay interest. How much is the interest? What is the total? 11,250 plus 11,250. 22,500. Now please take your calculator. 22,500 into what is the rate of interest in GST? If there is any delay in payment of GST to government, what is the rate of interest? 18%. So 22,500 into 18% into number of days. What is the number of days delay? Just now you told me 22 days. 22 divided by 365. How much? So 244 will be taken as the interest. So this interest is the hidden adjustment in this question. Okay. So whenever time of supply is given, suppose if the payment is made late, definitely there will be interest computation. You need to look out for that in the question. Then second transaction you see 2011-2000 paid sitting fees to director from Haryana for meeting held in Delhi on 15/10 and date of invoice 15/10. Now again director services to company is also coming under RCM. Yes or no? Now in case of director services to company, what will be taken as the time of supply? Date on which payment is made to supplier. What is the date on which payment is made to supplier? 20th November or 61st day from the date of invoice. So 15th October, 61st day. So definitely whichever is earlier is 20th November only. Why pa? Sir, 15th October, 61st day somewhere in December. But 20th November itself earlier. So whichever is earlier is 20th November. So therefore the time of supply for this transaction is 20th November and we are also paying GST on 20th November. Due to that reason, there won't be any interest computation in this case. And is it intrastate or interstate? It is interstate. Why? Because where is this company located? Delhi. But where the director is from? Haryana. Therefore, it is interstate, chargeable to IGST. So on this 75,000, you need to take 18%, that is 13,500. Understood? Then next question number 29. So this is a direct question only. You can try this. Then question number 30. See question number 30. ABC Limited, a registered supplier, has made the following taxable supplies to its customer Mr. P in the quarter ending 30th June and various dates, bill number, particulars, invoice value given. Goods in respect of bill number 102, 230 and 254 have been returned by Mr. P. You are required to advise ABC whether it can issue a consolidated credit note against all three invoices. Listen, generally sales returns credit note will be given, but all three invoices, can we give a single credit note or for every invoice we need to give a separate credit note? That is a question. We don't have to give separate credit notes for each invoice. We can give a single credit note. but simple, all these credit notes should be given to the same person. Now, all these invoices pertain to the same person or not? Yes. So, therefore, for these 3 invoices, together they can give a single credit note. So, that much only is the answer. Then question 31, this is related to time of supply, simple question only. Question 32, look into question 32. ABC Cinemas, a registered person engaged in making supply of service by way of admission to exhibition of cinematograph film in a multiplex screen, was issuing consolidated tax invoice for supplies at the close of each day. During the month, the department raised objection for this practice and asked to issue separate tax invoices for each ticket. Advise ABC Cinemas for the procedure to be followed in light of the recent notification. What is that you need to write? Generally, in case of low value supplies, value of supply less than 200, neither tax invoice nor bill of supply. However, we have an exception. In case of admission to theatre in a multiplex screen, even if the value of supply is less than 200, they need to give a separate tax invoice, and in that case, e-ticket will be considered as tax invoice. That provision we need to write. Then question number 33. An order is placed to T&Co Sholapur on 18th August for supply of fabrics to make garments. Company delivered the fabrics on 4th September and after completion of the order issued the invoice on 15th September. The payment against the same was received on 30th September. Determine the time of supply for payment under CGST. So it is what? Goods. Fabrics means goods. Goods under FCM. What will be taken as the time of supply? Due date of invoice, actual date of invoice, whichever is earlier. What is the actual date of invoice? 15th September. And when the company removed it, company delivered the fabrics on 4th September. So delivered means supply involves or does not involve? Does not involve. So the date of delivery will be taken as the due date of invoice. So 4th September or 15th September, whichever is earlier. Which is earlier? 4th September. So 4th September will be taken as the time of supply. Then second part in this question you see. HM Industries Limited engaged the service of transporter for road transport of consignment on 20th May. However, the consignment could not be sent immediately on account of strike in the factory and instead was sent on 20th July. Invoice was received from the transporter on 20th June and payment was made on 25th August. What is the time of supply of transporter service? Actually, GTA services, there are 2 options. Here, we need to write 2 answers. If GTA opts to pay GST under FCM, then services FCM. Service FCM, what is the provision? Invoice date or payment date, whichever is earlier, if invoice is issued within 30 days from the date of completion. Suppose if invoice not issued within 30 days from the date of completion, completion date or payment date, whichever is earlier. Now you observe here. So what is the date of completion? 20th May. And when the invoice is issued? 20th June. Is it within 30 days or beyond 30 days? 20th May, May 31 days will be there. So 31 days, someone should save you really. So May 31 days will be there. So 20th May means 11 days in May and June 20. 20 plus 11. Okay. If you don't know, at least use calculator and tell me the answer. 20 plus 11, how much? 31. So is it within 30 days or beyond 30 days? Beyond 30 days. So is the service, is the invoice given within 30 days or beyond 30 days? Beyond 30 days. So what will be taken as the time of supply? Completion date. What is the completion date? 20th May or date on which payment is received? 25th August. So whichever is earlier, which will be taken? 20th May. But here if you observe, read it properly. However, the consignment could not be sent immediately. So they got the product on 20th May. but they could not send immediately on account of strike in the factory and instead was sent on 20th July. Then in that case 20th July will be taken as the date of completion. So if 20th May is taken as completion, you understood, but actually we should not take 20th May as completion. Why 20th May is not completion? Because what is the date on which really they have transported? That should be taken. What is the date on which really they have transported? 20th July. And when the invoice was given? 20th June itself. Means invoice given within 30 days, even before completion itself invoice is given. So what will be taken? Invoice date or payment date, whichever is earlier. So 20th June or payment 25th August, whichever is earlier, 20th June will be taken as the time of supply. This is when? This is when? If GTA opts to pay GST under FCM. Suppose if GTA opts to pay GST under RCM, then what will happen to the time of supply? The date on which payment is made to supplier or 61st day from the date of invoice, whichever is earlier. What is the date on which payment is made to supplier? 25th August or 61st day from the date of invoice. What is 61st day from 20th June? In June 10 days and in July 31 days. So remaining days in August, that is 20th August. So 20th August or 25th August, whichever is earlier, that is 20th August will be taken. You understood? Suppose in the question clearly they have given that GTA opted for RCM, then only one provision you will write. When the question is silent, please write like this, both the provisions, then only you will get full marks. Otherwise you will be losing marks here. Then look into question 34. Utsav Private Limited of Meghalaya engaged in supply of gift items and repair services, provides you the following details. Actually this question is connected to registration chapter also. What is the applicable threshold limit in Meghalaya? Remember MMTN, the applicable threshold limit is 10 lakhs. Manipur, Mizoram, Tripura, Nagaland. Manipur, Mizoram, Tripura, Nagaland. Is it in Manipur, Mizoram, Tripura, Nagaland? No. So therefore 10 lakhs will not be applicable. Then in other cases, so exclusive supply of goods 40 lakhs. Are they exclusively supplying goods? No. So supplying goods and services. So what is the applicable limit for them? 20 lakhs. Okay. Now when are they crossing 20 lakhs? As per the question you see, when are they crossing 20 lakhs? 5th September they are crossing 20 lakhs. And what is the date on which application is made? Is it within 30 days or beyond 30 days? Within 30 days. So what is the effective date of registration? 5th September is the effective date of registration. And when are they getting registration certificate? 6th October. Now see the question. The company seeks your advice as to how it should raise revised tax invoice for supplies. So what we need to do? From the date the person is liable to register. What is the date on which he is liable to register? 5th September till the date registration certificate is granted, that is 6th October. For that period, whatever is the taxable supplies, for that a revised tax invoice should be given. What is the time limit within which a revised tax invoice should be given? Within 1 month from 6th October. Then look into question 35. Namo and Company, a registered supplier under GST, provides the following information regarding various tax invoice issued by it during the month of March. Now, for these, they are asking you to answer the following. Who shall issue a debit note or credit note under GST? So, whether debit note or credit note has to be issued for each of the above circumstances, what is the maximum time limit available for declaring the credit note in GST return? So, transaction A, you see, value of supply charged in invoice number 1,50,000 against actual taxable value of 1,30,000. What is the name of the document? Debit nota, credit nota. How much is charged in invoice? How much is actually to be charged? means we have charged in excess. So we need to reduce the invoice value. So what is the name of the document? Debit note. Who will give? Who will give? Supplier to recipient. Is there any time limit? No. Debit note ki enga pa time limit? There is no time limit for a debit note, na? Sir, first of all, debit note is not applicable, sir. It is credit note because we have charged excess amount. So, nanu debit note solra, like that you are telling. So, we are charging excess amount. When we are charging excess amount, so what is the name of the document? Credit note. Okay. So, credit note needs to be issued in this case. So, 1,50,000, 1,30,000. Reduction, credit note. Who will give? Supplier. Time limit, 30th November of succeeding financial year or date of filing annual return, whichever is earlier. B. Tax charged in invoice number 4 was 42,000 against the actual tax liability of 78,000 due to wrong HSN code being chosen while issuing invoice. Huh? Debit note, because there is an increase in the liability, correct? Who will give? Any time limit? Then third, value charged in invoice number 8 was 3,50,000 as against the actual value 4,50,000 due to wrong quantity considered while billing. Debit note or credit note? Debit note issued by supplier for the difference amount, correct? And what is the time limit? No time limit. Anytime it can be issued. Then question 36, Messrs. THARUN'S of Kolkata is engaged in trading of transmitters. On 25, THARUN'S has sent 500 units of transmitters for exhibition at Chennai on sale or return basis. Out of the said 500 units, 300 units have been sold on 28/7. For whenever the goods are taken for exhibition, what is the time limit within which it should be brought back? 6 months. Now 25 they are taking, on 28/7 they are selling. So therefore they will raise invoice on 28/7 for how many units? 300 units. Out of remaining 200, 150 brought back to Kolkata on 25/11. Is it within 6 months from the date it is sent? 25/2021 they are sending it, and 25/11/2021 they are bringing it. 25 means 25, 6 months, 6 months. So 6, 7, 8, 9, 10, 11. So 2011, 6 months will be over. So as it is not brought back within 6 months, and balance 50 units have neither been sold nor brought back. So exactly on 6 months, entire 200 units not brought back. So we need to deem it as supply and we will raise invoice. Thereafter, 25th we are getting 150 units na. For that 150 units we will be issuing a credit note. First treating it as sale we raised invoice pa, but that 150 units we are getting back, which means we need to give a credit note. So that is about this. This is related to that section. One point we saw additional points. Goods taken outside India for exhibition on that. Then question 37, what is e-invoicing? We discussed. What is the threshold limit for mandatory issuance of e-invoice? Aggregate turnover in any 1 year exceeds 5 crores. Explain advantages of e-invoicing. Auto reporting of invoice, and automatically it will get updated in the returns, and it will get updated in the e-way bill. Got it? Then next, accuracy and reconciliation. Why? Because while entering the e-invoice, so automatically data captured, but when I do data entry, instead of 1 lakh I will press 10 lakh, 10 extra, 10 lakhs. Sometimes instead of 1 lakh I will put 10 less, 10,000. So this data entry error will not be there. Early payment, because invoices automatically gets added in the return, so I know what is the due date of payment and I will make the payment, so it will avoid the interest. Cost reduction, of course, if interest is not there, it will lead to cost reduction. and reduction in tax evasion. So why it will reduce the tax evasion? Supplier has to show that invoice in the return by default. He cannot escape from payment of tax. And elimination of fake invoices. That's a bigger problem today. Recipient thinking that it is a genuine invoice, he will be trying to take credit, but it may not come in his 2B, because of which he cannot take credit. And paper elimination, 3 copies of invoice, 2 copies of invoice, etc. not required when e-invoice is issued. So therefore paperless, there is no paper that is required there. So paper elimination. So these are the advantages of e-invoicing. Once again you read this at your end later, and maybe this kind of question also can be tested, because it was an RTP question, not a task. Then question number 39, Bali Limited, a registered taxpayer, provides security services to registered persons from Mumbai office and Delhi office. The aggregate turnover of Mumbai office and Delhi office in the preceding financial year is 3 crore and 3 crore respectively. So what is their aggregate turnover? 6 crores. For the month of November in the current financial year, Bali Limited prepares duplicate invoices and does not issue e-invoice, as it is of the view that its aggregate turnover does not exceed the limit for issuing e-invoice. Briefly explain whether the view taken by Bali Limited is correct in law. No. Aggregate turnover will be computed on an all India basis, and when they have business in multiple places, we need to take the turnover of all the places. So 6 crores which exceeds 5 crores, so therefore they need to give e-invoice. Then next, question 40. So determine in which of the following independent cases e-invoicing is applicable. Harnam and Company, dealing in interior decoration products, made supplies to various registered and unregistered persons in the preceding financial year. The aggregate turnover of Harnam and Co. in the preceding financial year is 60 crores. E-invoice required or not required? Definitely required, because it exceeds 5 crores na. Then second, Rich and Poor Bank, registered under GST, has an aggregate turnover of 75 crores in the preceding financial year. Not required, even though aggregate turnover exceeds 5 crores, not required because of biggest, B for banking company. Then question 40, Fashion Queen Limited, registered under GST and dealing in baby products, has an aggregate turnover of 40 crores in the preceding financial year. The tax consultant of Fashion Queen Limited advised it to issue e-invoices mandatorily. However, Fashion Queen is of the view that since aggregate turnover is less than threshold limit, they are not required to issue e-invoice. Wrong. They are required to issue e-invoice because the applicable threshold limit is now 5 crores. Then B, Ministry of Communications and Information Technology, a government department, registered under GST, has an aggregate turnover of 52 crores in the preceding financial year. Are they required to give e-invoice? No. In the biggest, G for government department or local authority, so they are not required to give e-invoice. Then question 41, is QR code applicable to suppliers who issue invoice to unregistered persons? If no, list the suppliers to whom QR code is not applicable. What is it you will write? Big toe, that we will write. Then next, question number 42. Dreamworld Private Limited is registered under GST in the state of Haryana. During the financial year 20-23, its annual aggregate turnover was 12 crores. In the month of April, it supplies goods worth rupees 12 lakhs to Nightmare Limited, a registered taxable person. You are required to ascertain whether e-invoice is mandatory in respect of this transaction. What is their turnover during previous year? So it exceeds 5 crores, so e-invoice required. Would your answer, what would your answer if Nightmare is a SEZ unit? E-invoice not required. For SEZ unit, supplies made by SEZ unit, so even though turnover exceeds 5 crores, e-invoice is not required. Then question number 41, 42 is related to the same, whatever we have seen above, the same questions, but just the names they have changed, okay. So these are the type of questions that you can expect. So mostly on e-invoice, the type of questions is related to what? That biggest QR code, big toe. On that only questions will be asked. So just remember that mnemonic. So what is the full form of that? Enough. Now these are the various questions. Hardly some 5-6 questions only I asked you for practice. Remaining questions and all I have discussed. Okay. And because those are just repeated questions, that's why. Now we are moving on to segment 6, input tax credit. In this input tax credit, that is, we cannot imagine CA intermediate taxation paper without question on input tax credit. That much important it will be. And the weightage easily minimum 10 marks. That is a weightage of this chapter, minimum 10 marks. Okay. So please focus, concentrate, and don't leave it, because if you are leaving this chapter, definitely you cannot expect good marks in GST portion. Okay. So you should definitely prepare this. And in input tax credit, total we are having section 41, 49, 16, 17, 18, 5 sections only 5 sections, but in this 5 sections itself enough information is there. Okay. So section 41 talks about availment of ITC, section 49 talks about utilization of ITC, section 16 conditions for availment of ITC, section 17 apportionment of credit and blocked credits, section 18 input tax credit in special cases. In that, this 41 is a newly added section from last attempt. Last attempt they did not ask much questions on 41, but it was an important section for last attempt itself. And in that section 41 again they added one more rule, rule 37A. So this attempt we can expect a question on section 41. What does section 41 says? Please listen. Whenever supplier files his GSTR1 mentioning the details of outward supplies, based on the supplier's GSTR1, the details are made available to the recipient in his GSTR2B. Again I am repeating, supplier will be filing a return. What is the name of the return? GSTR1. In the GSTR1, what supplier will do? He will enter the details of outward supplies. I am supplier, you are my recipient. For me, outward supply means the same will become inward supply to you. So my outward supply details where I will be entering? In GSTR1, and that GSTR1 should be filed by due date. What is the due date of GSTR1? 11th of the month following every month is the due date. There is something called as IFF. IFF refers to invoice furnishing facility, which a person who is opting for quarterly return monthly payment scheme will be furnishing. So this we will come across in returns, IFF. So supplier will enter the outward supply details in GSTR1, and that GSTR1 is filed by the due date. Based on the supplier's GSTR1, I will mention your GSTIN while preparing the GSTR1. So the portal knows that you are my recipient. So in your login, they will be making you available GSTR2B. What does the GSTR2B contains? Your inward supplies based on GSTR1 of your supplier. You got it? What does GSTR2B contains? Details of inward supplies based on GSTR1 of your supplier. Now how much ever amount that is coming in your GSTR2B, that much only can be taken as ITC. This is known as match ITC. Now you tell me why it will not come in 2B. Why it will not come in 2B? Supplier not filed GSTR1. Super. Next. Supplier filed GSTR1 after due date. Next. Supplier filed GSTR1 but not reported the invoice. He filed GSTR1 but he did not report the invoice. Or supplier filed GSTR1, reported the invoice but wrong details were imported. So while reporting, what they have done, instead of 1 lakh, they have shown only 50,000 or 10,000 like that. Wrong details were reported. Then in that case, it will not come in your 2B. So there is a mismatch between ITC as per your books versus ITC as per 2B. You understood, pa? So write down this. So somewhere in next page, I have given the notes. Okay, there you write down mismatch between ITC as per books, mismatch between ITC as per books and ITC as per GSTR 2B. Mismatch between ITC as per books and ITC as per GSTR 2B. Okay, underline. First, reason number 1. What is the first reason? Supplier has not filed GSTR 1. Supplier has not filed GSTR 1. Number 2, supplier filed GSTR 1 after due date. First point, supplier not filed GSTR 1. Second, supplier filed GSTR 1 after due date. Sir, he filed now, sir, then it will come. Yes, not in this 2B. It will come in next month 2B. Then third point, supplier filed GSTR 1 by due date but not reported the invoice. Supplier filed GSTR 1 by due date but not reported the invoice. Then fourth point, supplier filed GSTR 1 by due date. Supplier filed GSTR 1 by due date but reported incorrect details of invoice. By due date but reported incorrect details of invoice. Because of these 4 reasons, in your 2B you will get some ITC that may not match with your books. Okay. So now, but how much can be taken as ITC? I did not tell that. What I told so far was how much will come in 2B and why will there be difference between that. Now the next part we are discussing, fine sir, it came in 2B. Can I take entire amount as ITC? No, I cannot take entire amount as ITC. I need to make 6 adjustments. In that, first 3 adjustments, it is reflected in 2B. But ineligible. You should not take. It came in 2B, but you should not take. Why sir I should not take? Because it is blocked ITC. You are not supposed to take this ITC. Or you are using it for non-business purpose. Or you are using it for exempted outward supplies. You department don't know, portal don't know whether you are using it for business purpose or non-business purpose. See pa, I will buy this iPad. I am using this for taking class, or I am taking it to my home and using it for my kids for play games. The department don't know, na, portal don't know. So I should, so they will give it in 2B. But I am using it for non-business, so I should not take ITC. Same way, whether I am using it for taxable supply or exempted supply, portal don't know, department don't know. Suppose if I am using it for exempted supply, it will come in 2B, but I should not take ITC. Same way, some blocked credits. So there are a lot of blocked credits. Blocked credits means ineligible credits. But portal don't know whether it is a block credit or not for me. So it will come in 2B, but I should not take. Got it? What are the first three adjustments? Blocked credits, used for non-business purpose, used for exempted outward supplies. It will be reflected in 2B or not reflected in 2B? Reflected in 2B but ineligible. Reflected in 2B but ineligible. So say this, ITZ as per 2B, that is the base. You need to do definitely this adjustment, okay. First you need to take ITZ as per 2B, and for this ITZ as per 2B, you need to reduce these three. What are these three blocked credits? Used for non-business, used for exempted. You write down there, reflected in 2B, reflected in 2B, GSTR 2B, but ineligible, reflected in 2B but ineligible. First three, it will come in 2B but you should not take. Next three will not come in 2B. Why it will not come in 2B? Already 4 reasons I told you. 4 reasons, okay. So it will not come in 2B, but you can take. It will not come in this month 2B, but you can take. That is 3. What are they? So these 3 you just write, not reflected in 2B, not reflected in GSTR 2B, but eligible. Not reflected in GSTR 2B but eligible. What is that? GST paid under RCM. Whenever you are paying some GST under RCM on your inward supply, the supplier may not give invoice, you are only giving invoice. So therefore, you can take ITC with respect to that. So RCM, whatever GST you paid under RCM, you can take ITC even though it is not coming in your 2B. What if it comes in 2B? Already you have taken. If it is not coming in 2B also, you can take. Already coming in 2B means don't add it again. Already it is there in 2B, don't add it. So if it is not there in 2B, but it is your RCM liability, you can take that as ITC. Number 2, reavailment of ITC reversed earlier. Initially you have taken ITC 1 month and you reversed it because of the provisions, you reversed it. Again you are reavailing it. So now it may not come in this month 2B. Say it pertains to July 2023. At that time you took, it came in July 2023 2B, you took and you reversed it in October. Now we are in December, we are reavailing it. When we are reavailing it, it may not come in December 2B, but still you can take because it was already there in July month 2B. So it's okay, you can take because first you avail, you reverse and again you are reavailing, you can take that. Third, you did not take ITC July month because of the thinking that it may not, you may not be eligible for ITC, but later you came to know that you are eligible for ITC, so you want to take ITC in December. Can you take? Yes, but it will not come in December 2B. Why? It came in 2B of July, so you can take ITC now. Is it clear? These 3 are genuine, these 3 are genuine credits. Even though it is not coming in 2B, you can take. Come on, what are those 3? GST paid under RCM, reavailment of ITC reversed earlier, and ITC pertaining to earlier tax periods not availed at that time. Okay. So therefore, these 6 cases we need to do adjustment to whatever ITC that is there in 2B. After making this adjustment, you will get one number. That is known as ITC availed in GSTR 3B, self-assessed ITC. Got it? that is known as self-assessed ITC, which is availed in 3B. Got the clarity? Now tell me here, what is the meaning of self-assessed ITC availed in 3B, or how much ITC availed in 3B? Come on. ITC as per GSTR 2B. Then 3 minus 3 plus minus blocked ITC minus non-business purpose minus used for exempted. Super. Then 3 add GST under RCM, re-availment of ITC reversed earlier, ITC pertaining to earlier tax period not availed at that time, but we are availing now. Okay. Then what is the difference between 2A and 2B? That you don't have to learn. This is just for your information. You don't have to learn this. Okay. Because you will not get question on 2A and 2B. Reason being, 2A is now irrelevant for ITC purpose, but both contains inward supply data only. 2A also contain inward supply data, 2B also contain inward supply data. But which is the relevant document for availing ITC? 2A or 2B? 2B. So 2B is only the relevant document for taking the ITC. So therefore, this difference we don't have to bother. Now see the next page for understanding the illustration. Just now I told you why it will not come in GSTR 2B, mismatch. What is the reason for mismatch? I gave you some 4 reasons now. This illustration is based on that. You are ABC and Co, a trader, and you made 4 purchases from A, B, C and D. 4 invoices, 1 lakh plus 12,000, 50,000 plus 9,000, 1 lakh 50 plus 27,000, 2 lakh plus 10,000. Now tell me, how much you will recognize as ITC in your books? 12 plus 9 plus 27 plus 10. How much you will recognize as ITC in your books? 58,000. The sum of these 4. Whatever GST paid on purchase is ITC, correct? So first you will recognize in your books 58,000. But see what happened. A filed GSTR1, no issue. B has not filed GSTR1, and C filed GSTR1, but instead of 27,000 reported only 18,000. D filed GSTR1 and he reported full data. Now as per 2B, how much is the ITC? 12 plus 18 plus 10, 40. So GST ITC 2B is only 40. Why is there is a difference between 58 and 40, 18,000? What is the difference? B not filed GSTR1 and C reported wrong details in GSTR1. That 9,000 and 9,000 has impacted, and that's why in 2B we got only 40,000. Now in your 3B, how much ITC can be taken based on this data? Based on this data, how much you can take as ITC? So you can take as ITC only 40,000. Unmatched ITC cannot be taken. But sir, when we can take this? Now, first you have taken the ITC. Yeah? Now you will call Mr. B. Boss, I made a purchase from you. You have not filed GSTR1. If you are not filing GSTR1, next time onwards I will not make purchase from you, and you pay me this 9,000 because it is a loss for me. Now what B will do? B will file the GSTR1. Whenever B files GSTR1, it will be reflected in that month 2B. So then at that time only we can take ITC. See below. Mr. B filed GSTR1 of July on 31st August. So it will be reflected in which 2B? July 2B or August 2B? August 2B. So therefore in 3B of August, this ABC can take ITC. ITC reflected in 2B of August pertaining to July 9,000. ITC availed in 3B 9,000. Understood? Then again, ABC and Co is calling Mr. C and telling, boss, if you need specs, I will order. So please do the data entry properly. 27,000, you entered only 18,000. So rectify your GSTR1. If you rectify your GSTR1, I will take ITC. Otherwise, you pay me that 9,000 rupees. Now what C will do? C will rectify his GSTR1. As and when C rectifies his GSTR1, that will come in 2B of that month. So we can take ITC. Say this. Mr. C rectified GSTR1 in December 22. Then it will come in the 2B of December 2022. And in 3B of December 2022, ABC can take ITC of 9,000. Suppose if Mr. B is not filing GSTR1, if Mr. C not rectifying GSTR1, can we take that ITC? No, it is lost to us. Understood? That amount is lost, means literally this 58 minus 40, that difference is a loss. You understood, pa? Then next, this is about this self-assessed ITC. Up to this you got clarity? Next. Now look into the next page. Reversal of ITC if the supplier not filed GSTR 3B. If supplier not filed GSTR1, first of all it will not come in 2B and we cannot take ITC. But the question is not that here. The problem is that idiot filed GSTR1 but he did not file 3B. You understood? Yeah, if he has not filed GSTR1 itself, better, it will not come in 2B. So I will not take ITC. So tomorrow interest payment will not come. But what he is doing is, he filed GSTR1. I would have taken ITC, but he did not file 3B. Now department will come and ask me, you took ITC but he did not file 3B, reverse along with interest. You understood? So that is the torture here. That is only given in section 41 read with rule 37A. Say this. Supplier reports the invoice in GSTR1 and it is filed within the due date. When supplier files the GSTR1 in due date, automatically it will come in 2B of the recipient. Correct? And as it came in 2B of the recipient, it would have been availed by recipient in 3B. Done. But see fourth step, that is the twist I am talking about. That supplier did not file GSTR 3B. By when? By September 30th of the next financial year. So until that point of time, we need to wait. Okay. Suppose if he is not filing his 3B by September 30th of the next financial year, who? Supplier. Then you should reverse the ITC which you have availed. Already you availed, na? Step 3. Step 3 already you availed. That you need to reverse. So see step 5. Reverse ITC after September 30th but before November 30th. So what is the time limit you have to reverse? 2 months. So previous financial year over. Say 23-24 over. Now 30th September 2024. Till that point of time, you see your supplier has filed 3B or not. Sir, how will I know, sir, whether my supplier has filed GSTR 3B or not? That data is available in 2A and 2B. In 2B, the moment you click on the invoice, it will show whether for this invoice your supplier filed GSTR 1 and filed 3B or not. That data is available. So in the portal, for that various softwares are there. Invoice wise you don't have to click and take. So there is a Excel import you can make and your software will tell that these are all the people who filed GSTR 3B. These are all the people who did not file 3B. Like that, one report will be thrown on your face. Now you see that, and whomsoever has not filed 3B by 30th of September next year, for those invoices and all, you have already taken ITC. Now you need to reverse the ITC. What is the time that you have? October, November, 2 months, you reverse. Maybe you can put pressure on your supplier and make them file, otherwise you reverse. If you miss November 30th, by November 30th if you are not reversing, you in the sense recipient not reversing, then what will happen? If not reversed by November 30th of next financial year, then interest at the rate of 18% shall be payable from the date of utilization till the date of reversal. What is date of utilization, sir? So not date of availment, date of utilization. Date of utilization means whichever month the balance in ITC falls below the availed ITC, that month we have utilized. It's not LIFO or FIFO, etc. We cannot decide that. You have availed 1 lakh ITC, April month. April month, what is the balance? 1 lakh 50. So you have not utilized, because whatever ITs you availed, that much balance you are having. And second month, May month, 1 lakh, you have not utilized. Then June month, 90,000, means you have utilized 10,000. How much availed? 1 lakh. What is the balance now? 90. How much it has shortfall? 10. 10,000 you have utilized. You understood? What is the meaning of date of utilization? The month in which the availed ITC, balance in ITC falls below availed ITC, that is known as utilization. So from the date of utilization, sir, it will be available in the question itself? Yes, don't worry, it will be available in the question itself. From the date of utilization till the date of reversal or payment, you need to compute the interest. Is it clear? Now, sir, it is not my mistake, sir. It is my supplier's mistake. Of course, it is your supplier's mistake. But you will be penalized for that. You understood? Why, sir? So don't buy from such a supplier next time onwards. Okay. That's okay, sir. But already I purchased na. What about that? So that we can't do anything. Okay. So you should not have taken ITC. Why you took the ITC? You should not have taken. You should have asked him to file the 3B and all. As you did not check him, I don't have water to wash mine itself. Where from I will take water to wash his? You understood? So I myself am not able to comply. Now I should also check whether my supplier filed 3B or not. I don't know. And like that they created. Literally I did not tell anything wrong. That's what literally here it is. Sir, I have to check whether that idiot has filed 3B on time or not. Otherwise, I have to reverse the ITC. Now, some legal enforcement I will do. What I will do, I will send a legal notice to my supplier. Bloody idiot, you have not filed GSTR 3B, because of which I need to reverse the ITC. See, no one will be willing to take the loss now. Correct or not? Everyone. So, because, one student sent me a message, sir, I came to your office, sir. I purchased book for 699 rupees, sir. But your admin did not return 1 rupee, sir, like that. So 700 rupees he gave up to our admin. And admin did not return 1 rupee. And he is sending me a message for that. And I don't know what to do here. Should I send 1 rupee in GPay? And I don't know. 1 rupee itself they are not leaving for me here. Okay. And mainly 699 rupees, like that we have fixed the price, because 600 and odd means psychologically 600 rupees only or 500 rupees only, like that they will feel. That's why we have kept like that. But see, 1 rupee also they are not leaving. Then lakhs and lakhs of credit will be involved. So whether we will leave? No. We will send a notice. We will send a notice to the supplier. You pay me that amount. Now what supplier will do? Rather than paying you the amount, I will be filing return. So he will file the return. Who will file the return? Your supplier will file return. Which return? GSTR 3B. Now whatever ITC that you have reversed, you can re-avail. Sir, interest, sir? Govinda, Govinda. Okay. Gone. Interest is gone. You can't do anything. That interest is an income to the government. Government also should survive na yaar. Okay. So for the sake of that, see this. Reversal of ITC after 30th September of next financial year, but before November 30th of next financial year. Suppose if your supplier filed GSTR 3B after September 30th, then whatever you have reversed as ITC can be re-availed without any time limit. So understood the 7 steps? So tell me, first step, supplier reported the invoices in GSTR1 and the GSTR1 is filed on time. Now, based on that the data will come in GSTR 2B of recipient. Whenever it comes in 2B of the recipient, can the recipient take ITC in his 3B? Yes. Step 4, supplier not file 3B by 30th September of next financial year. Step 5, as a recipient what you should do? Reverse the ITC by when? 30th November of next financial year. What will happen if you are not reversing by 30th November of next financial year? Interest payable at what rate? 18% from date of utilization till the date of reversal or payment. Okay. Then again your supplier filed GSTR 3B. Whatever ITC that is reversed can be reavailed without any time limit. So that is about this reversal of ITC. Mark this section 41 read with rule 37A. Okay. This is very important for May 24 exam. Trust me, you will be getting question in this. Okay. If not, call me. Then manner of utilization of ITCs. So far what we have seen is section 41. We completed section 41 pa. Now we are looking into manner of utilization of ITC. That is, so far we talk about availment of ITC. Where we will avail ITC? 3B. Avail means what? Taking credit. Utilization means what? Set off. Once we take the credit, we need to set off with our liability. So that is manner of utilization. That is given in section 49. Remember, there are 4 principles for reverse like manner of utilization. Principle number 1, there is no restriction with respect to IGST. Means what? IGST credit can be utilized for payment of any GST liability and any GST credit can be utilized for payment of IGST liability. So say this, we have CGST payable, CGST payable, no need to write, just I am showing you the application. Okay. CGST payable, then SGST payable, then UTGST payable, then IGST payable. This is our liability. This liability is on our outward supplies. We are making some outward supplies. On our outward supplies, we have some liability on our outward supplies. Then on our inward supplies, we have some credit. On our inward supplies, we have CGST credit, then SGST credit, then UTGST credit, and IGST credit. Okay. Now, can I use CGST credit for payment of CGST liability? Yes, I can use, but I cannot use CGST credit for payment of SGST or UTGST. However, I can use CGST credit for payment of IGST. SGST credit cannot be used for CGST or UTGST, it can be used only for SGST, if not IGST. Same way UTGST cannot be used for CGST, SGST, can be used for UTGST, if not IGST. But IGST credit is not like that. It can be used for payment of all the liabilities. Now, the last row and the last column you see. last row and last column. So there is no restriction with respect to IGST, correct? Because any GST credit we can use for payment of IGST liability, and IGST credit can be used for payment of any GST liability. That's the first point in first principle you need to remember. Now second point, with respect to other three, that is CGST, SGST and UTGST, respective credits can be utilized for payment of respective liability, and cross utilization not possible. Is it clear? Now this you can even simplify and remember. IGST is like husband and CGST is his wife. SGST, UTGST is his parents. Okay. Now he will adjust with his wife and he will adjust with his parents, but his wife will not adjust with his parents and his parents will not adjust with his wife. You understood? Clear? So therefore IGST can be set off with CGST, CGST can be set off with IGST. IGST can be set off with SGST, UTGST, SGST, UTGST can be set off with IGST. But CGST cannot be set off with SGST or UTGST, not possible. You understood? So that is what you need to remember in the first principle. So see there is no restriction with respect to IGST. IGST credit can be used for payment of any GST liability, and any GST credit can be used for payment of IGST liability. Amongst the other taxes, respective credit can be used for payment of respective liability, cross utilization not allowed. Sir, what about GST compensations? It's nowhere connected to this. GST compensations can be utilized only for payment of GST compensations. Means GST compensations is no way connected to the family. It is someone outside the family. You understand? So therefore we will not bother about them. You understood? So GST compensations can be utilized only for payment of GST compensations. No way connected to the family chain. You understood? Then next, second principle. Second principle, IGST credit. First we need to use for payment of what? IGST liability. Still I have some balance. What I can do? I can use it for payment of CGST, SGST or UTGST in any manner, any proportion. There is no restriction. That is, first IGST credit I should use for payment of what? IGST. Then between these three, so CGST, SGST, UTGST in any manner, any proportion. But it is like, usually how a male will be. They will be so selfish. First they will think about themselves only. Then only they will think about, their wife or parents are equal. So you should not be giving preference. You understood? Wife first or parents first? Nothing like that. Everyone is equal. You understood or not? And if you tell, gone, your life will be made miserable. Okay. So when wife is cuttifying you and your parents will not come for rescue. You understood? So keep them equal. First you should think about yourself, and thereafter CGST, SGST, UTGST, any manner, any proportion. You understood, pa? Then next, CGST credit. CGST credit, SGST credit and UTGST credit, first for its liability, thereafter only for payment of IGST. Okay. Now everyone is also selfish. Even wife also will be selfish. First she will think about herself, then only she will think about her husband. Same way parents also should be like that. So in new generation, you know why? Otherwise believing in the kids, if they sacrifice everything for kids, kids will throw them in old age home and all. So due to that reason, they should also be selfish. First they should use for payment of their liability, then only IGST liability. Is it clear or not? So what is the order of utilization? IGST credit first for payment of IGST. Thereafter CGST, SGST or UTGST in any manner, any proportion. Whereas remaining 3 credits, first for payment of its liability, thereafter for IGST. Then third principle, before utilizing CGST or SGST credit, the credit of IGST should be completely exhausted. Okay, so this I will tell from my practical experience. So usually this milk person, water can person, paper, etc. and all, they will come to home for collection of bill amount, monthly means. And my wife will also have money, but she will not spend her money. She will search for my wallet, and in my wallet how much money is there, that she will spend. And if my wallet don't have, that's why I will have purse, but I will not have money in that. I will not keep. I will keep everything in card, so that she will not go. And mobile and all will be with me, and it will have GPay password. So therefore I will not tell her what is the password. So I will ask her, you spend your money first, okay? So but she will not. First she will ask, you spend, if you don't have, I will spend. So like that, first which credit should be exhausted? Family husband credit should be exhausted. Thereafter only CGST or SGST credit, okay? First IGST credit should be exhausted, thereafter CGST or SGST credit. Then, so 3 principles. Tell me what is the first principle, pa? Come on. There is no restriction with respect to IGST. Means IGST credit can be utilized for payment of any GST liability. Any GST credit can be utilized for payment of IGST liability. And then number 2, second point, first principle, second point, between other 3, respective credit can be utilized for payment of respective liability. Second principle talks about order of utilization. IGST credit first for payment of IGST liability. Thereafter CGST or SGST in any manner, any proportion. Whereas all 3 credits first for its liability, thereafter IGST. Third principle, IGST credit should be exhausted first before utilizing CGST and SGST credit. Last, IGST liability. For payment of IGST liability, credit should be utilized in the following order. That is, so IGST liability, okay. First, say for example, if I have any problem, I will use my money to meet my problem. Suppose if I need any other money, so say some issue, so money required, lot of money required, then I will take my wife's jewels and I will pledge that and I will fulfill the needs. If that is also not sufficient, then only I will touch my parents. You understood or not? Same logic. First IGST liability you will use IGST credit. Thereafter wife CGST credit. Thereafter only SGST or UTGST credit. Understood? So that is 4th principle. So for payment of IGST liability, first IGST credit, then CGST credit, and then SGST or UTGST credit. So these are the 4 principles you need to remember. And the main problem in exam is with respect to this. Multiple answers are possible. When I have IGST credit, I will use it for payment of IGST liability. The excess amount I can use for CGST, SGST in any manner, any proportion. So multiple answers are possible. Now what should I do in that case? Simple. I need to just follow minimum cash outflow approach. What does it mean? See this question, you will understand that. Illustration 1. Compute net GST payable from the following data. Gross liability CGST 5000, SGST 5000, IGST 5000. GST paid on inward supply CGST 2000, SGST 2000 and IGST 10,000. Now what I will do, 10,000 I will first set off with IGST. Still how much money I have? 5,000. If I use the entire 5000 for CGST, what will happen? CGST will become 0 and SGST 5000 and 2000 I will set off with SGST, but this 2000 I cannot do anything. I have to carry forward. So the answer will be CGST 0, SGST 3000, IGST 0, which is not the correct answer. How you know, sir, it is not correct answer? Simple. See the total liability. What is the total liability? 15. And what is the total ITC? 14. Then what is the correct answer? 1000. You understood? You do something, but 1000 should be the answer. Are you getting this? You do anything, but 1000 should be the answer. Now tell me, what will you do? 1000 should be the answer. How you got 1000 as the answer? Total of liability minus total of ITC is 1000. So you should get 1000 as the answer. What will you do? First you will take 10,000 and utilize for 5,000. Don't spend more than 3,000 for SGST. So the better way is to divide equally 2,500 and 2,500. So what happened? CGST 5,000, SGST 5,000, IGST 5,000. 5,000 IGST fully gone. CGST, SGST 2,500, 2,500. And its credit also we have CGST, SGST credit 2,000, 2,000. So the net liability will become 500 and 500 and the total will be 1,000. Sir, alternative answer possible? Yes, yes. You can use 3,000 for SGST, 2,000 for CGST. Then the answer will be 0, 1,000, 0. Or you can use 3,000 for SGST and 2,000 for CGST. Then the answer will be 1,000, 0, 0. But the answer is correct. The total of the net liability should be equals to 1,000. Then the answer is correct. You understood here? So you do that calculation in exam. So whenever you get this, see the total of the ITC, see the total of the liability. That difference you should get. Then that is your correct answer. Okay. Now, so this is about section 49. So we have seen section 41, availment of ITC, section 49, utilization of ITC. Now we are moving on to section 16, conditions for availment of ITC. Listen. So section 16 says, 16 subsection 1 says, there are two basic conditions for availment of ITC. Number 1, only a registered person can avail ITC. Of course, how an unregistered person can take? There is of no use, na. What you can do with ITC? You can utilize only for payment of liability. Being an unregistered person, you don't have liability. So what will you do with the credit? So only a registered person can avail ITC. That's the first condition. Second condition, that inward supply should be used or intended to be used in the course or furtherance of business. So tell me, what are the two basic conditions? Come on, total we have 8 conditions. All these 8 conditions you need to remember. So condition wise we will remember. First 2 conditions. Only a registered person should avail ITC. Second, inward supply should be used or intended to be used. What is the meaning of intended to be used? Sir, I have not used it now. I will be using it in future. I can take ITC. But in section 32 income tax depreciation, the asset should be put to use. Then only you can claim depreciation. Correct or not? Previous year the asset should be put to use. Then only you can claim depreciation. That to put to use for a period less than 180 days. Half depreciation. Am I right here? But GST is not like that. You buy it, you keep it, you don't have to bother, you can take ITC. Even though you have not used it, you can take ITC. You understood? Used or intended to be used in the course or furtherance of business. In the course means for your existing business. Furtherance of business means something which you are going to start in future. Example, you are having a garment showroom and you want to start footwear business. So you purchased footwear. So that footwear is not in the course of business, but the footwear purchased is in furtherance of business. So you can take ITC. Is it clear? Now tell me again two conditions. Only a registered person can take ITC, and the inward supply should be used or intended to be used in the course or furtherance of business. Then next condition, your supplier should file GSTR1, correct? If he is not filing GSTR1, it will not come in your 2B. So that is also one of the condition. Your supplier should furnish the details in GSTR1, and that details which are furnished by supplier in GSTR1 should not be restricted in GSTR2B. So in GSTR2B, there are two columns, ITC available and ITC not available, like the two columns are there. So it should come in which column? ITC available column, ITC not available column? ITC available. Sir, why it will come under ITC not available? For example, blocked credit also will come in ITC available only. If you pay CGST, SGST in the other state, you cannot take ITC in this state. Example, I am registered in Tamil Nadu. I will go to Kerala for the purpose of a work, maybe audit work, or for the purpose of taking classes there, I will be going there. When I go there, I stay in a hotel there, and that hotel will raise invoice to me, and I will give my GST number. They will raise what invoice? CGST and Kerala SGST invoice they will raise on me. But am I registered in Kerala? No. I am registered in Tamil Nadu. I cannot take this CGST and Kerala SGST as ITC. By default, it will come under ITC not available. He will file return. Who? That hotel owner will file return. He will show my GSTIN, but it will come under ITC not available. You understood? So remember this point. CGST, somewhere you write down. CGST and SGST paid in another state. CGST and SGST paid in another state where the person is not registered. Another state where the person is not registered means in that state the person is not registered, okay? In another state where the person is not registered cannot be availed as ITC. CGST, SGST paid in the another state where the person is not registered, okay, in that state, okay, cannot be availed as ITC. You just remember this example. So you go to another state to stay in a hotel there, and you have got the invoice, but which invoice you will get? CGST, SGST of that state. As you are not registered in that state, you cannot take ITC even though he files GSTR1, and it will come in your 2B as ITC available, ITC not available, ITC not available. That is this point. So what is the third condition, Pa? Your supplier should file GSTR1, and in your 2B it should come under which column? ITC available. If it is in ITC not available, you cannot take ITC. Then next condition, fifth condition, recipient has valid tax invoice, debit note or prescribed tax paid document. Means you should be in possession of tax paid document. You got invoice, but the invoice is missing. Can you take ITC? No. If the invoice is missing, you cannot take ITC. You should be in possession of. Possession means what? You should be having that document. That's the reason why nowadays lot of people are giving invoice in email or mobile, WhatsApp and all, they will sending invoice because it will be stored. Physical invoice, if it is missing, we will take ITC now, but tomorrow when department come for audit, if the invoice is missing, they will ask us to reverse the ITC. Are you understanding? Because it is one of the condition. You should be in possession of tax paid document. Then next, recipient has received the goods or services. What does it mean? Invoice is January. You received goods in March. When you can take ITC? January or March? March. Only when you have received the goods or services you can take ITC. Invoice also important. You should have actually received the goods also. So therefore, only when you receive the goods you can take ITC. Invoice also required. Then tax on such supply has been paid by the supplier. By when? Your supplier should file GSTR 3B. By when? 30th September of succeeding financial year. That is this condition. Tax on such supply has been paid by supplier. Your supplier should pay tax. Where he will pay tax? In 3B he will pay tax. And by when it should be filed? By September 30th of next financial year. Got it? And how you will take ITC? How you will take ITC? Recipient. In which place you will take ITC? 3B. Without filing 3B, can you take ITC? Credit, wah means it will come. You have to file the return. So that is also one of the condition. Recipient has furnished return, that is GSTR 3B. Tell me what are the 8 conditions? Come on. Only a registered person can avail ITC. Invoice supply should be used or intended to be used in the course or furtherance of business. Number 3, supplier should furnish the details in GSTR 1. Three conditions related to supplier. Supplier should file details in GSTR 1 and it should not be restricted in GSTR 2B, and he should pay the tax by September 30th of next financial year. 3 conditions from supplier point of view. Then 3 conditions from your point of view. What is that? You should be in possession of tax paid document. You should have actually received the goods or services, and recipient should file the GSTR 3B return. Got it? So these are the conditions for availment of ITC. If any one condition is not satisfied, you should not take ITC, or if you have already taken ITC, reverse the ITC. Is it clear? Reversal means what? Reduction, cancellation of ITC. Where we will do reversal of ITC? GSTR 3B. Availment of ITC, utilization of ITC, reversal of ITC. All these 3 things we will do in GSTR 3B only. Okay. Next. Sir, suppose if you have taken depreciation on tax component, can you take ITC? For example, as per income tax section 32, you follow block of assets method. Opening WDV of the block, add purchases or additions, minus sale or disposal, and closing WDV. On closing WDV, you will compute the depreciation. Here, while doing the additions, you purchase the asset for 10 lakhs plus GST 1 lakh 20. Now total 11 lakh 20. How much you will add here? 10 lakhs or 11 lakh 20 for income tax section 32. 10 lakhs or 11 lakh 20 10 lakhs. You should add 10 lakhs. If you add 10 lakhs, then 1 lakh 20 means depreciation is only on 10 lakhs. So 1 lakh 20 you can take as ITC. Suppose if you add 11 lakh 20,000 under section 32, then in that case this 1 lakh 20,000 you cannot take ITC, because already you are claiming depreciation benefit. Because of depreciation your income tax will come down. So you cannot enjoy GST benefit. Is it clear? Say this. If depreciation claimed on tax component, ITC is not allowed. Then next section 16(4), what is the time limit for availment of ITC? Already we discussed time limit for credit note, time limit for ITC, time limit for rectification of GSTR 1, time limit for rectification of 3B, time limit for rectification of GSTR 8. What is that? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. There is an exception to this. Sir, you said we can use the ITC forever like that. But what is this time limit? This time limit is for availment of ITC. Once I took the credit, I can use it for indefinite period. I can carry forward and set off with my liability for any number of years. But for availing the ITC only, there is a time limit. Okay, clear? For availing ITC only, there is a time limit. There is no time limit for utilization. Okay. And there is one exception to this time limit for availment of ITC. What is this? Re-availment of ITC reversed earlier. Example we saw, first we availed ITC based on GSTR1, supplier GSTR1, but supplier not filed 3B. When supplier not filed 3B, we reversed. Again, as and when supplier filed 3B, we are re-availing, but by the time the time limit for availment of ITC is over, still we can avail. Yes, that's what I have given there. We can re-avail the ITC without any time limit. So the time limit is only for first time availment. If you have already taken and reversed and re-availing it, the time limit is not applicable. That's what I have given here. Exception, re-availment of ITC reversed earlier. Got it? Then one more point, if goods are received in lots, ITC can be allowed on upon receipt of last lot. Example what? Say you placed an order with me to supply the goods, 100 units. I delivered 30 units in first month, 30 units in second month, 40 units in third month. For all this, I gave you single invoice. Now, when you can take ITC, proportionately can you take 30 for first month, 30 for second month and 40 for third month? No. For all these 100 units, you can take ITC only on receipt of last lot. Suppose, if I gave 3 invoices for 30 month 1 invoice, 30 month 2, 40 month 3, then can you take the proportionate ITC? Yes. The restriction is only single invoice when the goods are received in lots or installments, only on receipt of last lot or last installment, I can take ITC. That is this point. Understood? Then next one, see this, bill to ship to transactions. Concentrate. Bill to ship to transaction means I am giving invoice to you, but delivering the invoice to a third person. So that third person is specified by you. You are asking me to deliver there. When it will happen? Lot of cases, you know, like transaction also it will happen, but basically if you see in Amazon, you want to gift something to your friend. When you want to gift something to your friend, you will buy it, it will come to your place, again you need to send it to your friend's place, unnecessarily you need to incur courier. Correct? Anyhow, Amazon is free delivery. They will deliver it free for you. So again, you need to take care of courier cost. Instead, you will place an order in Amazon wherein delivery free, anywhere delivery free. You will show the delivery address as your friend where the product needs to be delivered, but billing address will be your address. So it will ask 2 address, billing address, shipping address. You understood? Now in this case, which address can take ITC? I will tell you the problem involved. Billing address got bill, but goods not received. One of the condition for availment of ITC is that goods should have been received. Shipping address got the goods, but you don't have the bill, so you cannot also take ITC. To avoid this issue, they created a fiction, deeming fiction. The date on which shipping address has received the goods, it is deemed that the billing address has received the goods and the billing address can take ITC. Is it clear? Even though the goods are delivered to some other person, the billing address can take ITC. The date on which, so the shipping address has received the goods, it is deemed that the billing address has received and they can take ITC, and this point is equally applicable in case of services as well. I will tell you services how it will be relevant. Say there is a CA final student who is coming to me and asking me to raise invoice in the name of his CA firm. So firm is making the payment. So because yes, there are some friends of mine, so who are sponsoring the article students in their office. Reason being, so this article students will be working even after office hours also. September and all, this income tax return filing season, audit season and all, they will not see time. So they will work night, somewhere 11 o'clock, 11:30. So 12 o'clock they will go to the room, and again morning 5 o'clock they will get up and they will come to the office. Sometimes they will sleep in the office itself. This much they will slog, usually article students. And now, so as a gratitude something should be done for the students. So his principal, that article student's principal, so he is my friend. So he will every time sponsor 3 or 4 article students, and I want to raise invoice to him, but I did not take classes for him, I took classes for the article students. Can the firm take ITC? Yes. Bill to ship to is applicable for service also. I will raise invoice to CA firm, but I provided the services to the article students. So therefore, the day on which article students has received the services, it is deemed that the firm has received the services, and the firm can take ITC with respect to that. Is it clear? And only condition is that it should be in the course or furtherance of business. Means the article student should be within the articleship period. Suppose if he has completed the articleship, then it is not in the course or furtherance of business, so ITC cannot be availed. Are you getting? Even not only this, if your parents, you are part of your parents' business, now in coaching centers and all, definitely many of you might have already attended lot of coaching centers. Of course, at least one coaching center you would have attended for your regular batch, and you would have paid some fees. How many of you did not attend coaching at all? Just wanted to know. Super. See, so amazing. Exceptions are there, but only few. But otherwise, majority of you would have attended the coaching center, and that coaching center would have charged you the fees plus GST. Yes or no? How much GST? 18% GST. Your parents can take ITC on that. If your parents are having business, they can take ITC on that. But only one condition. What is that? You should be part and parcel of that business. As an employee or proprietor or partner in that capacity, they can take ITC. Are you understanding this? How, sir? This deeming fiction. Goods are delivered and services are provided to a third person. In this case, who is the third person? You. Coaching center providing services to you. Okay. To third person on the direction of the registered person. Who is the registered person? Your parents. On the direction of the registered person, deemed to be received by the registered person. Understood? Deemed to be received by the registered person, and the registered person can take ITC. ITC available to registered person, that is bill to ship to model. But only condition is what you know, you should be part of the business. Otherwise, the other condition will get disturbed. What is that other condition? Not in the course or furtherance of business. Then, so look into one exception here. This exception you please see. That is, I am your supplier, you are my recipient, you have not made payment to me. Okay, can you take ITC? You have not made payment to me. I am supplier, you are my recipient. You have not made payment to me. Can you take ITC? Anywhere it is a restriction in the conditions? No, you can take ITC. But I have to pay GST now, and you have not made payment to me. You enjoy the ITC. So they created one provision which says that if recipient is not making payment to supplier within 180 days from the date of invoice, if recipient is not making payment to supplier within 180 days from the date of invoice, so much of the ITC availed by the recipient should be reversed along with interest at 18% per annum, again from the date of utilization till the date of reversal. Why, sir, like this? I don't know, really I don't know why they created. If I am not collecting money from you, I should only charge interest to you now, but government is charging interest here. Okay, so actually I should charge interest to you. You have not made payment to me. I paid GST to government. You have not made payment to me. Then I should charge you interest. But government is telling, so if you are not making payment to supplier within 180 days from the date of invoice, you should reverse the ITC. Okay, reversal of ITC, fine. But why interest is payable on that? Interest at the rate of 18% from the date of utilization till the date of reversal. Wherever there is a gap, they are earning interest here. Sooner or later I will tell you, So somewhere in economics, you would have studied what are the major sources of income to government, direct tax, indirect tax. Sooner we should learn interest income, like that, okay. GST FinCorp, they created. So interest to interest, full interest only. Like this Marwadis, they are charging interest here. Every provision there is interest here. Money lender also better. He will not charge this much interest, okay. So what is that? See here, ITC added to the output tax liability proportionate to the amount not paid to the supplier with interest at 18% if value plus tax of goods and or services not paid within 180 days of issuance of invoice. Now, suppose sir, you paid 60% within 180 days, 40% not paid within 180 days. How much you should reverse? Proportionate to 40%. Proportionate to 40%. Whatever you paid within 180 days, you should reverse. Remaining portion. So that is what? Proportionate to the amount not paid. Understood the words? Proportionate to the amount not paid. Now, you have not made payment to me within 180 days, so you reverse the ITC and you pay the interest. Thereafter, you make the payment to me. Can you re-avail the ITC? Yes. Interest, same, gone. Interest you cannot take as ITC back. So, on payment, the ITC could be re-availed without any time limit. So, can you tell me the provision here? First tell me, if recipient not made payment to supplier within 180 days from the date of invoice, so much of the ITC availed by the recipient should be reversed along with interest. What rate? From when? Date of utilization. Till when? Date of reversal. Again, as and when you make payment to supplier, can you re-avail the ITC? For this re-availment, is there any time limit? Generally, for re-availment of ITC, there is no time limit. And this provision is not applicable in 3 cases. What are those 3 cases? Means this 180 days provision is not applicable for 3 cases. Number 1, supply covered under RCM. In case of supply covered under RCM, who is having liability? Recipient only having liability, so 180 days condition not applicable. Supply without consideration. Supply without consideration means 7(1)(c). Consideration itself is not there, where from recipient will make payment to supplier within 180 days. Number 3, payment made to some other person on behalf of supplier. 15(2)(b). You have not made payment to me, but you paid to some other person on behalf of me. But you paid, na? You paid. So this 180 days condition is not applicable. So what are the 3 cases where 180 days condition not applicable? RCM. RCM. Deemed supply without consideration. 7(1)(c). Then addition to value of supply. Payment made to some other person on behalf of supplier. So this is about 16 and there are some more additional points. We'll take a break. Thereafter we'll continue with the remaining portion. Okay, say this, page 129. Below that 16, what are the various tax paid documents for availment of ITC? Mark this as important for short note. They can ask a short note question on this. What are the various tax paid documents on the basis of which ITC can be availed? 5 documents. On the basis of tax invoice, debit note. Tax invoice who can give to whom? Either given by supplier to recipient or recipient to supplier, or debit note, or ISD invoice. ISD invoice means input service distributor invoice. Just write down there, input service distributor. Input service distributor invoice. So what is this input service distributor concept? There is a head office which will receive the input services and distribute the credit to the branch offices. So for distributing the credit, they will be giving a invoice. Example, say this. So there is a CA firm, there is a chartered accountants firm, and there is a company. So say for example, India Cements Limited. India Cements Limited, which is having 3 factories, factory 1, factory 2, factory 3. Now this CA firm provides the audit services to the factory, but raises invoice to the head office, Now the head office will take the credit and distribute the credit to the factories. For distributing the credit to the factories, they will be giving a ISD invoice. On the basis of ISD invoice also, the recipient can take ITC. So what are the various tax paid documents? Tax invoice given by supplier to recipient, tax invoice given by recipient to supplier, debit note, ISD invoice, and bill of entry. In case of import of goods, IGST paid can be taken as credit now. For that, we will be filing one document with the customs called as bill of entry. On the basis of bill of entry also, ITC can be availed. So tell me, what are the 5 tax paid documents? Come on. Tax invoice by supplier to recipient, tax invoice by recipient to supplier, debit note, ISD invoice, bill of entry. Then there are some details that must be present in an invoice for the purpose of availment of ITC. What are those minimum details that should be present? So a document to be called as invoice, if it contains GSTIN of supplier, supplier detail should be there, recipient detail should be there, and description should be there. We should know now what goods or services we purchase. Description should be there, value and tax should be there, and then place of supply in case of interstate supply. These are the minimum contents that should be there in a document to be called as a valid document for taking ITC. What are they? Amount of tax, description, value, GSTIN of supplier and GSTIN of recipient, place of supply in case of interstate supply. Then next. So reversal, we have seen if the recipient has not made payment to supplier within 180 days from the date of invoice, so much of the ITC availed by recipient needs to be reversed. So that in detail I have just given here. Supplier raises invoice to the recipient and recipient can avail the ITC, but payment is made to supplier within 180 days, no problem. If the payment is not made to supplier within 180 days, reversal or payment of ITC along with interest at 18%. What is the interest computation period? From when to when interest will be computed? From the date of utilization till the date of reversal or payment. Sir, what is this reversal or payment? Again I am repeating because many of you still not got the clarity about what is availment, what is reversal, what is utilization. Availment means taking credit. Where we will take credit? In our 3B. Utilization means set off of credit with our liability. That is known as utilization. Reversal means if we have wrongly taken some credit that needs to be reduced or cancelled, for that is known as reversal of ITC. All these things where we will do it in GSTR 3B. That's a return that contains the details. Okay. So basically, one second, in GSTR 3B, I'll just show you how this GSTR 3B will appear like. You can see here the format of GSTR 3B. In GSTR 3B, there will be ITC table, that is table 4. Okay, say this. So here in GSTR 3B, there is table 4, so which talks about, these are the details that will be there in 3B. Tax on outward supplies, then supplies, interstate supplies. So first basically liability details will be there. What are all the liability? Table 4 is about ITC and then interest late fee. Okay. Basically GSTR 3B contains how much liability I need to pay, how much is my ITC, what is my net liability, and then is there any interest or late fee. So now in this table 4, it will be like this. Table 4A talk about ITC available. How much ITC that I can take, I need to enter here. But in this, how much I can enter? Not more than what is there in 2B. First I need to take 2B and make the adjustments, and I will enter here. The moment I enter the number here, it is known as availment of ITC. Then suppose if I have excess avail, B, you see, reversed. Can you see that ITC reversed? So here I need to enter the numbers. So that is called as ITC reversed. Automatically the balance in ITC will come down. Thereafter, I will proceed for payment of GST. Okay, so that payment of GST so will be below. So when I click on payment of GST, whatever ITC I have taken, that will be set off against my liability. You understood? So that is about this utilization, availment and reversal. So what is the meaning of availment of ITC? Taking ITC, where in GSTR 3B, and utilization means set off of ITC against the liability, and then reversal means reduction of ITC. If I have enough balance in ITC, I will reduce. If I don't have balance in ITC, I have to pay. Now, interest computation period is from when to when? From the date of utilization till the date of reversal. And what is the treatment in case of proportionate payment? In case of proportionate payment, should I reverse entirely or only proportionate portion which is not paid I should reverse? Proportionate payment not paid I should reverse. What is the rate of interest to be taken? 18%. Suppose if I have availed the ITC but I have not utilized, should I pay interest? No. So because interest is computed from the date of utilization till the date of reversal. If the ITC availed is utilized. What if the availed ITC is not utilized? Then interest payment shall not arise. No interest would arise if the ITC availed is not utilized. When the ITC is not utilized, if you maintain sufficient balance in the ITC ledger, then you have not utilized the ITC. So there is sufficient ITC balance in the electronic credit ledger from the date ITC availed, means you have not utilized. As you have not utilized, which means the interest shall not arise. For example, you see this illustration 2. This illustration 2 is related to that 180 days point only. You will get a question like this. Mr. Ashok, a registered supplier of hardware parts, supplied goods worth rupees 1,68,000 inclusive of CGST 9,000 and SGST 9,000 to Messrs. Shah Traders under forward charge on 14/12/2022. What is the date of invoice? 14/12/2022. Who is the supplier? Ashok. Who is the recipient? Shah Traders. What is the value? 1,50,000. GST will be 18,000. Correct? Then continue. For which tax invoice was also issued on the same date, but Messrs. Shah Traders failed to make payment for such supply along with tax to the supplier and availed ITC of CGST SGST of 18,000 as on 21/2023. So they availed the ITC. Of course, 21/2023 correct only, because what is the date of invoice? December. December means when they will file 3B of December? 20th January. So 20th January they are taking ITC, correct only. Such availed ITC is utilized in March 23. Means this 18,000 when did they spend pa? March. So why they gave that? For interest computation. For interest computation they said like this, it will be given in the question as to when the availed ITC is utilized. You don't worry, like this it will be given. Whether Shah Trader is eligible to avail input tax credit on such supply. First, you are Messrs. Shah Traders, recipient. Can you take ITC even though you have not made payment to supplier? Yes, you can take ITC. However, you have to make payment to supplier within 180 days from the date of invoice. In this case, the payment is not made within 180 days from the date of invoice. So the ITC availed needs to be reversed. Okay. Now, in this we need to understand 3 dates. What are the 3 dates that we need to know? Date of availment. What is the date of availment of ITC? Date of availment of ITC. Then you need to know date of utilization of ITC. Date of utilization of ITC. Then you need to know date of reversal of ITC. When are you reversing it? Okay. Now, listen carefully. First, when you avail the ITC, which month invoice? December month invoice. December month invoice. See, availment of ITC, utilization of ITC, reversal of ITC. All these 3 things we do in which return? GSTR 3B. Now, what is the date of invoice? December, 14 December 2022. For that, when we will file 3B, always 3B we will file by 20th of next month. So, 20th of next month. What is 20th of next month? 20 January 2023 will be taken as the date of availment of ITC. Super. What is the date of utilization of ITC? Which month it is utilized? March. For, and where is it utilized? GSTR 3B. For March, when will you file GSTR 3B? 20th April 2023. Is it clear? They gave, we utilized it in the month of March. For March month, where is it utilized? 3B. So, when we will file 3B of March? 20th of April. So, month of utilization is March, correct only. But what is the date of utilization? Next month, 20th is the date of utilization. Then, when will you reverse the ITC? Only if the payment is not made to supplier within 180 days from the date of invoice. Now, what is date of invoice? What is date of invoice? 14 December 2022. What is 180 days from 14 December 2022? 14 December 2022, what is 180 days? You count. First, in December, 31 minus 14. 31 minus 14. How many days? 17 days in December. Then, 31 days in January. Then, 28 days in February. 31 days in March. Then again, 30 days in April. So, still how much? 143. எப்படிப்பா 43? 5 months data I told pa. 5 months data pa. Monthly 30 days pa. You understood? 5 months means there itself 30 into 5, 150 will come pa. You calculate again. Ayya, daivame. Days only you are not telling properly. I never felt this problem in any batch. Okay. So, okay. I am asking you by this time how many days? That alone you tell. So, you again calculate from the beginning. 31 minus 14, 17 you got plus like that one button will be there. Plus that. Press that. Press. What is the next month? January. December. Next January. Okay. January how many days? 31 days. Plus 31 days. Again. Press. Plus 28 days in February. Plus 2023 lo kumutta 20, how it will be? 29 days. 28 days only. How it will be 29? I am not idiot here. So, plus 28 February. Then again March 31 plus April 30. Then May 31. How much? 168. So, now in June the remaining days. So, what is that remaining days in June? 12 June 2023. Why? Oh, you said the answer. So, 12th June. For this you should clap only. 12th June 2023 is 180 days from the date of invoice. So you will come to know that you have not made payment only in the month of June. So you will reverse the ITC. Which month you will reverse the ITC? June month you will reverse the ITC. For June month, where you will reverse ITC? 3B. 3B. And that 3B for June, when you will file? 20th of July 2023. Understood how we got this 20th July 2023? Again I am repeating. Date of invoice plus 180 days. 12th June. So June month only we came to know we have not made payment. So we need to reverse in June month. June month 3B we file on 20th July. So 20th July is the reversal of ITC. So we got these 3 dates. Date of availment, date of utilization, date of reversal. Now, we need to compute the interest from when till when? Interest at 18% from date of utilization. What is the date of utilization? 24/2023 till reversal 27/2023. How many days? April 10 days, May 31 days, June 30 days, July 20 days, 91 days. For 91 days we need to compute interest. So on what amount we need to compute interest? On the ITC avail. What is the ITC avail? 18,000. And what is the rate of interest? 18% into 91 by 365. See how much is the interest that is payable? 808. You should round off to nearest to 1 rupee. So 808 rupees is the interest payable. 807 something you will get. So 808 is the interest that is payable. Understood? Now we need to reverse the ITC of 18,000 plus in addition we need to pay interest 808 rupees. Again, as and when short traders makes the payment to supplier, they can re-avail 18,000. But this 808 rupees is the loss to them. So see the answer. First ITC availed on 21/2023, 18,000. And date of invoice 14/12. Payment not made within 180 days. So 180 days from date of invoice 12/6. So they need to reverse the ITC for the June month. So see the interest computation. Input tax 18,000. Date of availing 21. Date of utilization 24. Date of reversal 27. So from 24 to 27, 91 days. So interest will be 808. So total amount that is payable is 18,808. Again, as and when they make payment, they can re-avail 18,000. So mark this illustration 2 as very, very important. You can expect a question like this. Related to interest computation as well as non-payment within 180 days. Now look into illustration 3. XYZ Limited is engaged in manufacture of taxable goods. Compute the ITC available with XYZ Limited for the month of October 2023 from the following particulars. Inputs A 1 lakh, one invoice on which GST payable was 10,000 is missing. Can we take ITC of 10,000? Why? Person availing ITC should be in possession of tax paid document. As invoice is missing, this 10,000 cannot be availed. So therefore, what is the ITC that can be availed? Only 90,000. Then inputs B 50,000. Inputs are to be received in 2 installments. First installment is received in October. Right now we are in which month? So October only first installment received. So when we can take ITC? Only on receipt of last lot or installment. So we cannot take ITC now on 50,000. Capital goods 1,20,000. XYZ Limited has capitalized the capital goods at full invoice value inclusive of GST. Inclusive of GST they have capitalized, as it will avail depreciation on the full invoice value. Can they take ITC? Why? Depreciation computed on GST component, so ITC not available. Input services 2,25,000. One invoice dated 21/2023 on which GST payable was 50,000 has been received in October. So 21/2023 means what is the financial year? Financial year is 2022-23. For financial year 2022-23, what is the time limit for availment of ITC? 30th November 2023 or date of filing annual return. For financial year 22-23, the annual return is filed on 15 September. So 15 September 2023, whichever is earlier. Which is earlier? Means ITC should be availed by 15 September. But right now we are in which month? Can we take ITC now? The time limit for availment of ITC is over. Yes, the time limit for availment of ITC is up to 30th November, but compare it with date of filing annual return. What is the date on which they file the annual return? 15 September. Whichever is earlier is 15 September. By 15 September they should have taken ITC, but right now we are in which month? October month. So we cannot take ITC on 50,000. Then how much ITC we can take? Only 1,75,000. So therefore 90,000 and 1,75,000, that is 2,65,000 is the answer. Understood? So this last point alone I am repeating again. Date of invoice 21/2023 and the financial year is 22-23. For 22-23, the time limit for availment of ITC is 30th November 2023 or date of filing annual return, that is 15 September 2023. Whichever is earlier, 15 September. But right now we are in October month, so we cannot take ITC now. Now only they have received invoice, and since they have got that, so which means they cannot take ITC because the time limit for availment of ITC is over. Then this time limit already we discussed. Now we are moving on to section 17. Section 17 talks about apportionment of credit and blocked credits. In apportionment of credit, what we understand is that, sir, I have some inward supplies which is partly used for taxable and partly used for exempted. Can I take full credit? No, I can take only proportionate ITC. Again I am repeating, I have some inward supplies, purchases, used for taxable outward supplies. Can I take ITC? Yes. I have some inward supplies, purchases, used for exempted outward supplies. Can I take ITC? No. I have some inward supplies used for both taxable and exempted outward supplies. Example, I purchased a raw material. Using that raw material, I made two finished products, finished goods A and finished goods B. Finished goods A is taxable, finished goods B is exempted. Means the common raw material is used for both taxable and exempted. So can I take full credit? No. I can take only proportionate credit. You tell me to what proportion I can take credit? Total ITC into what by what? Taxable turnover divided by total turnover. Correct, logically. For example, 20 lakhs taxable turnover, 30 lakhs exempted turnover. So out of the ITC, how much I can take? 20 by 30, that is 2 by 3 only I can take ITC. Correct. Proportionate to taxable, I can take ITC. Taxable turnover 20 lakhs, exempted turnover 10 lakhs, total turnover 30 lakhs. To what extent I can take ITC? 20 divided by 30. To that extent I can take. Simple. Same way, I have some inward supplies which is partly used for business and partly used for non-business. If I am using the inward supply fully for business purpose, can I take ITC? Yes. If I have some inward supplies fully used for non-business, non-business means what? Personal. Can I take ITC? No. I have some inward supplies partly used for business and partly used for non-business. Can I take ITC? Yes. Proportionate. Proportionate to what? Business. For example, I have used 60% for business purpose, 40% for personal purpose. How much credit I can take? 60% I can take and 40% I should not take. Is it clear? Sir, that should be given in the question, of course. Otherwise, how we can calculate? Turnover data should be given in question, then only we can calculate proportionate to taxable turnover. How much is business purpose, how much is non-business purpose should be given in the question, then only we can calculate. Otherwise, we cannot calculate. So, that will be given in the question, you don't worry. How much is business, how much is non-business, it will be specified in question. Same way, how much is taxable, how much is exempted also given in the question. Sir, zero rated supplies, where it will come? Zero rated supplies come under taxable supplies, which means we can enjoy ITC. What are zero rated supplies? Export of goods or services. Supply of goods or services to a SEZ is known as zero rated. Even though my outward supply is zero rated, the burden becomes zero, but I can enjoy ITC on my inward supplies because it will be categorized as what? Taxable supplies. So, this is simple. There is nothing in this. Proportionate ITC we can take. But the complicated point in this is that what is the meaning of exempted supplies? While doing proportionate calculation, what is the meaning of exempted supplies? So, how much we will take as proportionate ITC? Proportionate ITC availed equals to total ITC into what by what? Taxable turnover by total turnover. In total turnover, what you will take? You will take both taxable and exempted. So, what should be taken as taxable and what should be taken as exempted is a confusion. Taxable, no problem. Other than exempted is taxable. So, balancing figure. Then what is exempted? For that they gave a definition. What is the meaning of exempted supplies? But this definition is only for the purpose of non-availment or reversal of ITC, only for ITC computation. For payment of GST, what is the meaning of exempted supplies? Already we studied in segment 2. In segment 2, you can just turn the pages. We have seen what is the meaning of exempted supplies. One table we have seen. So, page 29, what is the meaning of exempted supplies? Three things will come under exempted for payment of GST. Page 29, notified as exempted, nil rated, non-taxable. These three are treated as exempted, that is for payment of GST. Goods or service which attracts nil rate are wholly exempt from tax and includes non-taxable. So, three things will come under exempted. This is for payment of GST. But for ITC definition, we have lot of exempted supplies. So, come back to this page. What is the meaning of exempted supplies? So, first three you see, notified as exempted, nil rated and non-taxable. These three are exempted for payment of GST. Just now we discussed. For ITC purpose also, it will be exempted only, no change. No change. So, what are the first 3 points you need to remember? Notified as exempted, nil rated, non-taxable. For payment of GST, it is exempted. And ITC also it is exempted. You will put it under exempted. Then, sale of land, sale of building, sale of securities and supply of warehoused goods under customs. These 4 transactions are actually not a supply. Sale of land excluded from supply. In spalled slow, land is excluded from supply. Building is excluded from supply. Securities, neither goods nor services, so not a supply. Sale of warehoused goods under customs is also excluded from supply. But these 4, even though it is not a supply, but it will be treated as exempted supply. Here there is an amendment now. Previously this point was not there. Now they have added sale of warehoused goods under customs even though it is not a supply, but it should be grouped under which category? Exempted supply. Understood here? So, first 3 points you should remember. What is that? Notified as exempted, nil rated, non-taxable. These 3 are exempted for payment of GST. Even for ITC computation, it will be kept under exempted only, exempted turnover only. Whereas 4 transactions which are not at all supply, no need to pay GST at all, but for ITC computation, we need to treat it as exempted supply. What are those 4 transactions? Sale of land, sale of building, sale of securities, and sale of warehoused goods under customs. For land, what should be taken as the value? Stamp duty value should be taken. For building also, what should be taken? Stamp duty value should be taken. Okay, we have now one value in income tax. Every time for land building, we will take that value only, stamp duty value. And suppose if it is securities, you take 1% of sale value of securities. 1% of sale value will be taken in case of securities. Warehoused goods, whatever is the sale value of such goods, that will be taken. What is the disadvantage of this? I will tell you the criminal intention of the government. See here, sir, my ITC, that is eligible ITC, that is 1 lakh, and this is common ITC. Common ITC is 1 lakh. No need to write, just listen. Taxable turnover is 20 lakhs. Exempted turnover is 10 lakhs. Now, what is the eligible ITC? What is the eligible ITC? 1 lakh into what by what? 20 divided by 30, that is 66,667 is the eligible ITC. Clear? Now, what I am doing? I am making sale of land having stamp duty value, sale of land having stamp duty value of 30 lakhs. Sale of land having a stamp duty value of 30 lakhs. Now, what will happen to the taxable turnover? Same, no change. What was the previous taxable turnover? 20 lakhs. Now also it will be 20 lakhs. Now, exempted turnover. What was the previous exempted turnover? 10 lakhs plus now the sale of land treated as exempted. The sale of land treated as exempted. Then already 10 lakhs plus now 30 lakhs. So it will be taken as 40 lakhs. Now what is the eligible ITC? 1 lakh into what by what? 20 by 60, total 20 by 60. How much I will get? 33,333. What was my ITC before? 66,667. Now, because I sold land which is not at all a supply, they are bringing it under exempted supply. You understood why are they are bringing it under exempted supply? Because my ITC they want to reduce. If ITC comes down, what will happen to the liability? Increases. Liability increases means it is revenue to the government. Correct. Even though it is not a supply, it is treated as exempted supply, mainly to reduce the ITC, common ITC of the person. Because actually land knows GST, but we should add it to the exempted turnover. Thereby, our regular ITC available 66,667 came down to 33,333. Got the clarity? That's why they created this provision. Then, next one, 8th one. Supply covered under RCM. Sir, it is not correct na sir. Whatever you are telling, nice sir, but it is not correct, it is not fair. Oh, you are talking about fairness. So there is nothing like that called fair, unfair, etc. and all. Law they create and it gets passed in the parliament. When it gets passed in the parliament, everyone should follow that. You like it, follow. Don't like it, leave the country, no problem. You don't like it, you leave the country. This is how the law is. But why are they making? Reason I told you. It does not mean I am blaming the government. You understood? I am just telling you the reason behind this provision. I am just telling you the reason. Okay. You or me, we can't do anything. Someone sitting there in opposition should do something. As they are not doing anything, so that is what the problem here it is. Okay. So what to do? He should know something now. So this 8th point, supply covered under RCM. When my outward supply is covered under RCM, it is actually taxable for payment of GST. Who will pay GST? Recipient will pay GST. But for the supplier, it is treated as exempted supply. So that is why I told you, when my outward supply is covered under RCM, I cannot take ITC on my inward supply. I told you this in the context of an author. Author, outward supply covered under RCM. So author cannot take ITC. That's why author will opt for payment of GST under FCM. Okay. So if my outward supply is under RCM, I cannot take ITC on inward supplies. So that is treated as exempted supply. Then look into 9th point. So up to 8 points you understood. First 3 notified as exempted, nil rated, non-taxable, treated as exempted both for payment of GST as well as for ITC. Next 4 transactions, sale of land, sale of building, sale of securities and sale of warehouse goods under customs, even though not a supply, treated as exempted supply for ITC, and supply covered under RCM, even though taxable, but it is treated as exempted in the hands of the supplier for ITC. Then interest. So far they have taken lot of things from me. Lot of things they have taken. Now they are telling interest is exempted. Interest on loans, advances, deposits is exempted. But you don't treat it as exempted for ITC. You treat it as taxable. So enjoy. You understood? Enjoy. Why? They are giving benefit. Interest generally is what? 1 second here. Yes. So interest generally is what? Taxable or exempted. Interest on loans, advances, deposits is taxable or exempted? Exempted. But they are telling you treat it as taxable for ITC purpose, which means you enjoy the ITC there. So what happens here is that they are looting lot of things from me. But one benefit they are giving. What is that? Interest, enjoy. And one more point, sale of duty credit scrips. Actually it is exempted. Duty credit scrips means what, sir? It is an incentive given under foreign trade policy. So this is like a voucher or a coupon which is given to me under foreign trade policy, which I can use it for payment of customs duty on import, or I can sell it to another importer. Okay. That is known as duty credit scrip. Again, this is also an amendment. Previously it was not there, now they have added. So this sale of duty credit scrip is actually exempted from payment of GST. But for ITC purpose, it is treated as taxable. Now it's like you purchased a biscuit packet and you were about to open it and eat. Government came and took that biscuit packet from you. And they are giving one biscuit, Tommy, catch, like that. What they have taken is this much. And they are giving me interest. Interest is actually a small income. Other of the other income is interest. Correct? And when you are taking sale of land, exempted. Sale of building, exempted. Sale of securities, exempted. Interest income you treat as taxable. And this duty credit script, sale of duty credit script, not applicable to anyone. It is applicable only to importers. Only for small number of people only it will be applicable. There they are giving benefit. Actually, interest income is more for whom? Bank, financial institution, NBFC. But they are giving benefit for them. No. Where really they need to give, there they are not giving. For others. So interest income first of all will not be there for others. Even if it is there, it will be a small component. There they are giving benefit. Okay. So maybe high on weed while drafting. So for bank or NBFC, it is exempted both for payment of GST as well as for ITC. Whereas for others, it is treated as exempted for payment of GST. Whereas for ITC purpose, it will be treated as taxable. Same way, sale of duty credit scripts also, it is actually exempted for payment of GST, but for ITC purpose, it will be treated as taxable. Then 11th point, export of goods or services or supply of goods or service to SEZ. What is it? For payment of GST, what is it? 0 rated, but for ITC purpose, it will be treated as taxable. Okay. Apart from these 11 points, any other activity, if it is taxable for payment of GST, it will be taxable for ITC also. So now, why is it relevant, sir? What is the use of this? Mainly for computation of net GST payable, we will be applying this. Okay. Now, see this. See question number 4, illustration number 4 you see. Before that, can you tell me those 11 points? What are exempted supplies? For ITC purpose alone you tell. Notified as exempted, nil rated, non-taxable, sale of land, sale of building, sale of securities, supply of warehoused goods under customs. This is exempted, correct? This is exempted. Then next 3 additional points. Supply under RCM, interest on loans, advances, deposits, generally exempted, but it should be treated as taxable for ITC. So don't put it under exempted. Even sale of duty credit scripts also generally exempted, but for ITC purpose you put it under taxable. 0 rated supply, whether you pay GST or don't pay GST, for ITC purpose you put it under taxable. Okay. Now see this question, how that will be applied in the questions I am just showing you. Illustration 4. X Limited engaged in consulting services has provided the following services during September 2018. Services to A Limited in Mumbai 4 lakhs. Services to A Limited in Mumbai 4 lakhs. It is within the country. So normal taxable services. Services to B Limited in UK 6 lakhs received in Indian rupees. So actually it is not export of services. Export of services means total 5 conditions should be satisfied. So this will come in place of supply chapter, but now itself I am discussing with you. Please remember, try to remember. What are the 5 conditions? Supplier should be where, if you are exporting service, where the supplier should be in India, where the recipient should be outside India, how the consideration should be in convertible foreign exchange. However, in case of services to Nepal and Bhutan, it can be in Indian rupees. Why? Because we are having a MOU with Nepal and Bhutan, wherein lot of benefits we are giving to Nepal and Bhutan. One of such benefit is that in case of consideration in Indian rupees also, it's okay, we treat it as export of services. And next, place of supply should be outside India. Supplier and recipient are not two establishments of the same person. Head office in India, branch office outside India. It will not become export of service. So tell me what are the 5 conditions here? Supplier should be, recipient should be, place of supply should be, consideration should be convertible foreign exchange, and supplier, and in case of Nepal and Bhutan it can be in Indian rupees, and wherever it is permitted by RBI also it can be in Indian rupees. And then supplier and recipient are not two establishments of the same person. So this is the meaning of export of services. So this information is in place of supply. Check page number 315. Page number 315 in place of supply chapter. This is a newly added topic. So they have added lot of portion for study new syllabus. In that this was not there before, they have added it now. So look into the meaning of export of services. See this in page 315. Can you see that export of services? So what is the meaning of export of services? Supplier should be located in India. Recipient should be outside India. Place of supply should be outside India. And how the consideration should be? Convertible foreign exchange except for services to Nepal and Bhutan as notified by RBI. And supplier and recipient are not merely two establishments of the same person. If all these 5 conditions are satisfied, then only it will be export of service. Otherwise, it is not export of service. Then, look into the meaning of export of goods. What is the meaning of export of goods? Simple. Taking goods from India to a place outside India. Consideration, all these things irrelevant. Okay. What is the meaning of export of goods? Taking goods out of India to a place outside India. Is foreign exchange necessary or not necessary? Not necessary to call it as export of goods. Understood pa? So why is this we are discussing? Generally there is a meaning of zero rated supply. What is the meaning of zero rated supply? Export of goods or services, supply of goods or services to SEZ. So what is the meaning of export of goods and export of service is what we have seen here. Export of goods means what? Taking goods from India to a place outside India, full stop, that's it. Whereas in case of export of services, all the 5 conditions should be satisfied. Now, come back to this question. So what is the page number here? So in this, look into first point, services to A Limited in Mumbai. Is it export of service? No. So it is a normal taxable service. Services to B Limited in UK means recipient outside India, but received in Indian rupees. Is it export of service? No. Why it is not export of service? Because consideration is in Indian rupees. Third, services to C Limited in Nepal, 3 lakhs received in US dollars. Yes. Nepal, it can be Indian rupees or it can be in foreign currency. It is export of service. Then services to D Limited in Bhutan, 2 lakhs received in rupees. Yes, Nepal and Bhutan consideration can be in Indian rupees or in foreign currency. So it is export of service. 5. Other exempted services to E Limited in Chennai, 6 lakhs. Now during the month, they received inward supplies with respect to inputs and input services worth 10 lakhs, excluding GST 12%. Applicable rate of GST to X Limited is 18%. Compute net GST payable. Now, wherever applicable, they opted for export of service without payment of GST under bond or LUT. Option 1 or option 2? Option 2. Option 1 is pay IGST and get refund of IGST. Option 2 is don't pay any IGST, get refund of ITC with respect to inputs and input services. Okay. So now they are going for export without payment of IGST. Now, whenever you see a question like this related to computation of net GST payable, first you need to prepare a working note. It's already there, but I am just telling you what is that we need to do. First we need to prepare a working note. In that working note, you need to make the same table how we have learnt. What is that? Particulars, value for payment of GST, for payment of GST and for computation of ITC. Like that, we have to prepare one table. It's already there in the book. Okay, it's already there in the book. So please see, one working note we need to prepare. Particulars, value for payment of GST, for availment of ITC. Like that, one working note we need to prepare. Transaction wise, we need to update first so that we get a clarity. What is the first transaction? Services to A Limited. How much is the value? But whatever is there in the question, you read and tell enough. What is the value? 4 lakhs. Now, they have not given it as exempted. It is not even export. So, normal taxable. Means, are we required to pay GST on this? Yes. How much GST we need to pay? Check the question. How much GST we need to pay? 18%. And for ITC purpose, where it will come? If anything is taxable for payment of GST, it will be taxable for ITC, except few cases we discuss 11 points. Whether it comes anywhere in the 11 points? No. So therefore, it will be taxable for ITC. Then next one, services to B Limited. Services to B Limited. So what is that services to B Limited? Is it export of services? No. No, because we are getting consideration in Indian rupees. What is the value? 6 lakhs. This is also taxable and we need to pay GST. Even for ITC purpose, it will be treated as taxable. Then next, services to C Limited in Nepal. How much is the amount? 3 lakhs. And this 3 lakhs will come under export of services. Correct? So therefore, 0 rated. Are we paying GST or we are not paying GST? Not paying GST, but for ITC purpose it will be treated as taxable. And next, services to D Limited. Services to D Limited. What is the value? 2 lakhs and it is actually export of services, 0 rated, because it is to Bhutan. Even though in Indian rupees it will be coming under 0 rated. And as it is 0 rated, pay GST or don't pay GST? Don't pay GST, but for ITC purpose it will be treated as taxable. Then services to E Limited. Services to E Limited, what is the value? 6 lakhs. For payment of GST, what it is? Exempted. Question itself it is given, exempted. So we don't have to pay GST. And for ITC purpose also, if it is notified as exempted, for ITC purpose also it will be exempted. It's the first point, correct? Notified as exempted. It is exempted for payment of GST even for ITC purpose. Now you need to prepare this table. Once you prepare this table, from this you need to know for ITC, for computation of ITC, for computation of ITC, what is your taxable turnover and what is your exempted turnover and what is your total turnover. You need to know these 3 numbers. So first step is what here? First you need to know the working note. Working note, you prepare a table. Thereafter, you need to know step 2 for computation of ITC. What is the taxable turnover? What is the exempted turnover and what is the total turnover? In this, see the last column for ITC, for computation of ITC we are discussing. So wherever we have taxable, that you take total. So 4 lakhs plus 6 lakhs plus 3 lakhs plus 2 lakhs. How much? 15 lakhs is taxable turnover. What is exempted turnover? 6 lakhs is exempted turnover, the remaining. Okay. So what is the total turnover? 21 lakhs. This we got. Next, what is the eligible ITC? Eligible ITC. How will you get eligible ITC? Total ITC into taxable divided by total. So, total ITC into taxable turnover divided by total turnover. So, what is the total ITC? Check the question. So, 10 lakhs excluding GST 12% means how much? 1 lakh 20,000 into numerator taxable turnover 15, total turnover 15 by 21, 1 lakh 20 into 15 by 21, how much? 50, exactly 85,000. 714, 85,714 is the eligible ITC. Now, first step working note, second step turnovers, taxable exempted total, third step computation of eligible ITC, fourth step computation of net GST payable. So, what is the net GST payable? What is the net GST payable? First, what is the gross GST payable? What are the taxable things here? Only two. First two only taxable. For payment of GST, now we are paying GST pass. So, you see the column for payment of GST. What are taxable and we are paying GST? 4 lakhs and 6 lakhs, correct? And what is the rate of GST? 18%. So, 10 lakhs into 18% minus how much ITC we have? 85,714. So, that will be net GST payable. How much? 94,286. This is the final answer. You understood how to arrive? So, first we need to take this working note. Then we got how much is taxable, how much is exempted, total. Then we are taking the ITC computation. ITC 1 lakh 20 minus ITC with respect to exempted supply, it is reduced. So, 85,714, but directly also you can calculate. How directly you can calculate? Either this way you can calculate or directly also you can calculate. How directly? You just write down 1,20,000 into what by what? 15 divided by 21. 15 divided by 21. Then also you will get 85,714. Okay. Now, what is your liability? 1 lakh 80 is your liability and 85,714. So, net liability will be 94,286. This is the answer. Now, same question they can also ask, what will be your answer if they are exporting on payment of IGST? Then everything same, just the liability alone it will change. So, two options we have now, export upon payment of IGST or without payment of IGST. Here it is without payment of IGST, so we got 94,286. What if it is upon payment of IGST? So, then on 4 lakhs, 6 lakhs, 3 lakhs and 2 lakhs, on everything we will pay GST. Export also we pay GST. So, 4 plus 6 plus 3 plus 2, 15 lakhs into 18%. What is 15 lakhs into 18%? 2 lakh 70. From 2 lakh 70 same ITC. ITC no change. 85,714. So, you will get 1,84,286. This is, suppose if they give in the question, they are making export upon payment of IGST. Suppose in the question they are telling without payment of IGST, this will be the answer. Clear here? Now, look into one more question on this. Illustration 5. ABC Traders has made taxable outward supplies of 20 lakhs, GST at 12% and exempted outward supply of 10 lakhs, comprising of interest income 4 lakhs and other exempted supply 6 lakhs during July 2018. Their inward supply for the month is 10 lakhs, excluding GST at 10%. Compute the net GST payable. First step, working note. What is that? Transaction, value, for payment of GST, for availment of ITC. What is the first thing given? Clearly given, taxable outward supplies. How much? 20 lakhs. So for payment of GST it will be taxable. For ITC also it will be taxable. How much is the GST? 20 lakhs into 12%, 2 lakh 40,000. Then second, and exempted outward supply 10 lakh comprising of interest income. Interest income for payment of GST exempted. For computation of ITC it will be taxable. In case of other than bank, financial institution or NBFC, here it is ABC traders, other than bank, etc. That's why even though it is exempted for payment of GST, for ITC purpose it will be treated as taxable. Then other exempted supplies 6 lakhs. Other exempted supplies 6 lakhs. For payment of GST it will be exempted. But for ITC also it will be exempted. Notified as exempted, for ITC also exempted. Now from this you need to get what is your taxable turnover, what is your exempted turnover and total turnover for ITC purpose. For ITC purpose, last column, what is your taxable turnover? 20 lakhs. 20 lakhs is your taxable turnover. 20 plus 4, 24 lakhs is your taxable turnover. What is your exempted turnover? 6 lakhs. What is your total turnover? 30 lakhs. Now, how much is the ITC available? What is their inward supply? 10 lakhs. 10 lakhs into 10%, 1 lakh. So, directly also we will be able to calculate ITC. How? So, 1 lakh into what by what? 24 divided by 30. What is 1 lakh into 24 divided by 30? 80,000. Now, what is your liability? 2 lakh 40. 2 lakh 40 liability. How much ITC available? 80. So, 2 lakh 40 minus 80, 1 lakh 60 is the net GST payable. Understood here? So, this is the usual type of questions which we will be getting on computation of net ITC, where this exempted supplies will be connected. Okay. Then next, for a bank, whether this facility is possible, this illustration 5 what we have discussed, is it possible for a bank? No. For a bank, interest income will be exempted for payment of GST. Even for ITC purpose also it will be treated as exempted. So, proportionately we need to compute the ITC. However, for a bank, financial institution or NBFC, there is an option available to them. Rather than doing this proportionate computation, they can take flat 50% as the eligible ITC. That is an option available to the bank. You understood? For a bank, financial institution or NBFC, they need to calculate proportionate ITC and compute the net GST payable. Whereas they have another option. What is that another option? Rather than doing proportionate computation like this, flat 50% will be reversed. Means flat 50% will be exempted. So, remaining 50% they can take ITC. What is the assumption here? 50% of their outward supply is taxable, 50% of their outward supply is exempted. Sir, is this facility available only for bank, financial institution, NBFC or others? Only for bank, only for banking sector, not for other sectors. Now, we will see question number 6 for a banking sector, and we will also compare it with that 50% option. Okay. So, see this question. Question number 6, illustration 6. HDFC Bank registered in Chennai, Tamil Nadu has earned 20 lakhs as interest income, 8 lakhs as commission and 4 lakhs as other charges during March 2018. Applicable rate of GST is 18%. During the month, they have received common inward supplies worth rupees 6 lakhs excluding GST at 18%. Compute the net GST payable. First, we will prepare a working note. What is the first one? Interest income. What is the interest income here? 20 lakhs. So, that is exempted for payment of GST. Even it is exempted for ITC, not taxable here. This is bank here. So, for a bank, if it is exempted for payment of GST, even it will be exempted for ITC also. So, therefore, 20 lakhs is exempted in both the places. Then, what is the taxable income? 8 lakhs commission, 4 lakhs other. So therefore 12 lakhs. That 12 lakhs for payment of GST it will be taxable. Even for ITC purpose also it will be taxable. Now first we need to see what is the proportionate ITC available. What is the proportionate ITC available? How much is their inward supplies? 6 lakhs into 18%. 6 lakhs into 18% into what by what they can take ITC? 1,08,000 into what by what? Taxable by total. What is taxable for ITC purpose? 12 divided by total 32. 1,08,000 into 12 by 32. How much? 40,000. 40,500 is the eligible ITC. Understood? Step 1 working note. Step 2 turnover. What is the taxable turnover, exempted turnover, total turnover for ITC? Taxable turnover 12 lakhs, exempted turnover 20 lakhs, total turnover 32 lakhs. Now eligible ITC. How much is the eligible ITC? Total ITC 1,08,000 into 12 by 32 40,500. So 40,500 is the eligible ITC. What is their liability? 2,16,000. How liability 2,16,000? 12 lakhs into 18%, 2,16,000. From 2,16,000 you reduce 40,500. So net liability 1,75,500. This is based on which method? Proportionate ITC method. Alternatively, they have a 50% ITC method. What is it? 50% ITC method. How much is the total ITC for them? 1,08,000. Flat 50% they will get. What is flat 50%? 1,08,000 into 50% is what? 54,000. How we got 54,000? 1,08,000 into 50%. Now 54,000, if you reduce from 2,16,000, what is the net liability? 1,62,000. Now they can choose between either method 1, proportionate ITC method, or method 2, ad hoc ITC method, that is 50% ITC method. But they should choose this option in the beginning of the financial year. That will be applicable throughout the financial year. Means they need to forecast how much could be their interest income, how much could be their other income, and they need to decide this option. Understood, pa? So this option I have given in 17 subsection 4. Next page you can see. Special provision for availment of ITC by a banking company. What they can do? Either option 1, that is proportionate ITC option, or option 2, 50% of the eligible ITC. They can decide between these two options. But when they need to decide, say this: option 1's exercise cannot be withdrawn during remaining part of the financial year. Understood? Then there is one illustration number 7. This is actually related to exemptions. So we will complete transportation sector related exemptions and again come back and solve this question. Okay. So just fold the page and keep, and come back to page number 133. Now we understood how these exempted supplies will be tested. Yes. Now have a look into note 2. So far we have completed. We have some special points. Look into note 2. Page number 133, look into note 2. Listen, I am a manufacturer. I made purchase of some inputs, input services and capital goods. I am a manufacturer. I have some inputs, input services and capital goods. And I made sale of some finished goods. And this finished goods is disposed as gifts or free samples. I did not sell. I have disposed it as gifts or free samples. You tell me, is it supply or not a supply? Why not a supply? Huh? Disposal of business asset on which ITC avail. What I am disposing of? Finished goods. But what ITC I have availed on? Inputs, input service and capital goods. So it will not come under disposal of business asset. it will not come under related party, it will not come under principal agent. So 7(1)(c) will not come, 7(1)(a) will not come because there is no consideration. Consequently, it is not a supply. Again I am repeating, I am purchasing raw material and I make shampoo. That shampoo I gave as free sample. Now what is my business asset which I have disposed of? Shampoo. But I have availed ITC on the raw material. So disposal of business asset on which ITC availed. What is that business asset I disposed of? Is shampoo. On that I did not avail ITC because I manufactured that. Suppose if the raw material which I purchased, if I dispose it off, then it will come under disposal of business asset on which ITC availed. So here it is not a supply. As it is not a supply, they are telling you reverse the proportionate ITC. You reverse the proportionate ITC related to this, that is as per CBIC circular. Now you write down the numbers here itself. So we have made purchase of inputs. On that inputs, 1 lakh is the ITC, and on input services 90,000 is the ITC, and on capital goods 1,60,000 is the ITC. Okay, we have made some inputs, input service and capital goods. On inputs 1 lakh is the ITC, on input service 90,000 is the ITC, on capital goods 1,60,000 is the ITC. Now using these three we made some finished goods. And what is the value of these finished goods? The value of these finished goods is 20 lakhs. The value of these finished goods is 20 lakhs. Out of this 20 lakhs worth of finished goods, how much we have disposed as gifts or free samples? 2 lakhs worth of finished goods we disposed as gifts or free samples. Sir, using these three inputs, input service and capital goods, I made finished goods. The value of that finished goods is 20 lakhs. Out of this 20 lakhs, 2 lakhs worth of finished goods I disposed as gifts or free samples. Now tell me, what is the eligible ITC? Out of this, what is the eligible ITC? Right there, what is the eligible ITC? What is the total ITC? 3 lakhs. 3,50,000 into 3,50,000 into, to what extent I will get ITC? 18 lakhs, that is taxable turnover divided by total turnover. Out of this 20 lakhs, what is taxable turnover? 18 lakhs. What is the total turnover? 20 lakhs. So the 2 lakhs should be treated as exempted turnover. So how much is the eligible ITC? 3,15,000, means literally 10% of my finished goods I gave as gifts or free samples. So out of ITC also 10% I cannot take. What is 10% of the ITC? 35,000 I cannot take. So balance 3,15,000 only I can take as ITC. Got the clarity? So that percentage of finished goods if I give as gifts or free samples, to the proportionate I cannot take ITC on my inward supplies. Then next point, say this, I am a supplier and I am making supply of a product, plus I purchased one product which I am giving as a gift or quantity discount along with this product. Example, if you buy coffee powder mug free, you would have seen Nescafe, Kinder Joy also I told you. So if you buy one product, you will get some other product as free. Now you just take that example of Kinder Joy. Okay, in that Kinder Joy, write down, in that Kinder Joy, what are the two products involved? Chocolate and toy. Chocolate and toy. Now these two should be treated as what? Composite supply. I told you already. So this should be treated as composite supply. So when we treat it as composite supply, even though this toy is free, this will be treated as composite supply. Now the question is, they are purchasing the toy. You understood? They are making chocolate and the toy is given free. This should be treated as a composite supply. Now they purchased a toy. On the toy purchase, can they take ITC? Yes. They can take ITC on the toy purchase. Why? Because that toy is not just given free, it is coupled with along with another product. So that will become a supply. So we can take ITC on this toy purchased. Is it clear here? So generally, if the goods are purchased and distributed as gifts or free samples, we cannot take ITC. However, when we distribute it as gifts or free samples and that becomes supply, we can take ITC on our inward supply. Understood the second point? What is the first point we have seen? If I buy the raw material, input service and capital goods, and if I make finished goods, out of that finished goods, how much ever extent is distributed as gifts or free samples, proportionate to that ITC I cannot take, and I need to take only the remaining ITC. Second point, I am purchasing one product, adding that product along with another product, and I am giving it as a composite supply. Now on that purchased product, I can take ITC. Then another example. There is a trader who is giving some, and at the time of purchase of inward supplies, he availed the ITC. For example, there is a trader who is purchasing a sugar packet, and at the time of purchase of sugar packet, GST paid, he has taken as ITC, because you don't know that he will be giving it as gift or free sample. So he availed ITC. Now what he did, he gave the sugar packet as free to their customer. So who purchased for more than 500 rupees, they gave the sugar packet as free. Sugar packet free to customer who purchased for greater than 500 rupees. So many times in supermarkets we see these offers. You buy for this much, you will get one product free, like that and all. Then in that case, what is the treatment? Simple. The sugar packet also you treat it as supply. Why? Disposal of business asset on which ITC is availed. They purchased is there a business asset? Because inventory is their business asset on which ITC availed. Yes. Now they are giving it as free. Even though they are giving it as free, it will become supply. Why? 7(1)(c), disposal of business asset on which ITC is availed. So should we pay GST on the sugar packet? Yes. Clear pa? Then this point already we discussed. Supply of warehoused goods under customs. Even though it is not a supply, now they are adding it under the exempted supply. So proportionate ITC not available. Then look into that banking sector. Already we discussed for this banking sector NBFC two options. What is option 1 pa? They will avail proportionate ITC. What is option 2? They will avail 50% of the eligible ITC. Now see this. If they have inward supply from a distinct person, restriction of 50% shall not apply with respect to inward supplies from a distinct person within the same entity. What does it mean? HDFC Bank, Karnataka, receives services from HDFC Bank, Tamil Nadu. These two banks are distinct persons, both belong to the same bank, branch in Tamil Nadu, branch in Karnataka. Now in that case, should they do 50% portion? No, full 100% they can take as ITC. Is it clear? Restriction of 50% shall not apply to tax paid on supplies made to another registration within the same entity. And one more difference is also, but proportionate ITC if they do, whether they will take proportionate ITC, yes. This point is not applicable for proportionate ITC, this is for 50% ITC. One more difference, that is in proportionate ITC, if inward supplies is used for exempted, you will not take. If inward supply used for taxable, you will take fully. If inward supplies are partly for taxable, partly for exempted, you will take proportionate, correct? Where in proportionate. But in this 50% option, inward supply used for taxable, inward supply used for exempted, inward supply used for both taxable and exempted, everything treated as common, in everything there will be 50%. Okay. So, ineligible ITC is ITC with respect to non-business or blocked ITC. So, this illustration alone you please make note. Please write down in your book. Illustration on section 17.4. This 17.4 is related to bank NBFC. Write down, compute eligible ITC, compute eligible ITC of HDFC Bank based on the following inward supplies. Based on the following inward supplies. Number 1, inward supplies used for exempted outward, exempted outward 1 lakh excluding 12% GST. So, even though outward supply is exempted, but you are using some, you are purchasing inward supply, on that inward supply there will be GST, na? Sir, your sales may be exempted, sir, but your purchases need not be exempted. So, here you are making purchase of 1 lakh, you are using that 1 lakh purchases for what purpose? Making exempted. On that 1 lakh you have paid GST of 12%. Then number 2, inward supplies used for taxable outward, inward supply used for taxable outward, that is 50,000 excluding 18% GST. Then inward supplies used for both taxable and exempted outward, both taxable and exempted outward, that is 1,50,000 excluding 12% GST. Now, compute eligible ITC under both the options. Compute eligible ITC under both the options. Tell me, first option, what is the eligible ITC under first option? So, for that, what is it you need? Turnover, correct? So, taxable turnover 60 lakhs, exempted turnover 40 lakhs. Okay, try. Say this. Option 1. What is option 1? Proportionate ITC. You know what we will do in proportionate ITC? First, inward supply used for exempted. First case, we will not take the ITC at all. So 0 plus inward supply used for taxable. Full ITC we will take. What is that full ITC? 50,000 into 18% fully we will take. Then inward supply used for both taxable and exempted, proportionate we will take. What is that? 1,50,000 into, what is that rate? 12% into taxable divided by total. What is taxable divided by total? 60 divided by 100. That much we will take. So please see the answer. 50,000 into 18% is how much? 9,000. Then 1,50,000 into 12% into 60 by 100 plus 9,000. 19,800. You understood, everyone? So inward supply used for exempted outward supply we will not take, 0. Inward supply used for taxable outward supply fully we will take. Inward supply used for both taxable and exempted, proportionate we will take. Whereas option 2, what is option 2? Ad hoc ITC. In ad hoc ITC we will not divide like this. All credit into 50%. All credits into 50%. So what is the first case? 1 lakh into 12%. 1 lakh into 12% plus 50,000 into 18% plus 1,50,000 into 12%. Okay. Overall into 50%. So inward supply used for exempted also 50%. Inward supply used for taxable outward supply also 50%. Inward supply used commonly for taxable and exempted also 50%. So how much? 12,000 plus 9,000 plus 27,000 into 50%. How much? 19,500. Understood the difference here? In case of proportionate ITC, inward supply used for exempted we will not take. Inward supply used for taxable we will take fully. Inward supplies which are common we will take proportionate. But in case of ad hoc ITC we will not divide like that. Everything we will take into 50%. Done? Now there is one question. This you take for practice. This Axis Bank provides, already for banking sector we have seen, same way. You try this question. Okay. And the next area that we have is blocked ITC. So look into page number 137. Blocked credits. Basically blocked credits means there are some inward supplies on which you cannot take ITC. That is called as block credits. These blocked credits are divided into 3. Motor vehicle related blocked credits, and then construction related block credit and other block credits. First, now we will try to complete motor vehicle related block credit. Please see this. Motor vehicle related block credit. Motor vehicles are divided into 3. Motor vehicles for transportation of persons, vessels and aircrafts, and other motor vehicles. What will come under motor vehicles for transportation of persons? 2-wheelers, 4-wheelers, bus, then cars, that will be coming under for transportation of persons. Vessels and aircrafts, needless to say, ship, aircraft will come. Others means truck, road roller, JCB, then crane, that will come under others. In case of other motor vehicles, there is no restriction, ITC always available. So motor vehicles divided into 3. motor vehicles used for transportation of persons, vessels and aircrafts, and other motor vehicles. Other motor vehicles ITC always available, that is truck, lorry, ambulance, etc. Then motor vehicles for transportation of persons divided into two. Capacity does not exceed 13 including driver. Capacity exceeds 13. What is capacity exceed 13 means? Bus. So in case of capacity exceed 13, it's not a block credit, ITC always available. Example, stage carriage, contract carriage, tempo travelers, etc. and all, ITC available. Whereas capacity does not exceed 13 including driver seat, okay. Capacity does not exceed 13 is blocked credit, but 3 exceptions are there where ITC available. Further supply, example, I am an automobile dealer, car dealer. I am buying the car and I am selling the car. Basically, car is a motor vehicle for transportation of persons. Capacity does not exceed 13. It's a block credit. But as I am using it for further supply, I can take ITC. Second, used in the business of transportation of passengers. So, I am into travel business. I buy a car and I am using it for Ola, Uber, etc. travels. Can I take ITC? Yes. Driving schools. I am purchasing the vehicle and using for imparting driving. Can I take ITC? Yes. So, there are 3 exceptions. What are the 3 exceptions? Further supply, used in the business of transportation of passengers, driving school. Then, suppose if it is other cases, ITC not available, it's a block credit. For vessels and aircraft also, it's a block credit, but these 3 exceptions, plus in addition one more exception is there, used for transportation of goods. So, what are the 4 exceptions for vessels and aircrafts? Further supply, used in the business of transportation of passengers, imparting driving skills or driving school, then used for transportation of goods. Now, listen, few questions we will see. I am a chartered accountant and I purchased a car for use in my profession. Can I take ITC on the car purchased? Now, why I cannot take ITC on the car purchased? First, car will come under motor vehicle for transportation of persons and capacity does not exceed 13. And is it covered under exception? Am I using for further supply? Am I using it in the business of transportation of passengers? Am I imparting driving skills? No. So, therefore, ITC is not available to me. You got it? Then, another example, a company purchased a flight aircraft for transporting its director. Can they take ITC on the aircraft purchased? Why? Aircraft not under further supply, not in the business of transportation of passengers, not for imparting driving skills and not for transportation of goods. ITC not available. Suppose if Indigo Airlines purchased the aircraft for transporting the passengers, can they take ITC on the aircraft purchased? Yes, because it is used for transportation of passengers. Then there is a courier company which purchased the aircraft for transporting the courier parcels. Can they take ITC? Yes, for transportation of goods. Clear here? So now what is that you need to remember? Motor vehicles divided into 3. Motor vehicles for transportation of persons, vessels and aircrafts, other motor vehicles. What is the treatment of other motor vehicles? ITC always available. Motor vehicle for transportation of persons divided into 2. Capacity does not exceed 13, capacity exceed 13. Capacity exceed 13, what is the answer? ITC available. Capacity does not exceed 13, blocked credit. But 3 exceptions, ITC available. What are they? Further supply, used in the business of transportation of passengers, imparting driving skills, that is driving schools. Then vessels and aircrafts generally block credit, but 4 exceptions are there. Further supply, used in the business of transportation of passengers, driving schools, used for transportation of goods. Then second part related to motor vehicle is that we are receiving 4 services in relation to motor vehicle. If the motor vehicle is eligible for ITC, on these 4 services also GST paid can be taken as ITC. If the motor vehicle purchased is not eligible for ITC, these 4 services also ITC cannot be availed. example, listen. There is a company which purchased a bus for transporting its employees. On that bus, they received general insurance service. Can they take ITC on the insurance service? First, if the bus purchased, can they take ITC? Yes, because bus will come under capacity greater than 13, eligible for ITC. So, as bus purchased is eligible for ITC, on that bus, general insurance service received is also eligible for ITC. Then, a chartered accountant purchased a car and he gave that car for servicing, and on that servicing GST paid can be taken as ITC? No. If the car purchased, is the car purchased eligible for ITC? No, it's a block credit. So, therefore, repair and maintenance or insurance or servicing with respect to that car is also not eligible for ITC. Then, there is a company which purchased a car and given it to their employees for transportation. Now, for that car they received repairs and maintenance service. Can they take ITC? No. Why they cannot take ITC? If the car purchased by the company, they cannot take ITC. So, repair and maintenance of the car also not eligible for ITC. One more example. If there is a company which purchased the aircraft for transportation of goods, and for that aircraft, rather than buying the aircraft, they are taking the aircraft on rent. Can they take ITC? Yes. As the aircraft purchased is eligible for ITC, instead of buying the aircraft, if they take the aircraft on rent, that is also eligible for ITC. So, what are the 4 services, pa? Repairs and maintenance, insurance, servicing, and hiring, renting or leasing of motor vehicles. If such motor vehicle, vessel or aircraft is eligible for ITC, these 4 services also eligible for ITC. If the motor vehicle, vessels and aircrafts not eligible for ITC, on these 4 services also we cannot take ITC. Now, look into few key points. While determining the capacity, driver seat should be included. So, here 13 is including driver. And then further supply. What is the meaning of further supply? Either sale or renting. For example, I purchased a car and I gave the car on rental. Now, can I take ITC? Yes, because supply means not only sale but also renting. So, I can take ITC. Then repairs, insurance and servicing of motor vehicles received by a general insurance company is always eligible for ITC. What does it mean? You purchased a car. On that car you have taken bumper to bumper insurance, and that car met with an accident. When you take it to the service center will not charge 1 rupee also to you. They will raise bill to the insurance company. Why? Because this car is covered under insurance. So, they will raise bill to the insurance company, and the insurance company will take ITC with respect to repairs and maintenance service. There is no restriction for the insurance company. So, repairs, insurance and servicing of motor vehicles received by a general insurance company always eligible for ITC. Then, hiring, renting and leasing of motor vehicles as a statutory obligation by employer to employee is also eligible for ITC. For example, Tamil Nadu government order has mandated the BPOs and companies which are working in the night shifts to mandatorily provide cab facility to the employees. So, they have taken rent-a-cab services. Can they take ITC? Generally, rent-a-cab service not eligible for ITC, because if the car purchased, it is not eligible for ITC. So, car taken on rent also not eligible for ITC. However, as they are taking this rental for what purpose? Statutory obligation. So, they can take ITC with respect to this. Then, ambulance and caravan are not treated as motor vehicles for transportation of persons. It will come under other motor vehicles. Why, sir? Because ambulance is basically used for not transportation of passenger, to provide the first aid during the travel. So, it will not come under transportation of person. Same way caravan, which is used by the actors for the purpose of stay or changing their dress, etc. So, in the shooting spots. So, these caravans basically not for transportation, it is like short term accommodation. In the shooting spots where they do not have proper infrastructure to stay, they use the caravans. So, this is coming under other motor vehicles. So, ITC available. Clear here? So this is about motor vehicle related blocked credits. Then we'll take leave today, and tomorrow we will continue with the remaining portion. Okay, construction related block credit and other block credits. Thank you. And 1 minute, please. Tomorrow we will be completing input tax credit, and I'll be starting with exemptions, because the next area is exemptions. And then I wanted to go to place of supply, because we are left with only 2 days. So I want to complete place of supply, and then TDS, TCS, accounts and records, and then we will see the other topics. Okay, thank you.